May 15th, we're going to be streaming options, stocks, futures, trading, all of it. Looking at some technical analysis, following some runners. Get set up here. Sub up, like up, comment down. Happy money sticks around. Got a little morning yaz for you.
The ego on you.
Happy Money Monday. Fire Marshal Bill, thank you for the gifted sub. Who were you trying to snipe? Tasty. Well done, sir. You've been sniped by the ace. Call him ace because he was an ace in World War II. Sniping him. Plow, plow, plow. Morning, guys. Hope you had a good weekend. Passing Cloud. Tasty. Fire Marshal. Buzzing. Got him. Morning, Cash. Morning, Towel. Morning, Lords. Barbecue's up pre-market. Let's see if it still is. Yeah, up 5%, 5.8. So that gap fill might have been it. Might have just gap filled and then ripped. Could be some consolidating, but I think our longer term momentum's still up on the old barbecue. Like daily charts. Morning, Hugh. I went long on NatGas futures. Let's see, Sunday. Yeah, Sunday. So I'm up on those, which is nice. It was like here, picked up. I just started scaling into them, and then I woke up and picked up another one. But that was maybe not a good idea. But yeah, NatGas looks like it's probably gonna make some moves here. Got a little inverted head and shoulders on the UNG. Oh, I couldn't draw straight lines on my phone with my finger. I just for some reason did that. But yeah, head, shoulder, shoulder. Then you also have kind of this RSI divergence. And then Friday we made that bullish MACD. Of course, it's been bullish, but we have that green over the 9 moving average as well as this volume. So good signs of buying pressure coming in on UNG. So we'll see where it heads to. If we make it up to, I don't know, $7 in UNG, or I don't know why 753 is a price target for me. Yeah, I'm not sure how long the rally will last, or how high it'll go, or when it'll go, but momentum is up for now. Being that it is summer, unless if there's some kind of crazy crisis, I don't think it's just going to go crazy, but yeah. Don't know. I could see a move at least up to these levels here. We're already at, I guess, 685 pre-market, so yeah, barbecue's up. Yeah, it's up 5 in the German market. The Germans. IEP's up 1 pre-market. We had some Fed speakers today, I think. We got any data this morning. Manufacturing survey, yeah. Manufacturing was at 8:30, so the market actually kind of sold off since then. Came out like right here, but it was kind of gapping up anyway. So tomorrow we have retail sales, industrial production, not a whole lot. Housing starts on Wednesday, and then jobless claims on Thursday, which could be a mover. Yeah. Morning, Hugh. What dates got pushed back? They have a new filing? Boron? Is that a ticker? What is that? Yeah, I'll put in some new levels here. Still kind of trading in this range. I think this week, hoping we get a decider and we don't just keep chopping around in this range, but it's not been too bad. It's been some pretty good trading environments, really. But to hold overnight to get those bigger swing trade moves, it's got to decide a direction, breaking out of this channel we've been stuck in. Is what I'm looking for. A multi 3-4 day breakout move. We'll just do something like that. So I ended up on Friday, I actually was able to recoup almost all my losses from over trading this to the downside. Just from this move up here, we got that RSI divergence in the 5-minute, and I went long. And yeah, I actually had to take off, but I just put a sell order at VWAP on the futures, and it basically hit right at VWAP on the futures, which is above the VWAP on the SPY here. But this was, yeah, so Only down a little bit from Friday, which is nice. Boron Energy, LNDNF, this one. Any stock? Morning, Mo Lava. Morning, Mr. Style. Our pre-market stuff. We've got GSIT. Wait, hold on. NGMS. Top of the leaderboards for the pre-market. NXU. LMFA is up there. We've traded that one before. WISA is up there too. Oh, the LMFA. This is lithium, I think, right? Earnings, well done. Well done. WISA's also up. Oh, they're gonna acquire Comb Hair. Home here? Home here? What is this? Wait, wireless technology? This is like the 4th or 5th one we've seen where the acquiring company has been ripping on it. So I don't know if it's just the market season we're in, or the terms of these deals have been favorable, so it's been bullish for the stock that's taking the other company, or I just had it wrong and the company that buys another company is, it's usually just good, bullish. I don't know. Makes me want to get some calls on GME though. I mean, they've talked about acquiring and they have a bunch of cash. Seems like might be a bullish catalyst. Got 5.8% on barbecue. Was the Gemins. OMH. One of those, yeah, pre-market gappers, 24%. Yeah. Oh, that daily chart looks pretty nice. Wow. This was a Chinese IPO. What do you know? Singapore. It's good. Therapeutics is up. Yeah, OMH I see on here. Mind. Is this... isn't Mind Med. This is different. Yeah, that's MNMND. Yeah, I've always heard it's bearish too, and that's what I've seen also. That, you know, it's like investors are weary of taking on a lot of new liability, a lot of new potential debt. But yeah, so far, all the ones I've seen on the last couple of weeks have been bullish. So that maybe it's just the terms. They like the terms. They think it's a good deal or something. I don't know. So I might keep kind of doing my trades on barbecue like I've been doing. Selling on the high of the day, buying on the low, and just doing it over and over the next day. It kind of just keeps grinding up, stair stepping, and we can't keep. I want exposure overnight, but I also want to take profits during the day because the intraday moves are huge. So. $195 on pre-market. You get pre-market on E-Trade? Let's see. Oh, that is interesting. I don't think that's right, though. That was after hours. Maybe there was a transaction up there after hours on Friday. They gave it that 195. I don't think this is pre-market though. This does say at 917. What? Wouldn't it correlate with the German market? Howdy, very good today. So you increase your shares, no trades, just the totals. When I'm trading. That is interesting. I'm curious where we open now. Is Fidelity down? Just drawing some levels there on net gas. Probably take profits at some point today. Maybe that 24 level. I didn't get, there were 2 contracts I was trying to get filled yesterday that never filled, so I'm left with 4, which isn't bad. One of those I picked up this morning. But that move on that gas, this is why don't get greedy, stick to your stop losses. Had a nice lesson on that a few months ago on that gas. We actually got this bottom pretty good. Went long somewhere around here, like scaled up quickly. By here I was at like 8 contracts of the minis, so it's big moves. Then it kind of kept ripping, and you know, I thought we were gonna just go. And this, I don't know if this was news or what it was, but basically gapped down and it was almost at my cost basis. And I was like, what? There wasn't really news, so I figured we'd keep going. Needless to say, at this point I was up 8 grand on these contracts. Came down here and I was almost break even. And then it did this. And then by this point, it actually, the contracts expired, which isn't a huge deal. I could have just gotten back into them. It's not like there's theta decay in futures or anything, which is nice, but just emotionally it was, you know, it was a $16,000 swing, which sucked. And yeah, I just stuck with my stop loss, and I had saw the gains and I didn't, and it went away. I was like, oh, I want them back. So that really screwed my futures account. Well, here we are again. Invert head and shoulders. Like I showed this morning, volume, bullish MACD, green of the 9. I think we could have a little move up here, but taking profits, not being greedy. I was looking for a moonshot to get back to positive on my futures for the year. And yeah, but patience has played, because I haven't lost anything through all this chop, which, yeah, there's some ups and downs, but it's a lot of chop it's been for like 2 months, 3 months. No, not even, sorry, like a month. No. Check the old barbecue. Yeah, it's alright, it's saying plus 10% on E-Trade. So it is changing. Wouldn't these line up though? Because European market stays open until 11:30 our time. Not sure why those wouldn't line up. You probably, I know, it's so strange. Is Fidelity down for any of you guys? It's giving me a 403 error, which is stupid. Yeah, I'm actually getting an error. A proper error trying to open Fidelity. I'll top through Friday due to being all work. Uh-oh. You bought top Friday? Oh. You were trying to dip buy, or why were you buying this? This is one of the ones that you just have to wait on. Wait on the momentum. It might never come back, but if it does, you know, you can just have it on your watch list and be prepared. Not one I'd be like trying to dip buy. At least my strategy. Suspended, it's, I don't know, let's see. Not seeing anything on it. It's a sketchy Chinese stock, so who knows, maybe it's getting delisted. Probably mobile works. Is the browser fine for you guys? Top trades got reversed? I didn't see anything. Nvidia puts, Apple puts, Disney puts, all the puts. We have data this week. Puts could work. We'll see. We get volatility, I think, by yeah, and it's really end of week. Got jobless claims on Thursday and PCE on Friday. We don't have PAL till next week, I don't think. Yeah, PPI next week. This sucks. All the puts. I don't know why. I want to use the app. I have a computer. I'm getting 403 errors. Oh, that's a tick off for Fidelity. They're both working for you? And Google got downgraded. That is neat. Yeah, even my position. Oh, I did pick up more shares of barbecue on Friday. After stream on this dip. Since I missed this dip and then it never came back, I was like, okay, I guess I'll get more here. But yeah, even on those shares on TD, it's showing that they're up, showing the pre-market of 9%. Yeah, E-Trade showing 9%. You guys know why wouldn't the German market Oh, maybe because it's from their close. Because they have different opens and close. That could be. That makes sense. Because we're showing pre-market based on when it closed in post-market. German's post-market and pre-market are different, so it's a different percentage. That's probably what it is. So it's the price. All right, I think that makes sense. I think. That'll be fine there. Okay, SPY's kind of at the low. On the day, we got about 1.5 minutes. Yeah, I'm thinking a move up to 20 cents. I might sell if it doesn't break through, and a move down. Where would I really want to actually bail on it? I'm not expecting to want to do that, but I need to be prepared. Jeez, I don't even know. I could just put a stop loss. Buy kind of coming down into open. Yeah, I guess a break of 15 cents. I wouldn't like. Pretty bullish on it though, like at least. Yeah, usually when we've seen pre-market rallies, it's been a good day. And we're up. Barbecue's up, yeah, like 10%. Today was a good day. Who doesn't want us to have a barbecue today? I know, I don't. Fidelity, dude. Grill's hot, man. Seriously though, I was gonna buy on Fidelity. Oh, there. It's maybe working now. I go to the login page and it just doesn't load. What? Alright, market's open. Ding, ding, ding. LMFA is the biggest gap up on our watch list. Mine. NXU right underneath it. Balas is up. Eyes coming down here. There's barbecue. Can't log into Fidelity. Barbecue's up 12%. Hey trader, break the 21 resistance. I don't know. The chart looks bullish, but it's so weak, such low volume. If it does, yeah, I mean, I don't know. I got out of my calls, kind of chilling on it. But they do have a catalyst of potentially making an acquisition, and seemingly that's been bullish lately. There's 13.5. Oh, pretty good volume on that first hit open. Plus 0.13%. Barbecue at 1850, so potentially back up in this range from this Friday sell-off. Yeah, that would make sense. This was just the Friday sell-off gap fill, and we maybe are now just trading back in the range we were before that. See, where we've been trading since 5.8. The 17.90, I guess, up to 20 cents. We'll see, but that actually would kind of make sense. However, now we have a gap again. So maybe they're setting up for another Friday gap fill. Maybe it fills today. I don't know. Yeah, the login page for Fidelity just doesn't even load. Need to like clear my cache or something. Eyes coming down. It has a gap fill. Also, got a late fill on the futures there. I couldn't do as many contracts since I have these nat gas ones open. Yeah, basically hit right at that resistance on SPY. That's where it opened. Now we're getting a gap fill, which has now been filled. And a bounce on that level. Yesterday's high. See if we move back down to 410. This is a risky place to go short, though. This is probably a better long. Gap fill on the support. Barbecue going for a gap fill. I can't open Fidelity. Hi. Okay, breaking through that support on SPY would be yeah, probably bearish to 410. Happening pretty fast. That's green to red on SPY. Barbecue almost filled the gap. Put a stop limit on my futures here. I'm not trying to manage this thing. Rips back up. Yeah, small gain. Be watching Nat Gas. Yeah, Natty Gas looking mighty nice. Almost filled that gap in barbecue. So nice to get that out of the way now, so we can rip the rest of the week. That's what I'm talking about. And Griffin's in the chat, guys. Give him a round of applause. I got stopped out on those futures, which is fine. Gap fill and at a support, so might be a nice long here, really. Although that is an engulfing candle on the 5-minute. You're adding in all the extended hours. Barbecue at 17. Yeah, we're at 1701. There you go. Your wish is my command. Incognito mode. Okay. No, it gives me actually that error on incognito. On without that, the home screen's loading now, but I go to log in, it just loads the banner on top, and that's it. Come on, barbecue, finish filling the gap. Don't mess around. What's on the bedpost? No issue on Chromebook. Strange. Very strange. Watch a little GME. I'll probably be trading SPY, so not really inclined to leave GME up here too long. It is up 0.34%, 20.61. Starts to move, we'll throw it up there. Let the volume slow down. It'll move right along with SPY. Less SPY. Yeah, so Friday's candle we got was engulfing, which may be bearish for today and maybe the next couple of days. However, such a long doji on the bottom. Bullish. Jump back into my shorts though. Yeah, I think we could have a move down to 410 maybe. Might take a while, but like that 5-minute engulfing there too. That gas moving up. Barbecue didn't quite fill that gap. I think it'd still be coming though. GME, yeah, up 0.5%, 2083. So you've got distance, yeah, right around that 21. 21, 23. Above the 1940, which that multi-year low for a while. I mean, it's a good looking chart. Just I think I'm just gonna wait until, you know, it's a bit of a chase. I think GME's chart makes me more bullish on SPY. Oh yeah, you heard that, Granite? Yeah, it works well. That's what I use if I'm on my phone. AI's up almost 10%. Laser up 6.5%. SMX up 6.25%. Barbecue didn't quite fill the gap. It's up 4.8. Tupperware is up 7.5. Airbnb, we've got some short position on. It's down 1.5. Yeah, gap on barbecue is like 1650. We're like 1 wick away from filling it. Gotta love chasing. I mean, better to be late than wrong. 1% on GME. Well, 0.9%, I guess. And I have his head and shoulders from back here. Thigh, head, shoulder, shoulder. Kind of a bigger one here. But then we've got double bottoms and yeah, just kind of range bound for now. Barbecue, don't leave that gap there. Don't be ridiculous. That gas up 4.8. There we go. Spies maybe building the bear flag. Calling this engulfing to yesterday or to Friday's maybe a little bias. I don't know, but excuse me. Yeah, barbecue's up a little bit, 4.9%, 1730. I'd like to see us trade back up in that range we were at before the sell-off on Friday. But before that, I want to see a gap fill. So gap fill and then maybe rally, have a midday or end of day rally, just back up in there. That would be good for the bullish case. Consolidating down this range, not as good. SPY kind of just wicking up to VWAP. GME 20.85, 0.75% up. LMFA consolidating at the high from the gap. NXU coming down. HSDTs on a upwards rally. My size. AI. Had a nice bounce off that 9 moving average. I'm going to take a short on AI. SMX up 6.25. A little gap here and a little gap here. Not going to play that at this point. Although it is kind of hitting at a support. I could come a little lower first. Good morning, guys. Hope you had a good weekend. You kissed your mother for me. No, I'm just kidding. For you. Bye, back up to VWAP there. Thank you guys for your likes. We're at 20 likes on this fine morning. Appreciate it. Another flip around 20. Let me buy that gap. Yeah, for me, you're saying? I mean, if it gets to 20 and consolidates and then starts to sell off, then I'll sell it. But if it consolidates and breaks, then I'll probably add on the 20. I'd like to add on Fidelity, though. I suppose I could use the app if I must. Or if we get down and we see it bounce off of like 15 cents, I'd add there too, maybe. Yeah, the app's working fine. That's in my browser. I could try another browser. Doesn't have any of my login stuff on here though. Oh no, it's not working on Edge either. Oh. If IP blocked my setup. Should we fill it on the 1 minute? I mean, the 5 minute doesn't even show it, so surely the 1 minute shouldn't either. Still showing it for me, but it honestly it could be a that could be the margin for error. It could be discrepancy like Webull and what time and sales actually happened. LFM LMFA moving up there. You have to go back to time and sales and see if we did get anything for 1650. If there's a way if you can search that. Not showing me any candles or wicks, but share it on Discord. I'd be curious to see. Eyes coming down. NordVPN. Do not need to run VPN. What must be happening? Yeah, I'm not sure. Barbecue up 1.94%. It's at 1681. I see gap still at 1650. And could fill that and then rip. Or it could keep coming down really from there to maybe 15 cents. Yeah, top is suspended. Yeah, is that on Discord somewhere? You guys were saying that. They have a filing for it, or how do you guys know? Where's the source? She's a fickle mistress. Are we getting a bed speaker? Let's check our handy dandy Discord. The econ calendar. They're engulfing candle on the 5 minute. Yeah, SPY's coming down. Yeah, Bostic. Bostic started speaking at 8:45. Kashkari, 9:15. Barkin, 12:30. Bostic still on. SPY's coming down.
The diagnosis is a lie.
I don't know if he's speaking right now. I can't find him. Apple words good puts. LMFA just got halted. Ooh, halted down. Yikes. Video's coming down. Apple's coming down. Yeah, market's kind of selling off. Whatever. Maybe it's from what Bosik's saying. Maybe it's from Kashkari. XW up 10%. Noise. It does have a gap up there. GME up 0.75%. 2085. Barbecue right at 17 cents. Positive 3%. Hmm. My Fidelity app's not able to find barbecue. Candle's red, MACD's green. That can happen. Like here. The moving average convergence divergence. Let's do with the moving averages. Since we gapped up, it pulled the MACD up. So not just like red candles, red MACD. Might get out of my nat gas here. Yeah. Close it. I don't know. Okay, I closed out of my nat gas. I've got more to lose on MES. No, that was nice. I was like 800 bucks on nat gas from just last night. That was still down a couple contracts. Wanted more, but excuse me. Yeah, I can't get see if I can get HKD. I can't get BYQ to load on Fidelity. BBY won't load. It says the ticker doesn't work or something. BYQ just won't even load. Yeah, you've got to learn how the MACD works. Done some stop limits on my ESs. Barbecue 1730 491. Layouts restore last. Yeah, I'm going to recently searched even recent quotes. BBY it says quote error symbol not found. So I'm like, all right, that makes sense. BBYQ, I hit it and it just doesn't even load. Buy's coming down here. But then I even tried HKD, which is a sketchy one that shouldn't load if any load, and it loads quick. Unable to load content. Yeah. What the heck? Yeah, even my Fidelity app is saying unable to load content. Zip Trader's pick this morning was LTRY. Lottery. Actually called lottery. Yeah, just like on the home screen on the app. Just to load my portfolio. It's just, like it loads and then but it says over the chart unable to load content. Barbecue up a little bit, 1750. Up 5.5%. Yeah, I've not actually had issues with Fidelity like that. LMFA resumed. It's going to be marching down for a little bit. Hmm. God, I don't get it. Oh well, I guess. Meant to be. I want more MES shorts. I guess I'll just ride what I have. At 2. Barbecue 1710. I was looking for Bostic. Maybe Kashkari we can get.
Else to take care of your child or your children. So that means a slice of your income has to go to that person.
That's
so unless
Kashkari.
there's very large income disparity between the worker, the parent, and the child care worker, it doesn't make economic sense, just in a raw economic way, for you not to just stay home with your own children. So it's like this. There's a farming example that I've come up with. Every government in the world subsidizes agriculture.
Moving the market
you know why
at all.
they do that? Because they want high prices for farmers and low prices for consumers. Those two things are directly in tension. So you have to subsidize it to achieve both. So long answer to your question.
Final hearing is delayed until May 31st.
We as a country have to decide, is this a priority?
Yeah, I'm not seeing any filings. If you have any filings, share it on our Discord.
The only way to reconcile
look at it.
decent wages for child care workers and affordability for working families is through government subsidies. But this is an example where the fiscal authorities have to come together and make these decisions. It's not for the Federal Reserve. We don't have a role in this. But I will say, having more women being able to work, having a highly educated workforce, having better access to education from pre-K on up, all of those things will be beneficial to our economic competitiveness long term. And the Minneapolis Fed has actually for decades done analysis on investing, the economic returns to investing in early childhood education. We think the arguments are overwhelmingly positive, but ultimately these are decisions for our political authorities.
Came back down to this level, but then didn't fully fill that gap.
Good morning, Neil. Bill Goins. Listening to some of your thoughts.
That's up to you. I don't feel the need to DRS anything.
You're in a unique position, and you get a chance to look at our region in comparison to some of your other counterparts, San Francisco, Atlanta, other cities. So as you look at this region compared to others, are there 2 or 3 things that you would say, hey, these are things that this region needs to focus on, where maybe we could compete better against some of these other areas of the country? Thank you.
Yeah, I'll say a couple of things. One is a strength we have. Our region is very diverse economically. Almost every major sector of the U.S. economy is represented here.
MU puts
and
are
some
not going to work unless we get a
challenge, but they'll be balanced by sectors that are
big sell-off this
offsetting
week on them.
And that diversity of our economy
I had the
serves us
MU
well.
too. I had it
We tend to be
in the
a little bit
bag.
more
I had it here.
than economies that are
And
highly
this ridiculous
concentrated. So
move.
that's a positive. A challenge we have everywhere that I go in our region
rips after
is
the
not just
dividend date.
affordable child care. That's absolutely
Sells
true.
up into it and then rips
But
after it.
housing affordability for working families, not just for
Barbecue,
addressing a homelessness issue.
Kindling above
where folks
VWAP.
who are struggling with homelessness typically have an income problem, but people who have decent jobs cannot afford a decent place to live. And this is true in red states,
it's kind of moving
it's
up
true
some.
in blue states, it's true
Probably
wherever
stopped out
small
right here.
town you go to or bigger city.
Mm.
Place to live, and it's an unaffordable place to live, we're going to lose that competition for talent. And when you look at why is it so expensive to, like, if somebody has a good job, why aren't there builders coming in to say, hey, I'm going to build you a house you can afford or an apartment you can afford, right? It's in that builder's economic interest to do so. Well, what I've concluded is that we put up so many barriers
Yeah, if we look at the cycles,
at the local and regional level.
I was thinking like
that
June
are
or even
inhibitors to more supply
even later. I
coming
didn't look
online.
like
But
too
I'll give
specific
you
of dates,
stark
but
example. So Montana's in my district.
kind of like
Whenever I go to
June-ish,
Montana,
maybe,
the first thing I hear about is how crazy
maybe even
the home
July.
prices are getting in
So
Montana.
I think it's a little
And I
early
look
for
around
that, but
Montana, and Montana's beautiful.
and I'm not sure
And
if
there's a
those
lot
the
of
cycles that
land
it's
in
been on
Montana. And I say, okay, you're telling
will
me
be
it's
repeating
so
on OTC
expensive
at all.
for homes here.
I feel like
Why
it's
don't you build some homes over there?
probably not.
And they say, oh, no, we can't build homes over there. That would block our views of the mountains. Well, why don't you build homes over there? Oh, no, we can't build homes over there. That's down by the river. We want to protect the river. There are 100 good excuses why they don't want to build more
AI
homes.
is up 11%.
And when I really drill into it, and this is not universally true in Montana, but I've heard
TRKA
this
up
sentiment
8.
a lot, people love, Montanans love Montana the way it is.
SMX
and they
is up
don't want more
8%.
people moving there. And you can't prohibit people from moving to your state, but you can make it unaffordable. And they know that if they build more homes, more people are going to move there. This is happening in Minnesota too. Like, I own my own home. If you wanted to build, and I live in a west suburb of the Twin Cities, which has large lots. If you wanted to build an apartment building on my street, my neighbors would be up in arms and not let you do it. And if you go across the state, there are lots of little local zoning restrictions that sound good in isolation, but are really barriers to more supply coming online. And when you add this up and you add this up and you add this up, it ends up meaning the minimum cost of a new unit goes up and up and up and becomes unaffordable. So this is the biggest challenge we have in terms of our economic competitiveness that is within our control to do something about. This is a self-imposed challenge that we have made, but ultimately it's one that we all have to own ourselves because we are all part of it in demanding that we keep our neighborhoods just the way we have them. And we all have this philosophy, let them build somewhere else. I'm going to keep my neighborhood the way I like it. That means we don't build anywhere.
Barbecue
And the price goes up.
1749, up 6%. See what kind of
Hi,
cycles or
I'm Shanshi
patterns it
from MnDOT. What are
creates
your
this-
thoughts on the impact
this
of
week.
the movement towards sustainable energy on the transportation sector, but also the regional economy and the U.S. economy in general?
Well, it's like a lot of things. It's complex. Like I've seen
I would like to
some
see us
analysis of
move
the
up pretty
new,
early this week, though.
Inflation Reduction Act, which is a
Keep
big,
the longer
big
term,
climate provisions built in there.
Bullish.
That it's going to be a big deal, is the way it's been described to me. A lot more solar coming online.
If
a
not,
lot more
we could
wind
be in a
coming online.
slow melt off and
I've seen some forecasts that say that if all of this wind and
further
solar
down,
comes
maybe.
online as expected, that in some parts of the country you're going to see negative power prices, at least for meaningful parts of the day. So it's kind of hard to wrap your head around negative power prices. What do you do with that? Well, maybe that's when all of the electric vehicles get charged. You know, maybe they've got smart chargers and then they
moving
hit
down
the
a little
grid at
bit.
the right time when the power costs are the minimum. And so maybe that means it becomes really cheap for us to power our cars. You know, there's a quirk in economics. If you make something really cheap like that, so it's cheap or free to power your electric car, people are going to drive more. And so that's not exactly the goal of putting more miles on the roads as a result of well-intentioned climate policy. So a lot of times when these big policy things come online, the long-term effects are really hard to map out exactly on the front end. What I think I know is a lot more solar will come online, a lot more wind will come online. We're going to need to have a lot more transmission to be able to take advantage of that, to get from where the wind is and the sun is to where the
about
demand
IVRX?
for that power is.
Yeah, how's it doing?
We're going to need a lot more batteries. That's going to tax our sources of the materials for those
I'm gonna
batteries.
grab some more shorts on the
We're going to need to start developing some of
MES.
those sources domestically here, which is something we don't like to do. Like we don't like to say this, but we'd much prefer to have the dirty extraction industries in somebody else's country. Well, we're going to have to bring them home if we're actually going to meet the needs of some of the green energy transition policies. So I think it's big.
IBRX,
I think it's
let's see.
complicated, and I think that the full implications are going to
They
take
offered
time
shares,
to
I
sort
think,
out.
right? Yeah, no, just
Mr.
Wanna
Cash,
wait on it a little
thank you
bit?
for being here. I'm Jacob
you.
Gay with MnDOT. I'm wondering about if
Fell off a
employment
cliff.
is
You gotta
one
give it time
mandate
to
of the Fed. How are you
recover.
considering the increase in
See where it
automation
consolidates
and
and then
artificial intelligence over the next
has
5,
momentum to
10,
the upside.
20 years?
but
You know,
yeah, MACD flipped
I'm
bearish.
a big believer
Red's under the 9.
in the value of labor.
2840 is kind of a
for all
resistance. See what
modern
it does up
recorded
there. If it
history,
resists that or
prognosticators have
breaks
said
it, breaks
machines
it,
are
yeah,
gonna
maybe
do
go
away
long.
with workers,
Like
and we're all
gap
going to be
fill or
unemployed.
moves back up.
And I'm not going to get the data right. 150
Lines
years
moving
ago,
down.
the vast majority of Americans worked on farms.
GME's
Automation
up
came
half
to
a
farms.
percent, 2083.
Workers moved into cities and into factories. There's going to continue to be an evolution in the nature of our work. I think we're all going to become more productive.
We got more
Fewer,
contracts.
maybe menial
More.
tasks are we going to have to do. We're going to have to do things, using our brain. Education is going to become more and more important. It has been over time. That's only going to continue. For what it's worth, I tried Chat GPT, and I've asked it a number of questions, and it just makes up answers. And so, if college students think that they're going to graduate submitting these essays, they're only going to pass their classes if Chat GPT is also doing the grading, because it's basically gibberish from what I could tell. I'll give you one more example on this question. 5 or 6 years ago, Elon Musk predicted that all the long-haul truckers in America would be unemployed by now. They'd all be gone. Because
gas
the
is
first
holding
thing
up.
you're going to automate with autonomous vehicles are long-haul truckers. Hasn't happened yet. I read an article recently that said
big red
$100
candle on
billion
SPY.
with a B has gone into self-driving technologies, and we're no closer than we were 5 or 10 years ago, because the cars can't turn left. That's what the article said. So, I'm
can't
strongly in
load
favor
Fidelity.
of innovation. I'm strongly in favor of productivity-enhancing breakthroughs. But these things tend to be a lot harder than they sound when the PowerPoint presentation is first put together, and takes a lot
joke,
longer.
man.
So I'm bullish on the outlook for labor, though the nature of our jobs is going to keep changing.
Oh, Just Dan's got one over to the left.
Thank you guys for joining
Hi,
on this
Matt
happy
Rubel,
Money
Bronco
Monday.
Tech. I have a comment and a question.
24
Comment
likes.
is it's obvious from the
Not
survey
bad,
results
not
we are
bad. I
in the
appreciate
public
it, though.
sector with transportation.
Barbecue,
20 years ago, our
green,
group
up almost 5%,
worked really hard at getting
1730.
dedicated funding.
Yumi's a little bit green.
Some more
SPY
gas
is
tax,
red.
more dedicated funding.
There you go.
So we're kind of insulated a little
Keeps
bit
that
from a
feeling.
funding standpoint. There's still a gap with inflation and
You make
less
3
gasoline
rights.
being
I know,
used.
I don't
Maybe
understand it.
there's a funding
Can't
gap.
turn left.
But we're a little more insulated.
Let him do a
Really
NASCAR
positive.
track.
My question
Those guys
is
will
that
teach him how to turn left.
our company has a private sector group too, and you mentioned the housing thing, and that's our quandary is we see less
Yeah, I'm that guy.
on a individual single
Well, that's
family
good.
lots
I mean,
and
that-
multifamily.
The
there's
app is
less,
loading more than the
starts
browser
right
for
now.
me.
We've seen those metrics,
Browser
less starts
doesn't
coming
let me
up.
log in.
And so there's people pulling back on individual single family lots and multifamily.
I've
lenders
never
are
had
pulling
problems with
back.
Fidelity before.
And so that is now driving up prices. It was too hot to start with. We need to slow down, but with the interest rates coming up, there is a slowdown there, and that's hurting development of new housing, which is a quandary. We need more housing. There's less than we need. That's
I
increasing.
can't even
our
load that
costs as
ticker. That's just
employees do.
crazy.
So that's probably the one metric I see that's really impacting.
Some
our
people were saying, oh, who was it? It was
company.
Kai's or whatever.
Thank you.
He was saying you can't buy on
I agree with
Fidelity.
what you said.
Maybe I'm
not
starting to
surprised
feel
at
it.
What you said, people will say, well,
I
wait
mean,
a second, we've got this housing
And the
challenge,
fact that I was
and you're raising
buying it, now it's
interest
locking
rates,
me
and
out,
that's
so I can't
making it
even
more expensive.
access my account.
Doesn't that work against you? And that is true in the short run. In the short run, we need to get inflation down. And most forecasts say that inflation should come down to our 2% level over the next couple of years. Once we get through that period and interest rates normalize to something like normal prior to the
All right,
pandemic,
Jose.
then I would expect that the mortgage rates would recover and it'd be easier
Yeah, I'm
for
on
builders
Android
to
too.
go
When
back,
you on
and
DRS,
the bank environment will
Bank
be
was there processing
stronger,
all that.
less of the stresses that we're feeling right now.
I've not DRS
And
before on
so
DRS
we
before,
have to get through
but
this
Ace is on
transition period
DRS.
to get inflation back
I don't know
down.
how long it'll take you, Ace. A
And
few days.
then we'll be in a better position, and your company and others will be in a better position to tackle
Locked out
the
your account?
longer-term structural challenge we have of
Ooh, that
simply
is
needing
annoying.
more housing units, whether it's single-family homes
yeah, Ace
or
on DRS.
multifamily developments.
Probably the same amount of time. a few days, maybe a week.
Gary Harris, Iowa DOT.
Build
Could
super
you
slowly.
speak to Fed
Yeah, I
timeline
get slow
on
fills and everything.
The CBDCs,
Just the nature of the
and
market,
some
I
of
think.
the financial privacy concerns that come with it.
Illiquid.
Yeah, so the gentleman is asking about central bank
payment for
digital
order flow.
currencies. And
That's
the
what you
Fed,
get, which
is studying
I
the
like.
issue
I'll
of
take it.
central bank digital currency. Think about, Bitcoin. Instead of Bitcoin being created by this anonymous consortium, imagine if a central bank issued its own version of Bitcoin, and apparently the Chinese central bank has issued a Chinese version. So we're studying it. In terms of timing, first thing is we've been very clear, and our
I'm
chairman
moving down
has been
some
very
more.
clear that
Barbecue holding
we
up.
believe it would take an act of Congress, first of all, to allow us to do this. We couldn't just do it on our own. Number two, even more important than that, from my perspective, what problem are we trying to solve? And here's the thing, whether it's Bitcoin or a central bank digital currency, nobody has been able to articulate what problem it is actually solving. People get excited about something that sounds innovative. I want to be in favor of innovation too, but let's be clear about what problem we're solving. So I'll give you an example. I can send anybody in this room $5 right now, instantly, using Venmo or PayPal or Zelle. So what is it that a central bank digital currency
Yeah, even the app won't really load for me.
Venmo can't do? Well, nobody's been able to articulate anything. It's just a bunch of hand-waving
awful.
word salads about maybe it's better on financial inclusion, maybe it's better on cross-border remittances, but there's no evidence that it actually is better in any of those dimensions. But so why would China do it? Well, in theory,
China's
a government
communist.
could monitor every one of your transactions with a central bank digital currency.
Ooh,
We
W
would not
key,
be in
ripping,
favor of that at the Federal
halted.
Reserve, but I can see why China would be in favor of that. In theory, a government could impose negative interest rates on your account. You can't do that with Venmo, and we don't want to do that at the Federal Reserve, but I can see
GFLI.
China wanting to do that. And you could directly
15%
tax
on
your
this thing.
accounts. You can't do that with Venmo. Again, we wouldn't want to do that.
AI
I
still
can see why
going.
China would do that. So I guess I share a lot of the privacy concerns that you raised in your question. We have no interest in violating those privacies, the American people's privacies at the Federal Reserve. But if the only use case is to penetrate the privacy barrier, that doesn't sound like a good trade.
Yeah,
for the
W key
American
halted to the
people.
upside.
So I've developed a very deep
buy
skepticism
him?
at this point because for year after year after year, I've been asking the same questions, and none of the enthusiasts have been able to answer these questions. And so I remain very skeptical, but I'm going to keep my mind open and see.
Yeah, barbecue looks pretty good. Spice, very
studies
weak,
come
still
up
coming down.
Well, we are quickly, you want one, if
You
it's a
want
quick
one more?
one? A quick one.
One more.
All right.
All right, here, make it
Neil
quick.
On schedule.
Okay, thank you for being here this morning. My name is Brian Jastrom from Rockleaf Water Environmental.
I'm just getting a
And in
403
this
Aragon
national
for Fidelity.
economy, do you
Wouldn't let me
see
go to the website.
growth for the sake of growth as the best policy for driving the national economy?
Well, you're asking somewhat of a philosophical question that is really best directed at our elected leaders who are there to make some of these decisions. So I think the root of your question is, do you just grow the pie, or do you make sure that the distribution of the growth is allocated a certain way?
Call in?
I mean, that really is at the heart of
I've not had to call
our
in when
political
Fidelity's
system, the
worked.
judgments that our
I'm not even
political
able to
system needs
load their
make. I will say
anything.
this. An economy where the
I
pie
was
is
able to
not
buy on there.
growing
You might have to sign some
is not a
disclosures,
good economy.
being a penny stock
We
or
do need
rather
the pie to
OTC.
grow. You see economies
And,
where they've stopped growing and they
You might need a
stagnate.
margin account.
Stagnant
I'm not sure.
economies are really
have
not
to
vibrant. They don't lead
jump
to
through all the
innovation.
hoops. You
They
should
don't
be
lead
able to buy
better,
online.
Standards of
But
living.
yeah,
over
you're gonna have to
time.
limit buy.
If
You
look,
can't
I saw somebody
market
give a
order.
speech. I think it was George Will gave a speech.
But all that should be
a
self-explanatory.
year or
Try
two
and buy.
ago,
Tell
and
you
he
I have
talked
to be
about,
able to
would
buy.
you rather be the richest man in America 100 years ago or poor in America today? And he made this very compelling argument that you would rather be poor in America today than the richest man in America 100 years ago, because you had, whether it's electricity or running water or basic health care, the basic provisions that even the lowest earning members of our society have are leaps and bounds beyond what the richest member of our society had 100 years ago. So I strongly believe in the value of economic growth.
Takes a long time.
But I also
Each might have a
believe that
lag on it.
we need to
Some
have a
brokerages have
society
like a
where
15-minute
everybody can
delay.
participate in the benefits of that.
Might be looking at
I don't
15
think we
minute.
have that today, and I do think that
You might be
these
looking at
are,
a 15-minute delay on yours.
important challenges.
Once it does
That
load.
ultimately our political
Takes like
system,
15
as
minutes to
flawed
load,
as
then
it
it's
is,
probably what you're
our
seeing.
political
Your chart
system
doesn't look
needs
like
to
this.
come together to try to address.
Then you're probably seeing a delay.
All right, with that, we're
15
going to wrap
minutes.
it up.
Thank you
Neil,
for having me. I
thank
really
you.
appreciate it.
Everyone, give Neil a round of applause. Reflective.
All right, that was Kashkari. Kashkari. I think that's we have Barkin at 12:30. Okay. Yeah, on Weeble it was delayed, and then I went to try and buy it, and I signed a disclosure or something, and then it made it real time. However, I've noticed sometimes Weeble's kind of laggy with it. So it's real time, but then every now and then it'll kind of lag. E-Trade, I think so far has been. I've been comparing this to E-Trade, and sometimes it's behind E-Trade a little bit. I'm still in my Airbnb shorts, yeah. I have a spread though, and so it's very safe. It's all in the money. As it bounces back up. So depending on how you played it and risk tolerance, risk management, what your plan was. To see mine. Maybe I should have played it different. I wasn't sure if it was going to sell off right away or further down, so I just give myself tons of time. But yeah, so this is it on it. I'm in the money as long as it stays below, I guess 110 by expiration. I'll have max profit on it on the spread. So anywhere up here, I'm just waiting. If it keeps selling off, then it'll get more profitable. Or if we just let time decay on my short, it'll get more profitable. So, yeah, we'll see. If it really shows a big sign of reversal, I might close out before max profit. Oh, SPY. Closing out of my shorts. Okay, little gainer there on the SPY shorts. Bounced here on our level. We also have an engulfing candle now on the 5-minute. So that's enough indicator for me. Might be a good long here, really. I'll trade the trend. I don't quite know the trend yet today. It seems like it's down. So maybe not go long. Maybe wait for a bounce and go short again. Yeah, Fidelity's website. Nat Gas is kind of holding up now too. I'm gonna wait for a pullback on Natty though to go back along. Okay, OTC markets 3,000 a year. Up live. Yeah, I suppose if you trade OTCs pretty often. I haven't seen anybody that's trying to get money for it though. Buys moving up here. Probably should take it long. No, I just said trade the trend, but there really isn't much of a trend. Like we're just chopping around in a range. So trend could be bullish. Shorter term looks bearish, but can all change with one touch of the support, one engulfing candle. Buyers go crazy. Kashkari makes everyone want to buy stocks. GDC up 16%. Barbecue still hanging out 1740 plus 5%. That gas getting a little green. There you go, GME up 1.16, 2093. Getting some help here from this buy. Might be getting an engulfing candle on the daily here on GME too. I do have buying power on E-Trade if I wanted to, I guess, get more exposure on barbecue if it starts to go crazy. VIX is climbing a little bit. Put a little stop loss on these just in case. I'm close to my, just barely green on them, so. See. I just have them move to VWAP and then go from there. That gas might have one more push. 2402 on the futures. That was kind of my resistance. It never really got there. I didn't feel like holding. The way the chart looks. I think after there we'll get a consolidation, maybe a retest of breakout levels. 228. Barbecue sold 1729, 485. Low volume. Opening volume wasn't bad. In numerous parts of the world, a $2,000 a week budget is getting you less. Then this shows where demand is too. Inverse of demand. So Miami's been blowing up crazy, so 50%. Dubai 43, Singapore 29, LA 22, London 14. So LA is much stronger than San Francisco, according to that. All right. I almost have you up. McCarthy speaking. House Speaker McCarthy. Fly back to VWAP. Barbecue right at VWAP.
Live is here for you anytime with the latest news, context, and analysis. You can always find us on Hulu, Roku, the ABC News app, and
I to VWAP. Barbecue 5.8%. GME moving up at $21. 1.5% green today. WK is still halted. NXU coming down. Oh, GDC has doubled since we started looking at it. Like 15%. Now it's at 30. The percentage doubled. Got a couple Chinese stocks going. Little dead cat bounces on them. Is still grinding up here. Nice little V formation. Glad I went long. It's one of those things like I usually close my shorts if it was a good close. Sometimes that's the best time to go long. Sometimes it doesn't, you don't just get like a good close of the shorts and it consolidates and then doesn't do anything. Sometimes it does this V or just a bounce and then you're out. Especially in the morning when it's more volatile, there's more traders, it's, more liquidity. It's only 10:30 now, so moves can be faster. VWAP though, not bad. That ain't bad. DC. Do we have any data this week that could really send the markets down? Like end of week maybe? Jobless claims? As I just hold these contracts. Dang, I feel like one more week on them and I'd probably be right. MU one. Right, I just didn't close it. AI 11%. Thank you guys for your likes. I appreciate it. One of you likes this morning, 1 hour into open. WK is still halted, so this must be like a suspension pending news. I don't know, it looks like a volatility halt for sure, but just kind of using their powers at their leisure to halt it as long as they like, because it's definitely been more than 5 minutes. Coming up on 15 minutes now with that WQ halt. The RCC up 6.5. I was looking at this chart last week. Buy coming down a little bit. It's just hanging out around VWAP now. Barbecue, little red Red candle. Still about VWAP up 4%. Barber coding has resumed. Presumably. U.S. bank deposits have fallen 600 billion since the beginning of February to 1715 trillion. Where is much of that money going? Into market funds? Maybe money market funds, which have risen 500 billion over that same time period to a record of 5.3 trillion. That's crazy. That chart, nice little cup and handle on total money market fund assets. Anything that moves the US away from being viewed as the world's reserve currency, of being the safest, most liquid asset in the world, is bad for the American people, bad for the dollar, and bad for the US government. That's Goldman Sachs. McCarthy said debt ceiling negotiators are still far apart. Lyft says company's doing everything we can to be ready for full self-driving cars that will be here faster than you think. Argentine Bank hikes benchmark interest rates by 600 basis points to 97%. Wow. In April, Toronto, Canada real estate prices rose 4% month over month, the third monthly gain in a row. That's all from China, I think. They've been having China influx of money for forever now, it seems like. Bringing the average home price to 1.15 million. That's on average. That's insane. SPY's squeezing here. To have 4% month over month is insane also. Like that was like the height of well no, actually we were getting, let's see. Yeah, that's true. That's like what we were getting, I guess, a year ago down here in a lot of the United States. % of people have less than 20K in their 401k plan. I moved up there pretty quickly. 411.59 I have as a resistance. I wonder if GME got a little squeeze on that. Nope, just melting up though. 1.69. Up 21, or it's 2105. 1.7. Put a stop loss on this debit spread I have on Airbnb. Not done that before, but I'm gonna start trying it. Let's see, how would this work? I don't even know how that'd work. I'm not gonna do it. Yeah, it seems like Airbnb is probably coming up. Not a whole lot. Just need time on there. That is all a werewolf. Can you believe it? Okay, now Fidelity's website's loading again. Let's see if I can log in. Click login and nothing happens. Just shows the banner and nothing. It populates on the page. Maybe I'm already logged in. I can just go to my account. Gas coming down a little bit. Barbecue at the bottom of the barber coating. 3.76 positive, 1711. Hey Julian. Outbrain Inc. Never heard of it. Maybe a triple bottom here. Could be bullish. Could be a nice pickup at that price. Maybe the tight stop, because if it breaks here, you're gonna see probably a big flush. But yeah, you might get a little bounce in this range. Maybe only up to 440 though, so on that. You almost could say a little inverse head and shoulders, but this wick is pretty low. I don't know though. Your MACD just flipped bearish. Yeah, that might be alright. Got a little inverted head and shoulders on the hourly here. Sure you're playing with it, but could be near a bottom. Is this thing? I PO'd at 20. Advertisers. Oh, you're not really seeing volume yet though. So it might not be a great support yet. We want to see that volume kind of pick up. Kind of how it did back here. Could be volume day there. All this volume here. I don't know. Maybe it's enough. It is a little increase here. I don't know. Is that a support? Could be early if you picked it up, but maybe not wrong. 4.3% on barbecue. Climbing up here. I mean, down for just a big rip now. Got those long contracts. Didn't buy it at the best time, but I picked them up like right here. I literally just flipped my close. Just flipped my close order. Just closed out. Bought to close, but bought to close as many as I was closing. It was just reopened. Long way. Yeah, Alberta. No, dude. That's like, I think all from China. They inflate the prices up there so much. Dollar's definitely screwed. Yeah, so I'm wondering when there's gonna be a point where the dollar's dropping with the stock market, basically. I'm expecting that probably to happen. Typically it's inverse. So initially we might see dollar starts coming down, markets start rallying, but then once it's like, oh shoot, this isn't good, the dollar coming down, we're in trouble, then we'll probably see them move together. Kind of good news, bad news, good news, and then when bad news is actually like, oh shoot, that's actually bad. The XAI, yeah, we've got well, AI is moving. Kind of the leader of the gang. Yeah, saw this little gap there, but moving averages on the hourly. GFAI, you're a dip buyer at that low. At like all-time low for it. Not be a bad move. No, it's close. All-time low was 380. Belly's working for you. I know, it is strange, it's kind of isolated. I've heard you guys having problems with bellies at times, and I've never. So it seems like sometimes it could just be like maybe an isolated deal. Yeah, I'm in Spider alongside. It picks up down here though. Technically in the futures. I just put a stop basically at break even, so I can ride whatever. If we do get to a resistance point, I take profits, but fine to be just patient and let it do its thing. But with options, you know, you can't really be patient unless you're selling them. Barbecue's coming down a little bit. Okay, see if we get this gap fill. Different types of stop losses. I don't use them a whole lot, so I'm not all that experienced with them. But I think there's really only like one. It's you set a price for it to trigger in order, and you set the price where it triggers the order to open, and then you set the price where you want to basically open or close the order. So it's like a limit price, right? So if I want to buy barbecue at 5 cents, I'd put a limit price of 5 cents to buy it. It's not going to buy it at 5 cents because it's not at 5 cents. But if it gets down to 5 cents, there's liquidity, and market maker wants to be nice, then probably get it for 5 cents if it gets down there. It's a limit order. Now stop limit or stop loss or stop profit is if suppose it could be to enter, but I've only used them to exit. No, to enter it's just a limit, it's not a stop. So if I bought it at 5 cents and then I wanted to do a stop limit order, stop loss order at say 4 cents, if it went below 4 cents, I put in that stop limit for 4 cents, and then I usually put my limit price at the trigger price, which probably isn't the way to do it, but since we're talking about cents, maybe I would, because 4 cents to 3 cents is a huge difference. Well, I guess there's fractions of pennies and stuff, but anyways, yeah. So then you have a limit price for it to activate your order, and then it'll try and fill it at your limit. Well, it doesn't have to be a loss; it can be a gain. You know, so say it's at 5 cents and then it rips up to 10 cents. You can put a stop loss or stop profit. It would be called then at like 8 cents. So if it comes back down to 8 cents from 10 cents, it would trigger. I kind of seen some resistance here right on our line, 411.59. I don't know if I want to close yet. I think I kind of just want to wait, leave it. I need to overtrade this. I'm up pretty good on the day, and yeah, problem. Yeah, trailing stop losses. That's where it moves up incrementally, like either a percentage or a dollar amount. So you bought at 5 cents, and then you say 10% trailing stop loss, and so as it moves up, it'll move your stop loss up, basically 10% below the price it's trading at. But I have not really used those much either, honestly. We can't just everyday chase our gaps. So far, it's working out, Trays. Gaps are more common in OTC because there's usually lack of liquidity, and so you get these huge spreads and transactions filling way above other ones. And so I think with barbecue being more liquid than a lot of OTC, gap filling might still be seems like it's still a thing. I mean, this literally was a dive bomb gap fill and then rip, so this is like a pretty exaggerated gap fill. Do I like the Star Wars? I don't. Yeah, I think it's funny. I think he's a philanthropist, and I think his mission is to build an audience and to have influence, which is a lot of people with money is their mission. It's not bad, but I think that's what he's doing, basically. I don't think he's necessarily involved. Maybe he has some shares of GME. Maybe I think he does. I think we've seen that, but maybe he has some shares of barbecue. As far as on the back end, like some big owner of the company with big plans, I don't see it. And even if it was, that's not necessarily bullish. Like, just because it's someone we know, why does that make it good? Like, oh, this is great. Maybe it's someone that you've never heard of, some fun would be way better. On E-Trade, I know, well, different brokerages call it different stuff. It's confusing. Stop trigger and limit price. The trigger is the price that it opens the order, and then you put in the limit price of where you want it to fill. So when I'm trading futures, I usually have them at the same price. I'll show you. So stop trigger. Typically, I mean, to make sure you get filled, you'd want this to be further, but I usually just do them at the same price because it's pretty easy on futures to work out. But stop trigger 4128, and then my limit price 4128. So basically, if it's at 4137 now, if it gets down to 4128, this will execute, or will open up this order or limit price sell of 4128. So it should all happen at once it hits there. I could put this lower to make sure it gets filled. Right. That makes sense. The trigger is where it triggers to basically have an open order for the limit price. From my understanding. Bad day to ask me questions. Having to clear my throat all the time. Still sick. Kidding. I like to answer questions. And thankfully my throat doesn't hurt, so I'm very grateful for that. Doesn't even hurt. I think I'm getting over this little sickness. A couple days. Lumen yeah, I saw Lumen. Something was up pretty good. Lumen's up 2.5. I don't know if you were talking about this, but it reminded me of it. Oh yeah, you are Lumen. For some reason I read that as Mullen. Yeah, I like this chart. You have an inverse head and shoulders. You have an RSI divergence here. Good. Yeah, you already had earnings out of the way, so that's done. Might be a nice pickup. Lower lows on your chart there. Higher lows on your RSI. Here and here. Oh. Yeah. Volume. Not a whole lot of volume yet, but if it starts to break out, I'm sure it'll come in. Yep, you've got your bullish MACD, green over the 9 moving average. Gonna have a triple bottom here, really. I'm moving up. GME getting a push. 2.3%, 21.17 on GME. We have 21.23 as a resistance. Yeah, the chart always look good. The options just haven't moved forward. Not for me. I mean, it's low. Like going along on options on AT&T. Like, which is a fine play, but who's Pulte? No one. It's just a guy that owns a home building company. And Batman. Same as a limit sell. It's not the same as limit sell, because limit sell, that order is already open. So if you create an order for a limit sell and you send it, then you have an order for a limit sell. The stop limit or stop trigger, stop loss, there's no order open. So if it hits a certain price, then it will open that order. So if it's I guess in the money, you would say. If it's in the money is when you do a stop loss or stop profit. Because if you do a limit sell or whatever, and it's something in the money, you're gonna get filled right away. So it's something to trigger it if it hits a certain price. That V on SPY. You never know with the SPY. Be cheeky out here. Alright, limit is medium for that. Good. Yeah, hopefully. I mean, again, I honestly don't use them a whole lot, so I'm using them more now though. It's a good idea to use them. Much as I hate them. Smart. Paul Tudor Jones that he thinks the market setup right now is similar to mid-2006 before the great financial crisis. I hope we're not that far behind it. That puts us as like 3 years out from a bottom. Yeah, Argentina is bringing their interest rates up to 97. My baseline case is we won't even be thinking about cutting into well into 2024. What Bostic said. Turkey doubled Russian Urals oil imports in the first half of May versus the same period of April. Ural. Country of Ural. Fed manufacturing this morning. What? That was way different than expectations. Actual was negative 31. Expected was negative 3. Wow. Not a slight miss. Some weird guy from Superstock, basically. That gas hanging out up here. Oh, still climbing up. See what happens at 412. Yeah, like I said, I can ride these. I mean, probably close it before 5 because I don't hold futures over their closing time now. Messes with my margin. It sweeps stuff for my brokerage. If I can close out all my futures before 5, then doesn't mess with my margin. I can always reopen back up at 6, so. It's nothing but weirdos in there. He's kind of kidding. He's not a guy from Superstock. Barbecue looks like it might fill this gap. I don't know. It's OTC and it's barcoding, but MACD's bearish. We got red under the 9. We're under VWAP. I think it's probably going to come down here. Now I could close here. I guess my question would be: we're just going to fill this gap and then go back up. Or should I try and anticipate a move down to 15 or lower? That's where it kind of sucks because OTC trading is expensive for one, in and out, and then just the slippage of getting it out is tough. So y'all ride it. Yeah, I mean, we're holding up pretty good. I like it. If we do break that low, though, I'd probably get out. Take the loss. Yeah, I mean the guys that research it, like it's, you know, same thing you see on my channel. Like it's not doing anything exciting until you just lose interest. So nothing to write up on. SPY's coming down a little bit here. Might take profits. I don't know. Whoa, there's a pretty big flush there on SPY. I'll just leave it. Could be making kind of a cup and handle. Very like a chalice, a wine glass. Rid of the purple rings. Yeah, they should make another subreddit. Call it Purple Rings. And it's just like endless posts of purple rings. Oh, W key resumed. Halted up. Wait. Halted going up. Zoomed up here. It's just sold back off. That's what happens when you halt it for 15 minutes. $20. Well, it resumed. I got scared. I wanted to sold. Might be a nice buy here now, though. It's back to where it halted. That volume. 3 million. Is there news on here? Oh, WiseKey tweets discussion in Paris between WiseKey CEO Carlos Cruz Moreira with Elon Musk on how to launch more low-orbit Pico satellites using SpaceX. Based on a tweet? This thing is pretty low float. Yeah, 9 million. Seems like that's the only catalyst there. Probably coming back to VWAP here. He was making an intraday cup and handle. Reformed to Supersonic Cultist. First step of reformation, sell GME. Top, is he still suspended? Yeah, I think they probably might have got in trouble or something. I mean, you can't have that kind of move and not get attention from regulators. Or not, maybe it's something else. I don't know. The idea of, I like the post of purchasing from the company. Oh, yeah. We're gonna better to Amazon. I'll buy everything from them. Yeah, when GME first kind of started getting into e-commerce, and not first getting into it, but once Frank Cohen really started pushing it, and then we started seeing, you know, the shipping times coming down, and then it started to make sense. I was like, wow, you know, thinking about it now, they have all these small stores everywhere. They really could ship things, you know, high demand products much faster than even Amazon. And then we noticed that, and it's still that way. Like getting stuff from GameStop, some stuff you'll get faster than Amazon, faster than Walmart, just because they have all these little locations all over the place, and they have it in store. It's, you know, it could be same day. Amazon, you can get some same day stuff in, you know, bigger cities. But yeah, they've got a cool opportunity there. But the big struggle is moving people from platforms. That's always going to be a huge hurdle. Sterling. Moving people from one platform to another, though, is probably one of the most difficult things to do as far as consumer behavior. Like moving people from one phone company to another, or once they get used to using something, very difficult to move them off of that. Well, third party, yeah, they've had third party on Amazon for forever. I mean, it's been a long time. So, I mean, all the stuff you're getting is from China. GameStop too, like it's pretty much all from China anyways, or somewhere in Asia. So that's why Amazon has a huge advantage with their rating system that they've been very strict on. That's really what you have as a, you know, their rating system is really what initially pushed them, I think, as well as I don't like their website, but just how clean it is if you compare it to eBay. How strict they were with their titles and their images. Has to have a perfectly white background. Titles are, it's very, very strict how listings look. It's a much cleaner user experience. But then the rating system, yeah, just the abundance of ratings and how strict they are on ratings gave you confidence purchases. And I still think that about Amazon. Like, I think that's why it has that's a huge advantage that it has over any competitor. Not including the shipping or whatever, but just because people can trust and rely on ratings. If it has a lot of ratings, if they're good ratings, if it's, you know, good reviews, you know, even if it's third party, whatever. So somewhere like a GameStop, yeah, you just have to start building those ratings, and there's got to be a strict criteria with it. But it doesn't matter as much with ratings on GameStop because it's not third party. I don't think they have any third party stuff yet, so shouldn't be as big of an issue. %15 on AI. Barbecue still hanging out with that gap below it. 3.76%, 1711. Line moving right back up. GME 2.37, 2118. This was the green bottle in Pulte's tweet. Here it is, last 2 days. Setting up this engulfing candle still too. Other products are junk. Yeah, again, that's where the rating thing comes in. So if it is a junk product, it's going to end up being reflected in the ratings. So maybe you're just not versed in how to Amazon shop, but yeah, you've got to use the ratings. How many ratings it has, and then of course how many stars it has. Major resistance on GME 24. Yeah, let's see. Yeah, you're probably right. Yeah, for a major resistance 24. Yeah, pretty good resistance up here, like around 22. All these supports, but yeah, 24 is that big one that we consolidated on for a while. And it retested at resistance here. There you go, there's a pop on GME. Above that, that resistance 21.23. It's up 2.5. AMC is starting to move up a little bit. I still can't log into Fidelity. Yeah, we're getting a huge amount of down detector on Fidelity. Not just me. This is from that sucks. I guess I'm happy it's not just me, at least. Whoa, look at that candle and W key. All that volume, 1.3 million? What in the world? That was a crazy move. Yeah, W key. That's a ton of, that's 1.3 million volume in that 5 minutes on a stock that has 9.98 million float. It's traded half the float today. 0.11. Nat Gas making another bull flag, but kind of overbought. Might make a little more move higher, but I'm gonna be patient. Wait for pullback. Yeah, I'm seeing it on the down detector. CXAI. That is. AI moving too, 16%. Yep. AI is popping. Well, thanks guys for your likes. 35 of them. 11. That means it's time to subscribe if you haven't already. Right on 11. That thing is red. Make it gray. Do it. Peter Jones says, I think we were in a multi-year trading range. Yeah, well, yep, it's already true. He thinks prices will continue to go up this year, sees long-term productivity boom from AI, sees recession, but doesn't mean stocks can't go higher. Interesting. U.S. and European unions will pledge to step up coordination on security measures like export restrictions, the screening of outbound technologies, and foreign investment controls to fight back against economic coercion from countries such as China. That was a mouthful. Yeah, might be a little cup and handle right here. Break the 412, kind of the open. I mean, let's look at some levels up here. Do it. Kind of that next one up, 413.50. Maybe something in here. Resistance. Support that resistance. Not really. These long wicked candles, dude, it's crazy. Alright, SPY, let's go. Like before in our chat. Real gentlemen. Pay your dues. Like before you enter. Bargains at 12:30. Excuse me. Well, I couldn't hear it, but I just burped. SPY moving up higher. Getting to that open. 412.29. Alls. I'll subscribe to that MOS. Kind offer.
To combat inflation is their voice. So just paying attention to what they're saying, but inclusive of data. I really want to pay attention more.
She always has that
data
crazy, like,
consumer and how healthy
kind of blown out filter.
Spending. I think it's so interesting.
I
And
don't
we're
know
going to talk
why.
about it with some of my picks as well. Just that move over post-COVID from goods to services, and we're starting
Barbecue
to
still up
see
4.5.
less spending.
17.24.
I want to see how that translates over, and that's from early data, from credit card data, what we heard from this past earnings cycle. I believe it was MasterCard who said that there is a resilient consumer, but it's a selective consumer, and that selective consumer is still focusing on experiences. But now that recent data that's incoming is showing a pullback in experiences that should translate positively to inflation. But I just need to see the data, and then how the Fed, of course, is going to consume that and interpret that and give us direction.
Ubo breaking out, up 10%.
All right. I mean, good point.
Look at that bull flag on it. Not bad. Bouncing off that 1649 support. And back here. RSI divergence played out. Almost had us though with that double bottom.
So much, and I'm trying not to give you
Like,
too
I
many
don't know.
because I know that's what we do. However,
Of course, this was an earnings kickoff, though. Really,
absolutely something that's going to increase productivity across the entire industry, and we certainly do not know the impact of it. Just like the early days of Apple, the World Wide Web, PC. The AI and the productivity increases that we can find within that new
GME 2146 breaking out also up 3.7%.
However, what we can do, aside from looking at companies that are direct beneficiaries of AI, are early adopters of AI, and one of those is Shopify. So think about if we can go back in time and you believed in the World Wide Web or PCs, and you integrated that early within your vertical or within your company, you actually had a really great increase in productivity.
Guess I could have held my calls a little longer. They probably would have gone up.
Has done that. So they're an early adopter of AI.
A bit.
They have ChatGPT-like
Couple%.
functionality, so they also have plugins as well, and some of that really extensive technology.
I had a lot
that
in them though.
Leads to cost
Didn't like how much I had in
because
it.
of increase in productivity, and we saw that with their layoffs, which gives them a focus on free cash flow, business scalability, and it's a favorite in the younger generation. The side hustle culture is something that a Deloitte study talks about with that younger generation, and so this has a really good brand from that.
Looks like nat gas might want to move up too.
Boxes, even though if we see a pullback in the consumer, this is something that could help. If we see layoffs, you'll see adaptation from the younger generation focusing on utilizing Shopify.
I think that's a great point too when you talk about that Deloitte survey and what the younger folks are doing, because that drives everything too. Ben, what are you thinking when I look at this one?
Liechtenstein.
Today, right now it's 61.48. Ben, what levels are you watching on the charts?
Well, Nicole, I'm going to show you exactly the levels I have my eye on, and Shopify is a perfect example of for the textbook example of the two phases, the vertical, the horizontal phase over multiple time frames. Jessica just laid out the fundamentals behind the bid that we're seeing. I want to kind of map out what's playing out in terms of price activity and getting into some of those levels. Nicole, there are these areas of consolidation that form. As you look at this chart, you can see sideways consolidation,
SMX up 10, little pop there.
Again,
Dang, this one is enticing.
Move up recently to 65.54,
Those
but you
move
can
like crazy.
also, as you look a little bit more closely, see these areas of
Ubo,
development
11%.
that occur along the way, the two different phases of price development. And in this
Yeah,
instance,
GME
you've got
4%
the
now,
vertical
21 and a
phase up.
half.
You can see it's pretty well defined, but you also have
You're
this
getting
horizontal
the
phase
basket
that
moving a
occurs.
little
And in this
bit.
instance, we're talking around, we'll call it 47. Here we have the horizontal phase that develops around 58, and it's kind of a wash, rinse, repeat, right? You can see currently balancing around 63, Nicole. But your eyes should really be able to highlight the two separate phases of development and the transition between the two. Stacking
Haven't
up
seen
for
that big of a
well-defined
green
trend
candle on
environment.
GME
The upside,
for,
that also plays out here on the longer term.
I guess we
daily
saw that on
time
the
frame.
5th,
Now we're going all the way
10
back
days
to
ago.
October of last year. So this is why I can see Jessica's positive sentiment in
If you
terms
get
of
a move up to
Shopify and the
22.16
vibe,
today, that'd be,
that they've been providing for investors,
that'd be neat.
rewarding the longs here. This is the move we just looked at, the high conviction trade. You can see it's stand outish relative to the price activity, but you can also see it's in line with the trend of the upside. Taking a quick look at where things stand, the gap ups help them gain 76% year to date, above the 50, above the 200-day moving average. RSI very supportive of this move up. Jessica's probably not the only one that's got a little bit of a bullish tone in terms of describing and getting into the fundamentals in this one and expectations as far as price activity to come.
Yeah, I mean, you showed us two great breakouts that seem to be, you know, at least holding some ground there, and that's good. Jessica, final thoughts here before we get to Walmart.
Yeah, so I think AI is super important. And this is a great example of how adopting something early can lead to increased productivity and expanding earnings. But something that I failed to mention when we were talking about the broader macro that I do want to make sure that I bring up is forward-looking guidance had a mention of AI that was up 64% year over year. And I think that's a testament to what's to come and something to absolutely pay attention to. And Shopify is merely an example of that.
Yeah, I think that's a great point because AI seems to be not going away. You know, we started talking about the metaverse, right? And then I haven't said metaverse in a really long time, pretty much since last November when I just started talking about AI.
There you go.
Let's get to the next one. And this is still about the shopper here, Walmart. Jessica, why are you looking at this one?
So this is where we're getting into the second half of the year. And when we came into this earnings season, in my opinion, the bar was set really, really low. We actually had the most forward negative guidance since Q3 of 2019. And we had it was about 87% that reported. It was 77% that beat. I had to get those numbers in my mind correctly. That's amazing. But what that's telling me now is now we've got increases in forward-looking guidance. And that's perhaps setting the foundation for some misses. So I want to have something defensive. That's where Walmart's coming in. I do think inflation expectations are absolutely coming down. However, we've got some looming debt ceiling concerns. There's a lot of uncertainty that's coming within the market. So it's important to balance the portfolio with something that's a little more defensive. And Walmart certainly is that. Since the Q1 earnings were indicative of that resilient consumer and selective, this is where we're going to focus on the defensive play. So Walmart does have a focus on automation as well, and that's going to translate over and expand their profit margins. They are expecting about 65% of their stores will be serviced by automation and 55% of the fulfillment centers within the next 4 years. However, that's a focus on management. Just like you're saying, you're not saying meta anymore, we're saying AI. That's management, and that's really important to translate over to positive profits, right? And then additionally, their PE is more since it's a little overvalued. It's trading 22 times, almost 23 times next year's earnings, but that's more in line with high performing retailers like Costco rather than at a discount in comparison more to those global e-commerce. So 22 times next year's earnings, about 22.6. So I'll call that 23. Still expecting 10.4% earnings per share growth and 3.3% revenue growth. But with that focus on automation, the consumer that perhaps would need to have cheaper goods, Walmart's a great defensive play.
Yeah, and I think you make a great point about automation and cost cutting, and every CEO is now asking, how can AI help my business, particularly the bottom line? Ben, what are you thinking about this chart for Walmart?
Well, much like Shopify, guys, Walmart's in a trend environment on multiple time frames. I actually started off with the hourly time frame here, going back to the beginning of March when the stock was trading and bottoming out around 136.
GME 3.7.
Here on this chart, again, hourly candles, you can see high conviction to the upside, sideways consolidation, very similar to what we started off in terms of our discussion with Shopify and a more granular look. But here I went ahead and mapped out some of the areas of consolidation that have formed on the way up. And if you look at the left side of your screen, you can actually see how we bottomed in March, again, around 137, and then started to take out key areas that were established on the way down throughout the month of February. Well-defined trend environment with limited retracement. Each one of the areas that's formed relative to the current area that's been that you're forming right now has held and unable to take it out. Taking a look here as we step away from the move we've seen off the March lows, which is actually this move right here, just to give you an idea, put this bigger picture move into perspective, because this goes all the way back to 2017 when we were balancing out around 70, 76 along the way up. You can see some of the areas of consolidation, so that trend environment on the hourly time frame since the beginning of the March rally that we've seen off 130, 120, 140 area. And then you can see again longer term trend environment that's been playing out on the bigger picture daily, balancing around 138, holding above that after a recent test. Again, that March low, that area was significant. Here you can see
getting close to the high of the day.
Moving average. This is a stock that's doing very well, but I did
does look like that cup and handle is kind of playing out.
Struggling a little bit, unable to take out the high last year. We'll keep an eye on 154, but much like the
BBBYQ,
Nasdaq, the broader market,
coating.
struggling. Nasdaq's taking out the Feb highs, so is Walmart. So let's keep an eye on this. It's up year to date. We're talking 7% here, Nicole.
Wow, I mean, and that's another thing that is, which ones are the winners? Which ones will prevail over the others, Jessica? I mean, I don't think it's a blanket.
Could be getting RSI divergence here still in SPY.
I think it has to do with automation and how management is navigating. Final thoughts on
Should we
Walmart?
bust through here?
Yeah, I think you're absolutely right. We're now in a place where we have tighter credit conditions and not that massive amount of
That
growth
gas
that's
at the
available.
close
So
to
I
the high
think it's
today.
a great time to be a stock picker, but it's important also to be balanced and diversified. And Walmart can certainly do that because it is traditionally a defensive play.
All right, let's get to one that is always a favorite, and that would be Apple. What are you thinking here about Apple today?
See a lot of pain
So
behind
speaking
those
about
eyes.
Good management. What a great example
Kind of pain
really
only
great management from
weed
a
can
CEO
cure.
perspective, or the whole
Got any?
management team. You know, unlike many of the other technology stocks, Apple did not overhire during COVID. They were one of the few. So they didn't have to focus on aggressively cost cutting by layoffs. That showed their discipline. They're focused on sustainable growth, and they know how to navigate these type of environments. What I thought was really interesting, though, for their past earnings. So when they do their Q1 earnings, it's representative of actually their second fiscal quarter for Apple, because that's when their fiscal year ends in September. They tend to announce dividends and buybacks. So that's what it was really paying attention to. They are notoriously known for having a large amount of cash, which also is something, if you have a lot of cash in this type of environment, should translate positive to revenues. But nonetheless, I digress. They have a focus, their executive management, on what's called net cash neutral. And essentially that means that's defined at a point at which cash is equivalent to their debts. So we want to see what they're doing with that cash and how they're increasing that. They absolutely authorized a record buyback. It was $90 billion, projected around $80 billion, and they increased their dividend by 4%. So that tells me that they are committed to their longer term goals, don't need a shift in focus to protect those profit margins, because they have a good playbook and executive management structure that absolutely capitalizes and works towards that. And additionally, Additionally, they haven't been too big in the AI space. However, they're still part of those mentions a couple of times. So I'm actually really excited to see what they do with AI. Apple has led innovation for many years. So now that they have this opportunity to do that once more with this new innovative technology, with the way that Apple tends to think about products and reimagined experiences, I think Apple could absolutely be a winner in that space.
Yeah, and that coupled with the cash on hand, as you said. Ben, take us through the technicals on Apple today.
Yeah, absolutely, Nicole. Much like the other two examples we talked about, well-defined trend environment to the
Might
upside
close my
on
lungs here.
multiple time frames. Let's begin first and foremost with the move we've seen since last week, the end of last week. Earnings, we're talking about a big move up here and, well, sideways consolidation. Another example, again, of a vertical phase on the left side of your screen and a more horizontal phase
You're making a
plays
double
out here
top.
since. That's more along the lines
This
of
RSI
acceptance
divergence is
of
starting
that
to
price
show
activity.
itself.
And just taking a look here, join me as we do, you can see, well, hold on, this is the one I wanted to pull up, because you can see the transition, Nicole, much like we were talking about with Shopify, between the two phases. You have the horizontal phase, which is much more overlapping rotational. You have the vertical phase where you get the breakout. And then again, we transition from the two in a very orderly fashion, sometimes more easily identifiable than others, currently balancing around 173. Let's move away from this more granular 15-minute time frame. I wanted you to see, look at this. This is a daily chart here. This goes all the way back to, we're talking July of 2018. And much like the pattern we just talked about,
I want to just
on
hold
the
it and
more
let the
granular,
stop.
more intermediate time
Right,
frame,
but
this is a very similar situation. Trend up here, longer term time frame, 155, a key pivotal
I have
area.
a double
We're holding
bottom here on
above
the
that,
hourly
which
too.
opens up a door for a retest of 183. Apple here, you can see in a bit of a range though right now. And again, you can see the significance associated with 155, but
Yeah, I'm
again,
gonna
on this
close
longer
it.
term trend to the upside, Apple's been
I close my lungs. We'll see what
rewarding
happens.
gold handsomely for the longer
Might
term
get back in on VWAP.
stance
Might just chill
here.
though.
And you can see
Pretty
again,
happy.
not far from that all-time high, nearing 182.30.
Yeah, I'll just chill. Wait for a great setup.
After holding
Could be good
above,
short here, but
155 in a significant way.
Right, understood. Jessica, any final thoughts here today on Apple or a big picture?
Yeah, absolutely. Apple, I expect to have some negative headwinds because of the consumer demand, and a lot of their sales are made up of iPhones, but also know a lot of their sales used to be made up of iPods, and we don't even say that word anymore. So Apple has a certainly proven
iPod?
track for management.
Is that like a
focus,
place
so
where
it'll be
you
interesting
sleep?
to see how that
Pod?
translates over to earnings. And of course,
Upstart's
the broader
ripping
picture is
10%.
a huge focus on the debt ceiling and resolution.
Yeah, you're getting
Thank
you're
you
getting
both,
the pickle
Jessica
picks
and Skip
going.
of
Upstart and
Options Play.
Fubo.
Great to see you, Jessica. Thank you. And of course, our own Ben Lichtenstein
Stuff to do with
on the charts.
FTDs or something.
On this Monday. Okay, coming up next, let's look at the retailers, luxury retailers following a big week. Of course, Tapestry is something we already heard from. That's
Yeah, a
the
little
owner
bit
and
of it
coach,
too.
Kate Spade. How does it stack up against some of the other luxury brands? All the brands. We're going to be talking about this. Diving
I
into
think
this
I've already
next
closed for profit on Fubo and Upstart. Guess I could have gotten back in them. I thought this would probably fill some more gap, but it's a big move up on the old Upstart. AI 15%. WQ came down below VWAP. LMFA. LIFEGOESON. SMX up 10. Bring back the iPods. Sounds like a comfortable place to sleep, like where Japanese people sleep in like little pods in Tokyo. I mean, I feel like I would just be being greedy taking a short here, but it does look like a nice short. Got basically a double top. You have an RSI divergence these minutes. Not going to. Similarly to how we did the short, then to the long. However, this late in the day, not sure we'll just get a clean sell-off like we did earlier in the day. That said, Euro market did close 2 minutes ago, so could be a direction change or a confirmed direction. Sometimes that shakes up our market. If Euro was holding us up or holding us back or whatever. AI 16.5%. Mm-hmm. Now my next mission is just to get Fidelity to work. Microsoft's $75 billion deal for Activision Blizzard gets European Union approval. That was pumping the market. Microsoft, not. GME 4% consolidating. Looking good. Looking like a 5-minute bull flag. If it comes down to retest this breakout level, I'm still probably not gonna get calls on it. I don't know. Haven't seen a squeezy move on GME for like a year. Guess this day, 1-day event in October. Eyes coming down here. I didn't take any shorts. I'm just watching it, but nice range bound trades today. Yeah. Tie-up follow UK rejection. EU approval requires Microsoft to offer cloud gaming companies 10-year free licenses for Activision games, including Call of Duty. Amazon may prioritize items in search results depending on how close it is to you and how quickly it can be delivered. Instead of doing that, they should just give us the option to do that. Verizon CEO is stepping down. I have Verizon in my long term. Didn't like that news. That gas is coming down a little bit.
Reports say.
Yeah, I see Magellan Midstream. I mean, of course, they're the ones being acquired, up about 13.5% today. The enterprise value of $60 billion, as you noted, and you were talking about the landscape. I mean, that's pretty amazing. Thank you for that. Great developing story today. Renita Young, thank you, Senior Markets Correspondent. Let's take a look now and turn our attention over to luxury retail. Jan Rogers-Sniffin's with us, CEO of J. Rogers-Sniffin WWE. Thank you so much for being with us. I know this is your life. You follow these retailers morning, noon, and night. You get out there, you do channel checks. Before I get to Tapestry last week and looking at luxury overall, what are some of the themes that are going on right now?
Oh, well, I think when you look at it right now, the theme in the investing market is we're going into a recession. This is scary. Should we own these companies? The theme for the companies is near luxury seems to be holding up better than real luxury. And I think that's because we really did see this, crash on salaries on Wall Street, et cetera. And you might not go out and buy that $29,000 Birkin bag, but it doesn't keep you from buying a $350 or $500 Coach purse or Michael Kors purse. So we're seeing pretty good strength in purses in general at those kind of price points. And I think that's where these companies do make a lot of their living. And we're also seeing brands that resonate with even younger customers holding up pretty well.
Kind of getting a little testy there.
Tapestry, Cabaret, and Ralph Lauren.
Maybe just setting up a little flag to break out. I don't know. I think it's still kind of hitting the top.
And if you think wages at the low end are going to continue to rise and catch up with the falling inflation,
probably still have an iPod somewhere.
That unemployment's going to stay below 4%. And if you really think the JOLTS is going to be double what job seekers are really
looking for. Takes up so much room, it's probably in a shed.
And we're not going to default on the debt. And we're normalizing on experiences versus goods, and I think that's starting to happen. And if inflation in groceries is really going to fall to low single digits, it's time to be excited about these near luxury companies. And it's also time to be excited about Walmart and Target, both ends of the barbell.
Yeah.
This guy talking about?
All right, so I mean, there is potential here. We are still seeing spending. You have a selective
BTL getting a little
shopper.
poppy.
That's something Jessica Insick. I like that phrase because I think that's exactly what we're seeing. They want to make sure they're getting exactly what they want now. To your point, names like Tapestry, which is the parent of Coach, and Kate Spade. I mean, these are luxury, but not the ultra luxury, and that's doing well, right?
Right. You have to remember, this goes along with travel and it goes along with doing things, right? That level of purchasing, because that's affordable, but it's also something you need to take with you when you're going places. So we're seeing some real interest on that side of it. And I don't know what you think, but I think Tapestry's done a really, really good job. I think Capri's just starting to get better, and Ralph has been getting better for a long time. So I think all three of them have the ability to take their brands and use them in this new environment to get more of that younger customer and almost affluent at the top end customer to shop in their stores. And that seems to be happening.
SMX. I want it, but I don't.
In Bloomingdale's.
12.5%.
Under the Macy's umbrella, and Bloomingdale's was the bright spot, right? So that's a little higher end. But that Ralph Lauren setup that they have in Midtown Manhattan is just beautiful always. That being said, tell me a little bit about some of the names that are coming up this week. You mentioned a name like Walmart. We'll have Walmart, Home Depot, Foot Locker, TJX, which is the parent of TJ Maxx, and Marshalls. Winners, losers here that are standouts to you?
Well, I'm just not as big a fan in that off-price space as a lot of people are right now. I think that's been tough for that consumer. On the other hand, I am a big fan of Walmart because I think they're getting the trade down and I think they're doing everything right. I'm not as thrilled with Home Depot only because that's not where the customer is right now. They're fading off in the other direction. And I think, that's an issue. But Walmart is right where the customer is. Groceries are inflation driven. They're 18% cheaper than the other grocery stores, and it's 58% of their business. The only problem with Walmart is it's got a pretty good price on the stock, right?
Right.
Yeah,
I mean,
none of those have
people
sold
still
off.
like Walmart. We just had Jessica talking about Walmart, and she was saying the automation. This is a management move, using AI to cut costs and moving it forward. So there seems to be a lot of positive comments. How about something like Tiffany? You have the new Tiffany, the rebranding, the new big opening on Fifth Avenue. Are people going in there and buying $50,000 pieces of jewelry? Who's in there buying that?
Well, they're in there buying stuff. I don't know if they're buying the $50,000 piece of jewelry, but LVMH has done a heck of a job since they brought Tiffany into the fold. And, they've got 70 great brands, not just Tiffany. So am I a big fan at the real upper end? Do I love LVMH? Yes. Do I like Kering? Yes, because that's luxury. But that is an area that suffers when Wall Street suffers. These other guys we're talking about, not so much. So they may not be seeing quite the drive out of Tiffany this spring season they would have seen had all those $1 million and $5 million bonuses been paid on Wall Street. But I'm still contending that those near luxury players are going to continue to do well in this environment because inflation is coming down and we're not seeing any inflation in the goods side of the business. So if you're Tapestry or Capri or Ralph Lauren, your products aren't inflating. You're either making more money or you're selling it at a better price than you were, but you're not suffering the inflation component that the lower end is suffering.
All right. Listen, give me 10 seconds. I want to ask you about footwear. There's Crocs, there's Under Armour, there's Foot Locker, which is reporting. You have Nike, Skechers, Uggs, which is under Deckers. Quickly, which ones are the standouts?
I'm a big fan of Nike. Uggs, Deckers has done a great job. So yes, I think that I like those two. The rest of them, it's not a great space right now. We are seeing some damage there due to the inflationary components of the business. So but I still like those two.
Great to see you. Jen Rogers-Kniffen, always wonderful to have you on the show. Appreciate it. Jay Rogers-Kniffen, WWE. Thanks, Jen. Thank you. Coming up next, George Stillis is standing by. He'll take a look at Western Digital. It's rallying today after the merger talks have been heating up. He'll give us all the news and an example trade on the way. Trading 360 continues.
Let's walk through how to analyze a company's financials on thinkorswim. To get started, go to the Analyze tab and select Fundamentals. Enter a symbol, then select Enter. To download detailed analyst reports, select Download. By the Numbers provides balance sheet information and other fundamental data. Company Details provides summary takeaways on key metrics and what drives the stock, takes a more numeric look at similar information. If you find any of the information particularly helpful, you can print it out or take a screenshot. For more demos on how to thinkorswim, head to the Education Center on tdameritrade.com.
We empower those who act. Those who see the correlation between upswings and downswings.
There's your red candle on the SPY.
Those who manage risk.
The SPY coming back down to VWAP.
Perfectly executed strategy. A measured approach.
Why are you still talking to me?
Tools.
There we go. AI 17%, dude. This thing's crazy. Oh, they had earnings this morning. Ah, that's pulling up all the AI stocks. Ah. GME coming back down. Got 21.23. Thinking more 21.14 or VWAP on that thing. 21.10. There's your squeeze on GME. I hope you enjoyed it. Been a pleasure. Upstart consolidating up here. Pretty good looking. AI, new high on the day. Morning, Ruthless. Go back to 50. Maybe. How's it gonna get there though? Wait, pre-shareholders meeting? It's gonna go to 50 before the shareholder meeting? When's shareholder meeting? Isn't that this month? Hi, big bounce there on that support we have drawn. 411. 59. Might be a nice short opportunity here. I might take it actually. Dang it. I want to trade more, but it's too nice. Ugh. Yeah, gotta do it. Little head and shoulders on the 5-minute. Head, shoulder, shoulder. MACD's now bearish. VWAP is there though, so maybe it just makes it VWAP. June 15th. Oh, so a month. You're anticipating a pre-shareholder meeting rally? Hourly's now looking more bullish though. Moment to pop.
At Lowe's, the competitor, Trading 360. We'll be right back.
Bull into default. Permanent bull post increase of debt ceiling. Yeah. You think GME's gonna get the push with it, huh? I think the market moving on the debt ceiling is cover up. I think we get a whole lot of market move from it, honestly. Engulfing candle on the 5-minute, but I'm still liking this head and shoulders here. MACD's bearish. Kind of breaking my rules getting to another trade right now though, so if I lose on it, you know why. I feel good though. Very chill this morning. No pressure. Good emotional vibe to be trading. That's pretty clear. There's a pop, so maybe not what we were expecting. Buys rip in there. I'm closing out. Small loss on that one. Might be double topping, but yeah, head and shoulders is not so much anymore. Good.
Thank you both for being with us. So Brian, I'll start with you. It was an interesting comment from Morgan Stanley about how while nothing is terrible, everything is worse. And I think it just basically was saying how consumers are pulling back. Retail spending obviously has been dropping, particularly among the higher income folks. Tell me, Brian, what you're expecting here from Home Depot.
Yeah, there could be positive catalysts.
Yeah, good morning. So, look,
Sure,
overall,
but
when I think about
same on any
Home
stock, I
Depot,
guess.
Lowe's reports, there's a Home Depot's
If
tomorrow
GME's not
reports the
in
following week.
a
My
cyclical
team has
pattern
a
because
really
shorts
substantial
are
report detailing these
screwed on their
detailing these
position,
announcements or
then
what we
it's
expect these
no
announcements.
different than other
Look, I
stocks
think
to
it's
me.
going to be largely in line. Okay, we heard from these companies not that long ago. They laid out their initial guidance for fiscal 2023. I don't think much has changed since then. So I think we're going to get largely in line reports. What I don't think we're going to get is some type of positive breakout, you know, to sort of say put to rest a lot of these concerns that have been weighing on these stocks. But at the same time, I also think we don't get incremental signs of weakness. It's just kind of in line.
All right, understood. I mean, there is a feeling that maybe things like durable goods are not selling as well. The do-it-yourselfers for their homes, are they still into this, Max? Is this still a positive for Home Depot?
Hey, great. Thanks for having me on. So our surveys show that DIY demand for projects actually remains pretty strong still. So we think that that's going to be okay. Where we are seeing signs of weakness, though, is on sort of these big ticket one-off large purchases. So we think that that trend is going to remain soft. But ultimately, the project side of the business does remain in pretty good shape. And that's both for DIY as well as on the pro side.
And the pro side is such a positive, Max, for Home Depot. They've always said that I know you both have outperform ratings. You have a 360 target and Brian has a 400, but that's part of it too, right, Max, when the pros are going more to Home Depot than Lowe's, or no?
So at Home Depot, the pro channel is about 50% of sales, whereas it's only about 25% at Lowe's. Home Depot has done a really nice job of winning market share with that small to medium-sized pro, and now they're going after that really productive large pro. They've invested billions of dollars in supply chain assets, and we think that while early, we do like the green shoots that we're seeing. And as we look ahead, we really think that Home Depot winning that large pro customer will remain one of the key tenets of our outperform thesis.
Yeah. What are you thinking here, Brian, about Lowe's? Where do you stand on that?
Well, look, I like Lowe's a lot here. I think, and I would agree with some of the comments that Max was making. There's a big opportunity for both Home Depot and Lowe's in the pro market. Arguably more for Lowe's, just because they haven't pushed as far into it yet. But for me, the real big positive when I talk to our clients about why I like Lowe's stock here is, again, I think
Not sure as volatility on SPY is weird.
holding up. Okay, I'll make that.
Head and Shoulders is still there.
And Lowe's. But valuation, while it's a positive
end up
for
becoming
Home
a wick,
Depot,
so
it's a huge positive for Lowe's.
I'm out though.
This
I
stock
don't.
to me is just downright cheap.
I don't
You've
want to
had
force it.
significant progress fundamentally.
Mediocre mall
Lowe's
retail, if they do
becoming
something with that,
a better
too,
company
great.
under new senior leadership.
Yeah,
We've
yeah,
seen
they
the
have potential. I
operating
mean,
margin gap between Lowe's and Home Depot really narrow. But all that said,
but
the
that's just
valuation gap between Lowe's and Home Depot
same as any other
remains
stock, I guess.
historically wide. It trades a substantial discount to the market overall.
If there isn't
I
some
think the Lowe's stock is quite cheap here.
big underlying
It's interesting
short position
because,
that's
you have an outperformance at 275
going to be closed at some point.
Market performed
And it hasn't already been closed from that last 2 years of cyclical runs.
less enthusiastic on Lowe's.
Sure. So as we think that the industry is, going to remain under pressure here over the near to medium term, we just think that Home Depot is better positioned. We think that that pro customer will continue to support demand, and at Lowe's, the pro customer is just a much smaller percentage of the mix. Over there, they really lean into the DIY business, and that's really where we think that the customer is going to remain soft. So we agree with a lot of the factors that Brian pointed out here, including valuation is quite cheap at Lowe's, trading somewhere in the 13 to 14 times range. That said, we think for 2023, despite Lowe's doing a nice job last year really closing the comp as well as margin gap, we think that that's going to start to widen out again, just because, again, we're not sure that the DIY shopper at Lowe's will be fully there throughout the year.
Yeah. Brian, why don't you just give me a quick thought on how people are shopping? Are they shopping for homes? Are they do-it-yourself? Mortgage rates are still higher than they were, though they're off the highs. Just a quick thought on that, very quick. Brian.
Yeah, I'll make it quick. I think these higher rates are actually a positive for Home Depot and Lowe's. We've talked about this a lot in your show and others, is that, I think what's happening now is you have homeowners trapped, if you will, in their homes, in their historically low mortgages. And I think that's encouraging people to work on their existing properties as opposed to go out and find a new place.
Right.
Barbecue, little green candle.
So that equals do-it-yourself.
That's right.
VWAP maybe.
Nagel. Yeah, right. Oppenheimer and Company and Max Riklenko of TD Cowen. Brian and Max, thank you. That's going to do it for us here on Trading 360. I'm Nicole Petalides. Thanks for being with me, 11 a.m. and 2 p.m. I'll see you at 2 p.m. for the watch list. Keep it right here. Fast Market is next.
17% on AI. Right, the earnings run. Upstart 15%. Bubo, another bull flag on it. 12%. RCC 8.5. Kala 8.5. Me finding support there, 21.23. See if that holds. Spy kind of chopping around here still. Have Barkin speaking at 12:30, so 30 minutes for Barkin. These big candles in here, I don't know, that was weird. Something. Okay, your buy fill for the gap fill or buy order. Nice, yeah, 1650. I don't know. Like we could see it still. That gas is coming down. You missed the GME squeeze, kitty. Sorry, man. You're just like 10 minutes late. There it was. Here's the top. Now we're coming down. Oh, all right. Catch you on the next play, I guess. Yeah, Mosmus, exactly. It was quicker than we all expected. We thought at least a few days, maybe a week, week or two, but no, it was like 5 minutes.
You know, not big losses or anything. But one of the key things I've kind of looked at over the last 6 weeks, we haven't had any plus or minus 1% moves in the S&P 500. I mean, in 2022, that was a daily occurrence.
Yeah, exactly. I think this week, or today's market at least, can be summed up in two little phrases. Calm Russell, calm market. Right? With the Russell
Barbecue.
This morning,
maybe gonna move to VWAP.
Lower, now it's up 9/10%.
That 1718, 4%.
Now the VIX being up, that's a Friday, Monday thing that we talk about a lot on this show. Not everyone understands it, but traders take days out of their theoretical value calculation by moving the date forward. So that lowers the VIX on Friday, raises it back up on Monday. So I wouldn't be overly concerned.
Oh, that's interesting to hear that.
Being up, even with the market up. But that being said, retail sales tomorrow, retail earnings out this week.
Still a little head and shoulders here on the 5 minute on SPY.
The Atlanta
Looks like we're setting up for an engulfing candle now.
Island. Feel free to I can go give you an in-depth look.
I've made my quota for the day.
A couple interviews, get some work done down there. But there, Raphael Bostic's already making some headlines talking about. He said this morning his bias to action would be higher on rates, not lower, and he thinks they're not going to cut anything in rates till late 2024. He said. So a little bit of different narrative. And by the way, with all the Fed speakers, including Powell and Ben Bernanke on Friday, you're going to get a lot of Fed speak. That might be the bigger risk to the market than anything else. It's the Russell and it's Fed speakers.
Yeah, we had, as you mentioned, Bostic speaking. Kashkari spoke today also. So continuation on that theme. But one of the stocks that's actually doing pretty well today, helping lift mega cap tech names, is Meta Platforms after an upgrade. Let's bring in Jenny Horn, markets correspondent here on the network.
Jenny,
break down this upgrade. This
got any
seems
Jennies
like
in the chat?
A reoccurring theme here in 2023. Jenny, Meta's getting all the love from the analysts.
They really are, and it's amazing to me to see now Loop Capital upgrading shares and also raising their price target to $320, which implies about 35% upside. Considering the fact that Meta has already rallied almost 100% year to date, I mean, it's really wild to see that they could even be pricing in further optimism, upgrading shares now to buy from hold. And what we've seen, shares of Meta powered higher on the heels of these cost cuts. Loop Capital expects revenue momentum can be another driver for this company, saying that the stock has enjoyed an outstanding rally this year, but they see actually room for it to push even further higher. Despite a near doubling of Meta's stock so far in 2023, the analyst did say that cost-cutting momentum has helped the stock stock year to date, but there's still opportunity for shares to benefit from overall revenue momentum. He said that while they see expense rationalization as more of a one-time driver from here, they become increasingly positive on the overall revenue picture, and they pointed to 3 significant headwinds to their revenue, which did include Apple ad tracking changes, Forex, as well as the transition to Reels, which are all cycling through and now becoming significant tailwinds for Meta. These factors on a whole, he said, have perhaps a mid-teens % negative impact on Meta's overall revenue, but they called Meta's product story as
SPY's gonna start coming down.
time with several compelling avenues. They think that there's overall enthusiasm now for Advantage Plus, driving performance for advertisers, and the better utilization of Meta's full suite of inventory. So it's wild to see that analysts are still piling onto this name. I think there could be some thinking that they are a little bit late to the rally, just given the significant upside we've already seen in 2023. Shares are up over
Barbecue, it's one that
172%
VWAP.
off their 52-week low, but I do think it's also encouraging, given the overall negative sentiment in the markets over the last several weeks, that Meta's still been able to hold on right around its 52-week highs now.
Timing is everything in life, Jenny. And when you see a stock rally 170%, now's the time to get in. I think it's a very interesting take here on Meta. But, you know, if you look at a 1-year chart, it's a pretty big V, right? But if you widen out to a 3-year chart, you realize that this stock is still $145 off its highs. And their one comment that caught my eye, every headwind is now a tailwind, Jenny.
Yeah, and I think this all has to do with the fact that there was so much pessimism built around the metaverse. No one really understood it. No one understood the added costs in building out this metaverse. Mark Zuckerberg released like these metaverse images of himself that were objectively terrible, I'd say, that did not seem to be well received by the public. But I think
Jenny with the
right
blows
now,
on Zuck.
into AI and the fact this year of efficiency, they've not only been able to promise as of the several quarters back, but they've been able to show now in several quarters of reports is really promising for a company that I always felt like the street was a little bit hard on. Mark Zuckerberg is one of those figures where it seems like there's a lot of polarizing opinions about him, but he's been able to actually follow through on a lot of these promises, which in this market is well received, especially for a mega cap tech name like Meta Platforms. I mean, to see it hold on to this rally even year to date, nowhere near where it once was, which I think is a really good point, but I think it's showing that as a leader, he has a really clear direction for this company.
Yeah, and Kevin repeatedly said he's finally being a CEO, and he doesn't talk about the metaverse, thankfully, even though they're still piling money into that thing.
The year of efficiency is working.
Ain't it how it is?
That's the amazing thing is they are still piling money into
BTI
the
down
metaverse, they're just not
10%
talking
today.
about it.
Yep, that's right. AI, just talk about AI, forget the metaverse.
And I'm surprised he didn't say, hey, that emoji of media, make it better looking or you're all fired.
No kidding.
All right. Great stuff as always. Thanks to Jenny Horn, markets correspondent here, breaking down the upgrade on Meta Platforms. But now let's
Spy not coming down, just consolidating up here.
Equities contributor here on the network. Alex,
Really
I
taking
wanted
its
to get your
time.
take here. We had that Empire State Manufacturing data, kind of reflective of what we've seen in the maybe a rolling recession in the manufacturing sector. But this was a steep drop. And then on top of that, you got a lot of Fed speak, not only this week, but today.
Yeah, it's just one more piece of information, right, Tom? So, you know, I don't think it paints any different picture than what we've kind of already seen. I mean, consumers are telling you that despite whatever the Fed's looking at and, you know, the job market, they're saying they're worried about the future. And they're, you know, the economists and analysts that are trying to assess it have been nowhere near the reality that faces the everyday person. So, you know, we can define recession however we want. We can focus on whatever we want to paint a more positive picture, which, you know, if you're a Federal Reserve member, maybe that's to your benefit because you don't want to necessarily scare everyone and create something worse than it is. But if you're the everyday person and you're worried, which that's what the survey tells us that a lot of people are.
Survey says.
You know, is that the environment that you go and start buying those extra discretionary items? Do you take that extra trip in that environment? Maybe, but more likely you're probably going to plow back your spending. You're going to hoard those dollars, and that's going to contribute to, you know, less sales for businesses. It's going to contribute to less hotel stays. It's going to contribute to less airplane tickets. And then it becomes this kind of revolving situation that just kind of becomes a self-fulfilling prophecy. If people stop spending, the economy is going to slow.
Right. And I think Alex brings up a great point here, Kev, going into a week full of major retail earnings and retail sales tomorrow. And we saw it out of the University of Michigan consumer sentiment number last Friday. That cratered also. So that psyche that the consumer is going to be able to hold up this economy is starting to fade a little bit.
Retail sales looking for a big bounce, though, from last month, from down 1% to up 0.7. X vehicles down 0.8 to up 0.4. Big recovery in, I think, vehicles and gas. Remember, the CPI data said used car prices up 4.4%.
Right.
Let's see if that shows up in any of this data. But retail sales is supposed to have a nice jump here in their numbers. Now, the rest of the data this week, regional data is important, but it's not top tier level. I think what I like to do is you get all the regional data combined, Chicago, Philly Fed, which you'll also get this week. You combine it into one little picture, but boy, I'm worried about retail sales. I'm worried about the U.S. consumer. I'm not worried about manufacturing around New York, which, they're not recovering as fast as the rest of the country. For many reasons that we can discuss at another time.
Yeah, and ISM PMI data has been in negative territory as far as on the manufacturing side, but the inflation that's sticky right now, Alex, has been on the services side. And we're finally starting to see some cracks in maybe some of those data points that says, inflation's coming down a little bit, airfare's coming down a little bit. Kevin mentioned used cars went up, but new car sales went actually down last report. So is that the Goldilocks scenario that the market can try to navigate here as through all this Fed speak that we have this week?
This is a tough question to answer, but let me start with something I think it's a little bit more pragmatic, Tom. Right now, the risk-free rate's 5%, right? So if you want to invest in stocks, the first thing you should ask yourself is, are stocks going to be 5% higher in a year? If that is where your base case is, the question I ask is, what has to happen for that to happen? And really, you need them higher than 5%, right? Because you're taking risk on. I know that we have this debt ceiling overhang, and there's this kind of uncertainty around the credit of U.S. Treasury. Let's be fair. We're not worried about that in the long term, especially if you're doing something like a year out, or even if you're doing something like a CD or something with a bank, whatever it may be. The credit concern of that is not really the big component. It's more of the opportunity cost of what you could have done to potentially gain a greater return. So in risk assets, obviously you're taking on risk. There's a chance that you're not going to get that greater return, so you're going to need more than that 5% that you'd get. What's the needle that's going to be threaded to get this? Everything is painting a disappointing picture. So I see this as the most optimistic thing that I could say in terms of how the market would get higher is that it's just the most contrarian thing out there right now. Everyone thinks that. Everyone thinks it's going to be getting worse, and if you pick the right stocks, I mean, there are still some positive stories out there, but the concentration in these big companies, they can continue clicking along, but now if Apple does stumble, or if Microsoft does stumble, there's not the other, 490 names to catch them. Right now, they've all stumbled, and Apple's carrying them on the back. Microsoft's carrying them on the back. Well, what if they have one bad quarter? There's no room for that bad quarter right now.
And maybe the market reassesses the valuation on some of these companies because they're multiples.
BAOS halted. I was seeing that
the
thing.
NASDAQ
Oh, wow.
It's up 22.5% so far this year. So it's not all doldrums right now here Kevin, for the equity market, but there have been rolling sectors that have been taking the brunt of the downside and maybe causing that mentality of an investor to say, hey, I'm getting, the S&P 500 is getting held up by 10 names. That can't last forever.
Good afternoon, Jay. Okay, markets in the afternoon.
When you say the NASDAQ, large cap tech, they've all had unbelievable runs during the first quarter. We talked a lot about Apple going from 124 to 170. But remember, they killed these stocks at the end of last year. So, I mean, I can look from, the date right on the calendar, from mid-August to really mid-October. I mean, this market went straight down, right? And the NASDAQ led the way down. It was painful to look at some of the percentages that they took out of these names. Meta, that Jenny just reported on, was one of them, that they sent to levels that we didn't think it could go to those levels. So a lot of these recoveries that are big percentages, everyone's acknowledging the big percentages, but Meta's still $145 off its high. So, I mean, they've made back big percentages, but boy, some of these stocks still have a long way to go. Apple is basically flat from where it was a while ago, all the way down to 124. So it's come a long way, but it hasn't really made new levels of highs.
Yeah, 9 months ago, Apple was basically at these levels, or just above these levels, right there.
Just a big V.
Yeah, and but that comes into play. Are the valuations warranted? Maybe going into a slowing consumer. I think that's going to be the discussion we're going to have, Alex, this week with Home Depot, Target, Walmart. Walmart's doing pretty well. Target's kind of underperforming. Home Depot is underperforming. What's your take here on the overall, retail space? Is it going to be winners and losers based on the fickleness of the consumer?
It's going to be a couple things. One, it's going to be how dire our expectations, because the story of this earnings has been there were just really, really low bars set, and largely the market's cleared the low bar, but it's still been a disappointing quarter. Yeah, revenue's grown a little bit, but earnings in the 90% of the S&P 500 names that we've gotten has declined. Within retail itself, there's just key differences between Walmart and Home Depot, for example. One is a big ticket store with a lot of discretionary spending, something like Home Depot, and one's literally a grocery store that is the biggest scale and like the ultimate consumer staple when it comes to retail. So it's hard to say, a one-size-fits-all answer. They're also going to deal with cost pressures in a different way. Walmart's got obviously pretty strong relationships with many of their suppliers, but I looked at Home Depot earlier for Oliver Rennick's program, Morning Trade Live, and they're expecting a decline in same-store sales for this quarter year over year. They're expecting earnings to decline by about 7% year over year. And this is all on an average ticket size that is expected to grow. So they're squeezing as much as they can out of the consumers, but the types of products that they're selling, people are just not going to the store for those things right now the same way they were a year ago.
Yeah, and the comparables are going to be really difficult.
Are terrible for Home Depot.
They're going to be bad because at the end of 2021 into the start of 2022, I mean, they were exploding. You couldn't find a product in there at that point. And then once you buy a washer or a fridge, you don't need to probably buy one for 10 years, right? So comparable is going to be definitely tough.
We're expecting news.
Guys, let's take a quick break.
I think we'd expect it any time.
Take a look at,
there's hard deadlines, so
earnings tomorrow morning. That's Baidu.
hopefully before those deadlines.
So far this year. Fast markets
Supposedly they extended one of the deadlines. I'm not sure though. I haven't seen any news on it. I haven't seen it writing on it, basically, filing. BDC breaking out to the upside of VWAP. AI just still climbing. Upstart and Fubobo still going. EAOS still halted. FCL and what by George Soros? $14 price target. I just saw the news that all the stuff that guy sold. He sold like all his EV. Got a line here from somewhere. Bounced right on it, huh? That is neat. Yeah, the chart looks nice. Oh yeah, it had that move up. Came down. Now it's on its way back up. I have a little inverse head and shoulders here. Head, shoulder, shoulder. Look for like, I don't know, 250 again. 260. 280. Yeah, you mentioned that about GTAI. BAOS is resumed. What do you want me to do? GTI is probably going to fill this gap here to 86 cents. And very well could come down to 75-cent support. And even lower down to 48 cents. SPY's moving up. BAOS. Gas still kind of coming down. I guess there's a gap fill here on UNG. So might look to pick up some more long contracts around this gap fill, 660-ish, or even 658 back at that support. SPY just chopping around here. Glad I'm not trading it.
Reflective that it hasn't fully popped, but if the ad revenue here in the U.S., which kind of stabilized, ticked up a little bit, you've seen what we've seen out of Google Alphabet, Meta Platforms, and some of these other platforms that are taking advantage of maybe that bottoming cycle through. Is that what you have to look for Baidu?
Yeah, I would say that I would see this quarter as potentially a bounce back quarter for this company, at least relative to the same quarter last year. Last year was a tough year for Baidu. I don't think there's any way to spin that. It's just the fact of the matter. They saw declines in earnings pretty tremendously, almost 10%. They saw, of course, advertising revenue basically go off the cliff when you're a company that's growing at the pace that this one is, falling by about 6.5% last year. But they're expecting a return to growth on both sides and much more of a bounce back versus that quarter last year.
Barbecue coming down a little bit. Maybe in Phil's gap.
And about 15% is
1650 would be the gap fill. It's at 1683.
As well, after basically being flat year over year. So you start looking at this stuff. Really the key thing here is Kevin kind of alluded to, it's the wild card, which is the fact that this is, of course, a China-based company. It's ADR. There's going to be risks associated with that, but they're really kind of difficult to quantify, I would say. You just kind of ask for the higher multiple, of which the market really has when you compare it to where this was, of course, prior to all of this boiling up. I mean, this was a $354 stock at one point. So it's about to basically have a record quarter one in terms of a bunch of its numbers if it comes in as expected, and it's a third of where it used to be. So that premium valuation is already there. It's just in terms of, or depressed valuation in terms of that risk premium being priced in. It's already there. So the question now is, has this rally off the lows now priced in what can be a better quarter? That's going to be the question. The stock hasn't been an underperformer. It's had a really nice run.
There's a gap getting filled.
Way far away from where it used to be.
On barbecue, sauce.
This is like Meta. This thing's been on a tear.
Yeah.
But look at a picture of a 3-year chart on Baidu. It's ridiculous.
Yeah.
How the rally this thing had.
Yeah, all the way 354. That was in February 2021. And just as fast of a steep decline from those levels a couple months later. So there's your 3-year chart there.
Do something similar to that did here in that gap fill.
Implied volatility is elevated.
I'm not sure it will.
The lower, probably third quartile over the last 52 weeks in here. How do you want to look at this from an example trade?
Yeah, I think you could make an argument that this stock is still even potentially oversold in the grand scheme of its trading action, just because it's lower than pre-pandemic levels, yet the numbers have improved, of course, since those times. I looked at a neutral to bullish strategy. This is probably one that if it wasn't an ADR, maybe you look to doing more of a risk undefined or just a short put style strategy with this, as you'll see. But because of that added wild card, I did something that is risk defined, but sort of is going to have undefined risk characteristics. So we're looking at a skewed put butterfly here, just out to this Friday, in which we're buying one of the 123s, selling 2 of the 120s, and then we're going way out of the money, and we're buying a very cheap wing at the $100 strike. And so what this is going to do is it's going to theoretically define the risk of that super black swan event if the stock were to just plunge way through $100. But it's also going to free up some capital as well, especially in something maybe if you were looking at this in a limited margin account like an IRA that was spread enabled. This would allow you to not use that full 116 or 11,600 rather dollars for this, but rather do so with a little bit less, like $1,600 bucks. So there's a couple added benefits for that, but this is a high probability trade with a break even at 116.25 if it's done at 75
Still green on the day on barbecue.
That's outside the expected.
Not sure if it's gonna
move here.
last.
It's done for a credit, so if these options are all out of the money, also known as, let's call it, an unchanged or a positive reaction in earnings, you'll just simply keep the credit.
Is that within the margin of error? Potentially, maybe not. 1650 still a gap. You hit 1655.
If you get sort of that muted reaction or even a sort of a disappointing reaction where the stock slowly churns down towards 120, that's where you can have that $3 wide debit spread work to our advantage as well. And this thing could potentially expand to as much as a $375 profit.
All right, let's break this unbalanced put butterfly, buying one of the May 19th 123 puts, selling two of the 120 puts, and then going all the way down to the 100 strike put, buying one of those. It's trading more around the lines of 50 to 60 cent credit right now.
Even if it goes to your price,
that break even about
it's not always easy to get filled.
30, 116.40 to the downside is profitability, because above that 123.
OMH. What am I looking at? Oh, recently viewed.
About $1,600 in risk.
Wow, this thing's done well today.
Down to below 100, but that break even still about 8.5% below the current share price.
Yeah, let's be clear here. Alex did the 1/2 put back ratio, but then bought that little put just to control
up 25%,
margin, right, and control the catastrophic risk on the downside. But you don't have to do that.
Runners.
But it's still a good idea, because that little put costs like a dime. It costs like 10 or 11 cents to control
AI almost
that
20%.
margin. So it's a good way to do it if you are, to do this spread, to do the 1/2 back ratio without the unlimited downside.
Yeah, and Alex, real quick here on this type of one.
I mean, think about it. The SPY still even made it up to the pre-market high.
Risk-defined trades going into earnings. If the stock does go back that one standard deviation to the option market's pricing in plus or minus $8, that's right in the sweet spot of that 120 strike, but it's a short-term trade, right?
Yeah, this is absolutely a short-term trade. You can see the expiration date is this week.
WQ just got shut down.
You buy that 10%.
SMX 14 and a
10-cent
half.
options, they add up over time. It does cut into possible return, but it allows for capital efficiency.
Peloton up 7.3.
In the case of a name like Baidu, not to say that Baidu is a good or a bad company, but because of those sort of unknowns with it being a Chinese company, and I know that some of those fears have settled down. It's a super short-term trade. This potentially protects from, those absolute worst-case scenarios. All of a sudden, this stock is cut in half for whatever reason. So
bouncing kind of
take
at
it
a
for
nice
what it is.
support.
Also, like I said, short-term trade, super earnings-centric. Likely find out
Market
tomorrow
cap's
morning
actually
this one's gonna be profitable.
somewhat reasonable now, maybe.
Yeah, and it does have 4 days till expiration, so a good look at the unbalanced put butterfly
maybe.
there for a credit. So you see that profitability anywhere above that 116.40
Might be a nice long here in Peloton.
right there. All right.
Once Fidelity's working, maybe I'll do something with it.
Helping us break down markets and Baidu. But coming up after the break, Kevin and I are going to be joined by Andy Swan from Likefolio for discussion
Nice
on
hammer
Home Depot,
candle
which
yesterday
reports
on it.
tomorrow morning with expectations relatively low at this point. Stick around. Coming right back.
All the risk-ons are going. Well, since in Chapter 11 there are deadlines for news, so I suppose I could extend stuff, but that's the beauty. We do have a time frame that we're kind of looking at for potential catalysts. I like how liquid the Peloton options are. I don't want to grab a call on this thing. RSI divergence there too on the daily. Or no, never mind. Just it's at a support. Is that a reason? up 7%. Interesting looking chart. Wish up 6%. Barbecue positive 2%, 1681. That might be within the threshold.
On the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment, and that's going to be
How
Andy
flat
Swan,
SPY has
co-founder
been
of Likefolio. Welcome
in this
back to the
tight
show,
channel.
Andy.
Happy Monday.
Happy Monday to you.
Happy
So
Money
we're kicking
Monday.
off, retail earnings season
You said it.
this week, and Home Depot reports tomorrow morning. Stock's been
Bounce off
pretty
that level
lackluster, down about 8%
on GME.
so far this year. What kind of data do you guys have at a
Holding up well
Likefolio
as well.
that kind of supports this this quandary this stock's in?
Quandary.
Yeah, it's in a quandary. Well, you know, last quarter was the first
Start
time I think Home Depot
16.6,
missed on revenue
SMX
expectations
14
since
and a half.
2019. Stock got a haircut on that.
Stocks could probably have a
we really
2 or 3 day rally this week and then sell off into Friday.
Our consumer purchase intent mentions are down significantly on a year-over-year basis. More concerning sentiment, you know, the consumer happiness level is down significantly from higher than lows to now lower than lows in terms of consumer happiness. Not something that you really want to see in a tough macro environment. And, you know, speaking of the macro environment, I think all of those tailwinds that we saw during COVID have pretty much turned into headwinds for Home Depot here. We see mentions of do-it-yourself or home renovation type of activity really lower across the board. So people building a house,
BDC 32%,
moving,
making a little cup here.
all those things that kick off a home renovation project down across the board pretty significantly.
Bull flagging on the hourly. GDC actually looks really nice.
The edge that it has over Lowe's,
Nice as a Chinese stock ever could, I guess.
Contractor business. Home Depot really in well with the contractors and
BAOS, another Chinese one.
Contractors a little bit more instead of doing it themselves, but that entire basket is down. And so I think, you know, when you look at a company like Home Depot, it really benefited from everything that happened during the pandemic, where people were either stuck at home and decided to you know, redo things a little bit, or they made that move that they hadn't made in a while. Now we've got higher interest rates. People aren't moving. There's hardly any supply in the market at all because everybody's locked in at these low rates. So the ego on you. Homes. That's the impetus.
Thanks, Ace. Appreciate the membership, man.
That's the reason you walk into Home Depot.
Mazamis, you've been gifted a membership
inflation kicking in.
by Fire Marshal
Bill.
Bill.
It's just not a store that a lot of consumers are stopping by anymore.
All right, Andy, I'm going to ask you the two most important questions in all of trading and investing, which is when and from what level are these stocks going to start to recover, or any investment in general? Because here's what, we had Megan on Friday on the show, and she did a great job.
This is the place for the hardware man.
Understands what Best Buy's, you know, that everyone bought a computer, everyone bought a TV, but the replacement on electronics is 3 to 7 years.
Hot stock.
And guess what? We're getting right into that sweet spot, or the beginning of the sweet spot, where people are going to start looking.
Why would Bill Polt be bullish
now,
anyways?
Take that information, that theory, and bring it over to Home Depot. And when
full hardware, folks.
This is going to reignite, because eventually it's
Oh,
going to
full
reignite.
hardware,
and when
man.
the numbers show up, the stock's not going to be here, Andy. It's going to be way higher than this already. So when do you think that's going to happen? And if it's close to happening,
I see it. I see what you see there, Tree. I'm seeing it.
An interesting stock to look at.
Yeah, so you asked two great questions, and I'll give, you know, kind of the worst answer in trading or investing. I'll just say not yet. You know, what I will say is from everything that we see for Home Depot, things continue to deteriorate. What I'd really like to see in the Likefolio data, in that consumer sentiment levels, in that, you know, consumer demand levels, is some uptick of demand or some bottoming in that before significantly before the stock will bottom, or at least stop treading water. So we think the risk for Home Depot is still significant to the downside. And, we're going to have to see, I think we're going to have to see a significant period of time at these new interest rates before people wrap their heads around this and start, reconfiguring how much it costs to get into a house.
Earnings on the 25th. Yeah, that's another good catalyst. Maybe a little earnings run up.
Now, everybody already refinanced down to 3% or lower on their mortgage, and there's no way that they're going to just move unless they have to. And that, again, is always the impetus for why people start looking at Home Depot's products and services.
Yeah, so basically, Andy, investors, traders should start watching interest rates, right? Because until we see that, that 30-year fixed mortgage get down below maybe 5%, you'll probably see some blips up higher if it gets below 6%, but it's at 6.5% right now. So is that the impetus that is on investors and traders? Just, follow the debt market.
What's rising in June?
It's all going to be
You're just going to negate
related
all the deadlines we have in Chapter 11 this month.
In or out of a loan.
Yeah, I think so. I don't think interest rates necessarily have to move lower, but they have to stop
that
moving
gas kind of bouncing
and,
here.
Relatively speaking, from a home buying perspective, this move in interest rates and mortgage rates has been very, very sharp. And just like it put a lot of regional banks under, the speed of the move put a lot of regional banks under. It really hits the brakes on the housing market in terms of people's interest in selling what they have and trading up or sideways into something else. It's just gotten a lot more expensive really, really quickly.
Do you guys have an earnings score on this one going into the report?
Yeah, we're bearish on it. We've actually seen
Projected
deterioration.
profitability and possible performance.
Numbers will be fine because, like you said, analysts have moved that bar pretty low. The numbers they report will be fine, but
BBBYQ might be getting the fill here.
Come onto this call with a high level of optimism looking out into the rest of the year.
Yeah, it seems like with that analyst community has already lowered the bar so much. Expectations pretty muted going into this report. All right, great stuff as always, Andy. Appreciate it.
Thank you.
That's Andy Swan, co-founder at Like.
Stop looking at me, Swan.
We've seen some of these stocks pull back. We did have first quarter sales at Malibu Boats.
That's a gap fill.
Supply. I thought this was
we got to trade.
Because
oh my goodness,
1651. Sales, outdoor
nothing at 1650.
That Home Depot's like
I bet we'll get a little flush here.
Starting later. I mean, Chicago was busy this weekend, but it rained all weekend.
It's
you can't do any
1,000, 10,000
like that. And this is their big
from
sales
the gap fill.
quarter.
Remember, everything that Andy said is accurate, right? You can't argue with what he's saying. But I would, and I agree with. He doesn't. You don't need interest rates to go down. You need them to stabilize and stop going up, and then that queue that forms will come back into the housing market. The title of my trade today, if I could title it, put a title on it, is they don't ring a bell on the bottom.
Yeah.
Right. when this data starts to turn, this stock is going to be
12.5% on Fubo.
$60 off its high.
Oh yeah.
So it's not like
Upstart 16%, AI almost 20%.
So
it's $60 off its 52-week highs.
Yes.
Not its all-time high is $420.
Yes, I mean so it's significantly off its highs. Yeah, it's $60 off its 52-week highs.
Yeah.
So a lot of what Andy said, which is all accurate, it's in the stock. So if you see a firming or a little beat on some of the numbers, I think this stock could. Andy's data says you may not see it. But if you do, like I said, the minute you see that, Tom, this stock isn't going to be here. It's going to be significantly higher. So here's my they don't ring a bell on the bottom trade. It is the selling that, and by the way, look at the chart on this. Look at the 280 level on the chart. Really significant support there where the stock has just failed to break through.
I'd call it a gap fill.
I started my trade with selling the 280
within the margin of error
this week.
Okay.
Right? Then against it, use that credit, which is a nice chunky credit because you're inside the expected move and you're a $10 put vertical. I used some of that credit to buy the 300 call calendar, the 1 week. So you're taking in about $1.50. Now it's $1.55 credit, Tom. But this is one that unchanged or higher, it does well. Like I said, it does well. But even if you do have something negative, is it going to breach that 280 level?
Yeah, I got
There's
filled.
the real question. The genesis of this trade, in essence, is no matter what happens, it isn't going below 280.
Yeah.
I could either be right or really wrong.
Right, and that's what you want. You want it to grind up towards that 300.
Got an order for
strike you see here
1650. It
from the
didn't
risk
fill though.
profile. Let's break this four-legged spread down, complex spread down. Buying the May 26th weekly 300 strike call, selling the May 19th monthlies that expire this Friday, the same strike, 300 strike call. There's your 1 week wide call.
Well, same as he wrong, man.
Debit, right? But you're selling in the May
I have
19th
transactions for
weeklies, you're
1651.
selling the 280 put, buying the 270 put, so that's a big credit. That's as a package, $1.50 credit on that one. Takes your break even down under 279 at this point, where you can still remain profitable. Anything above that level will be profit, with the expectation that if you think it's going to jump that 1 standard deviation move, that $12 that they're pricing in, and maybe it's oversold, it's down 8% so far this year, this takes advantage of that $12 plus or minus move to the upside on this. You do have risk anywhere below that 270 levels where it maxes out on this one, because it's a $10 wide call vertical. You're collecting $1.50 credit. You got about $850 in risk down to those levels.
And there's a
but
green
good
candle
look
on
at
it.
Taking two different strategies, one neutral to bullish, one slightly bullish, creating this four-legged spread on that. Kevin, any final thoughts on this?
Tempted to get more right here.
Because typically when you do a four-legged spread like this, you're not getting a credit on it. So that benefits you. If this stock somehow rallies above 310, 320, you're still going to be profitable.
Almost a $13 move in the name, but my short strike on the put vertical is only about $8.50 below the market. Why? Because I brought the chart involved and looked at the support there around that 280 level.
Right, yeah, and that was support about a month ago. And we do have that $8 cushion from where it's currently trading to that break even on that one. But good look at complex trade there. And remember, you got some assignment risk on those short options into expiration this Friday. 11 days in the call calendar side of that strategy. All right. Let's take a quick break here. When we come back, we're going to take a look at Tesla, which is up about 35, 36% so far this year, despite the recent consolidation in the shares. And Musk said he's going to focus more on Tesla and not Twitter. Fast Market's coming right back.
Can it be that easy? Right there, 1652. Well, yeah, I mean, I hope that would. I see 1651 on here. Yeah, no, 652. That is a good fill so far. Line moving up. I think it might be ready to continue up to its pre-market highs. Head and shoulders end up not really playing out. Kind of a big cup and handle here. I guess that's what we were seeing, just the handle is much larger. Could go long in the breakout. There you go, there's a little gap fill confirmed on barbecue. 1630. In case there were any questions. Down 1.15%. Just sold this morning. Well, ran it out. Like to see a 15-cent bounce, if not before. SPY's breaking out. It's happening. New high of the day on SPY. Got a little ways to go to get back up to pre-market, so see if it makes it all the way back up there. There was a gap. Yeah, so now it's filled. There's a green. Tempted to pick some up here. I'm patient. If I do, it's probably something I'll sell in the morning. $4,110, $4,105. Put spread. Did you close it already? Because you had a nice opportunity this morning. Just opened. Oh, okay. On a daily. Well, yeah, either a false breakout here or you're going to be holding that thing for a bit. Because pre-market, we've got some higher levels. Not looking like a false break so far. See if it finds support. Back to that resistance. You might be in a false break. We'll see. Can close. Mark, you might just consolidate for a bit. You know, we might just trade in this range. I don't see like much momentum to the upside yet. And the downward momentum is slowed. I have to see kind of a break of some of these resistances or to flip. Still could be a good day trade, a good overnight trade. As we see morning liquidity or whatever happens in the morning, it pumps it, or midday. And then we get usually a dump sometime during the day to pick up more. Got slippage and high fees, though hard to get fills.
there's some headwinds for Tesla right now with what's going on, especially with the recalls around 1.1 million vehicles.
Elon Musk's quote, George, after hiring the new CEO is, obviously it allows me to devote more time to Tesla, which is exactly what I will be doing. You know, I like the fact that the Twitter CEO's expertise is in ad spending and
moving up.
advertising in general to get that off the ground.
Bounced off of that
George,
breakout.
when you look at Tesla, I remember when you own a small business and you lower prices and then you raise them again, which means either one of two things. The demand really spiked and you didn't need to have them that low. That's pretty good news. That looks like it's the case here with some of the demand in Tesla. That said, I think Tesla is completely dependent on China demand. So any hiccups, any mishaps in China are going to hurt this name. And if China goes smoothly, then this stock will outperform. Your thoughts?
My thoughts exactly. I think that's one of the key points to bring out, especially
still moving
looking
up.
at last quarter's earnings, where
New
sales
high
in
of the
that
day.
region of the country or region of the world were down 15%. It's really a Chinese story. I think there's a lot of competition in China right now. You know, I'm not saying this is the case.
I did. I
Perhaps
picked it up on Friday.
regulators are going after Tesla.
Picked some up here, and I picked some up at the end of the day.
Because of the recalls that were
Almost
placed
sold
on
this
1.1
morning,
million
but
Tesla vehicles.
I was
But you can't
too distracted with
discount,
my
I
other
think, the other
plays.
thing from a bullish perspective.
That's okay.
We've seen a lot
I
of
think we could still
artificial
rally today.
intelligence, which are secular
know.
technologies, really take off this year. Companies like NVIDIA, AMD have performed
But yeah,
well.
I mean, I was up
Google is
whatever,
performing well
10%
this year,
on
as
this
well as
morning, so that was
Microsoft
nice.
now. Tesla, again, you know, you have to think about
Position
autonomous
sizing I have,
vehicle
it's not bad.
technologies and energy storage. These are secular elements to their growth. That's one of the reasons why I think the bears have a challenge going against this stock. So I think right now we're in a tug-of-war situation. We're always in a tug-of-war. That's what makes a market. But I think if you look at the price action, I think 178 on the high side is going to be a barrier.
New high in the
162 on
day.
the low side looks like another barrier. So I'm looking to see looking for a break.
Not going to take a
either
long here.
direction,
Could
but I
be a
think China,
good
as you
long for
bring
sure,
up,
though.
Kevin,
It's
is an
a
extremely
nice
important
breakout.
market for Tesla.
All right, great stuff, George. Appreciate the rundown here on Tesla. That's George Tillis, Senior Markets Correspondent here, breaking down that news on Tesla. Kev, I think it's good that he can focus back on Tesla. You wonder about the demand, though, because it used to be a year ago you have to wait 4 to 6 months to get a Model 3. Now it's down to 2 or 3 weeks. They actually stopped taking, or they started return taking orders for its Model 3 long-range version because there wasn't a lot of demand out there. It's a dicey right here, I think, for this company, just based on the consumer, right?
Car business is tricky.
Yeah.
Even if you're not the new, the new shiny vehicle on the block. Listen, I think Elon Musk has figured out a way to navigate these markets. He, even in Twitter, let's even just take Twitter. He appoints a new CEO. Do you really think he's not going to be involved in Twitter?
Yeah.
Of course he is.
Yeah.
And he's going to be involved in SpaceX and the Boring Company and Tesla. He's still going to do all these things that he's done before. Listen, China was the reason that Tesla exploded on the upside. It was demand in China. So if I'm going to, focus somewhere, it's going to be China. Their growth, they're still growing. They're expanding factories. They're doing a lot of good things, but it's still going to be China, Tom.
Yeah, and they got the best margins in the space. But I looked at a strategy here, Kev. It's a don't be a hero type strategy. Using that baseball analogy we talk about sometimes, trying to hit a single or a double, but still giving yourself the benefit of the doubt as far as probabilities go. So we looked at out in the June cycle, monthly cycle, 32 days to expiration, just selling a simple $10 wide put vertical. Selling the 160 put, buying the 150, want to stay risk defined. As George mentioned, there's some support near that 162 level. You're collecting roughly, we've got $3 credit. The stock has moved a little bit higher. It's closer to 270 right now. But that credit that you take in on this type of spread is what you can make on it. Break even if you collect about $3, 157 to the downside. So you do have that cushion of about $10, $10 or $11 here, Kevin, to the downside. Your thoughts on, a neutral to bullish put vertical, collecting a decent amount of premium.
Archer, you just got an 800 strike
Yeah,
GME
it's a
call.
bullish spread. Make no mistake. The move out to June, which is 32 days, is about $21.
They even have 2045s on there?
You're about $8 below the
Seems a
market.
bit far out.
It's a high
Look at this
probability, but
SPY,
it's
dude.
61%. It's,
Huge wick up there.
less than we normally do. But if if you're bullish on Tesla in a passive way, this is a way to trade passively in Tesla. But Tom, a little more aggressive on the passive side. And the trade-off is that we talk about every day on this show. You collect a little more money, right? But you're still risk defined.
He's gonna do a great job.
But you're a little closer to at the money if there's any downturn. Now the chart, if in terms of 160, pretty solid around the 155.
There's been a lot of talk about protecting our right, the right to keep and bear the arms that we'll need for the fight.
30 days out, so things can happen, but you're risk defined, Tom.
Yep, I think that's key. No event risk because
Nighthawk picking up some
besides maybe delivering
barbecue
because of the fact that earnings has already passed on the April 19th on that one. So a good look at a neutral to bullish put vertical there in Tesla if you think it's going to remain above 160. All right, Kev, that's going to do it for you and I today here on Fast Market. But stick around right here on the TD Ameritrade Network. Next Gen Investing is coming up.
Big wick on SPY. Still going. Adeyemo, a U.S. default on obligations would likely raise the cost of borrowing. Congress shouldn't get paid until debt ceiling is addressed. If the U.S. defaults, millions in the U.S. could lose their jobs. Lawful crossings of migrants over the U.S.-Mexico border has topped 10,000 per day last week. The highest levels ever. Tesla to make significant investments in France at some point. U.S. continues to see indications Russia, Iran expanding unprecedented defense partnerships. SPY's ripping here. We're getting a GME push with it? No, not really at all. There's the next level I have on SPY, 412.81. But again, pre-market, we still have up till 413.50, so I don't think the party's over. Barbecue, it's green, it's filled the gap, and it bounced out of it a tiny bit, so we'll see. Iran providing Russia with one-way attack drones, including more than 400 since August. Michael Burry has updated his portfolio. No way. He bought banking stocks, FRC, which isn't even FRC anymore, it's FRCB. Now, did he buy it after it got delisted? He bought Wall. Pac West. Maybe this is what's giving some of these a pump today. Wells Fargo. Buys ripping. New York Community.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, to kick off this week, we are seeing some green. We're seeing that strength really led today by the Russell as well as the NASDAQ up almost 0.5%. So nice way to start off a week, as last week it felt like every single day we were pretty much unchanged, if not slightly lower.
Yeah, and we actually weathered a little bit of red this morning as well. So it's actually shaping up to be still a relatively quiet start to the week, but all things considered,
Yeah, SPY's
I think a
ripped
nice
out of that
start to the week,
breakout.
at least for equity market bulls. But as
Barbecue,
you said,
not
NASDAQ
bad.
100 just
Got
continues to
some
fluctuate
here.
off.
Dang,
And
man.
I would take quiet and slightly green over quiet and slightly lower.
Whoa, yeah,
like
look
we
at
saw all week long. But as always,
Barbecue
we'll
just
kick
flashed
things
up
off
6%.
here with our upvote and downvote segment. Following that, we'll
There's a
chart
couple
and trade
sales
with
there
our
for
upvotes. And our full discussion today is all things Microsoft, specifically regarding
Someone
its
did a
acquisition.
market
Blizzard
order or
deal, which
something.
was just approved by EU regulators.
4
We'll discuss
shares.
that story more coming up later on.
Those 4
Then
shares
we'll be
cost
looking at
$10 in
Western
commission,
Digital
so you're
spiking
paying,
on reports of a potential
I don't know,
merger for the company.
over $10
Last
a
but not
share.
least, under 30
No,
today,
you're paying
we'll
what,
look
like
at C3AI
$3,
jumping as much as
$2.50 a share?
3% after issuing some better than expected fourth quarter guidance, and that stock has been on an absolute tear this year, Alex.
Yeah, lots to get through. Microsoft's been a beast this year. C3AI, of course, with the stock ticker AI, with all the AI hype that we've got
All
going
these single
on.
shares, I really don't get it.
See that one doing pretty well.
Maybe it's
so
brokerages
far
just
this year as well, but let's
getting
get
their
to
fills.
Not endorsements, not recommendations. Couple heavy hitters,
Not necessarily
couple
single
pre-earnings looks.
orders.
Let's start with one of those heavy hitters. We got
Look at that SPY rejecting right on our line there, 412.81.
this stock making a nice move, nice start to the week, building on what's already been just like a rocket ship off the lows.
No kidding, and it's amazing to me to see even further upside
And
from
Fidelity's still down.
that shares are up 99% on the year. And Loop Capital today upgrading shares to buy from hold, but raising its price target more notably to 320 from 220, which implies about 35% upside, even on top of
I'll
that
pick
near
up some
100%
barbecue.
rally. So they do view the company's now expense rationalization as more of a one-time driver, and they've become increasingly positive on their overall revenue outlook. They highlighted 3 significant headwinds to their revenue, which includes Apple ad tracking changes, foreign exchange, and transition to Reels, which
Oh, the
means
gap
now
and it's
are all set to
bouncing.
become
I like all
tailwinds,
that.
actually. The firm estimates these pressures had around a mid-teens percentage
Shares I
headwind
might
to
sell
revenue
tomorrow, though.
growth that they now
Or
see
today.
completely dissipating and actually see as a positive, which I think it seems very unusual that your negatives would end up being your strengths here. But they did say, in addition to accelerating from comp normalization, Meta should see a really strong product-driven enhancement with its Advantage Plus, as well as its monetization of its Reels. So further upside from here, really optimistic note on Meta, Alex, but it seems like the analysts at this point are getting it a little bit late because we're now up 170% from our 52-week low. So to see now some even further upside, $320 a share, I mean, I'd love to see it, but are you a little bit late to the call here?
Only time will tell, but I'm with you, Jenny. Obviously, weathered the volatility, the downside through their hold rating, and now jumping in the buy camp after the stock's made what seems like a pretty tremendous recovery. And this chart illustrates. But if we were to zoom that out to a 3-year chart, of course, it's a little bit different picture given this stock just plummeted so much off its all-time high. But yeah, Rob Sanderson over at Loop Capital. Things stuck out to me, as you said, the optimism around Reels, talked about the product slate at Meta right now being as good as it's been in a long time. Definitely optimism exuded out of this report. And this is pretty much echoed across the street, Jenny. 49 buys, 9 holds, 4 sells amongst the Meta analysts. And of course, that average price target well above the current share price, but not 320. I'm seeing around 270 as an average. So Loop boosting that average here today, but we're going to say downvote for Meta. News is kind of out. No earnings to worry about for a little bit. We have a couple pre-earnings names here on this list, so no surprise. They're probably going to be the upvoted ones. But the next one is like the counteracting force of this Meta move from Loop. they talked
Fully?
about Alphabet as well.
No, in a
Fully
completely different
filled.
sentiment for Alphabet. Although not
This is
as
the way.
negative as the headline would perhaps make you think, we are seeing shares of Alphabet lower today, down about 0.7%.
You see some of it right there.
After Loop, on the other hand, did downgrade shares.
It's in
to
partial, I
ultra
bet,
high
partial
with an
fills.
unchanged price target of around
Oh, it doesn't break it down.
$125 a share, which does still imply
Oh,
upside.
it's only $4 commission on E-Trade for
Now,
these.
they did highlight that Google's event last week opened some
Not
eyes
bad.
to the company's strong position in AI, which is reflected in
I
an
wants to keep
11%
going here.
gain last week.
Full
However, the
flagging
firm
and
thinks that concern
flagging
over
and
whether
going.
Alphabet can maintain its dominant position through this massive technology transformation will hold back the stock's valuation. They consider their search
Start
competition from
18%.
Microsoft a lesser threat than the risk of displacement from behavioral change as users now interact more and more with AI assistants to
See,
sort of search
I might
online
go,
instead
might
of
not. I mean, we've
being
got
more
a double
traditional
doji here. It's at a
using
resistance.
Google's search engine. Loop does believe around the
Could be a good short here. You even have an
long-term
RSI
surrounding
from
AI
open
will now keep investors
divergence.
nervous on the landscape and put a ceiling
I'm patient on
their
it though. It's
overall
only 1 o'clock.
valuation. So really interesting note. Not that they don't believe in AI, not that they don't
I like
think
the
that
2:30
Alphabet
on
is one of the
trades.
stronger players in AI. They
Reversals
just
on
think
the
that
day.
it comes
If we
down
get
to
that, like we had
valuation,
yesterday, this
which
was an awesome
I have to agree.
trade.
This name's up 33% year to date.
Probably
We'll
won't get
talk
something
about
like this
them.
again,
They're
but
late to the AI arms race.
depends.
While
If
it's
we move all the way back up
perhaps,
to
I would say,
413,
lesser of the
very well can get a
two
move back down to
compared
like
Microsoft, but they're
412.
still, I mean, have seen a
413.50.
significant rally, up 40% from their 52-week low.
Yeah, this is a tough one because I echo a lot of this sentiment basically stated by this analyst in the sense that, look, I know the Bing conversation, the Chat GPT, all of a sudden Alphabet's Google isn't going to be what we're going to use to be through search, but I'm not seeing it anywhere. I haven't considered once going to Bing. And quite frankly, I haven't used Chat GPT or any of these chat bots at all. And so I think what they're alluding to, though, the same analyst here at Loop is in this, though, is over time, how we interact with these services and these technologies is going to change. And right now, Alphabet's driving so much ad revenue through its search engine, providing those ad dollars as, you know, you can basically spend to boost your results. Well, if AI is generating all of this, you know, what am I spending money on exactly? So that's always been more.
New high of the day there.
But again, gonna say downvote for Alphabet. I think
I'll start with this engulfing
analyst sentiment
candle.
is fair. The stock's done okay.
Looked like a head and shoulders, but then it had a huge rip.
Looking for some upside.
It is, and I think our next
That
name
was
is more
doubted in my only
interesting, and
queue.
that is
That's on that
On
support
Holding,
with
which
the
is
engulfing candle.
ON, not to be confused with On Semiconductor,
And then,
which
of course,
is
the
a very
breakout, and I said
different
I'd buy it, but
I did confuse
I'm
the
done
two
trading.
this morning, but they do have earnings tomorrow
Think
before the market
through the end
opens.
of the day.
And this is a company that's been on an absolute tear. This is a Swiss shoemaker. Went public back in September of 2021, and sales jumped 55% to more than $1 billion in 2022. They've been really seeing this boost in widespread adoption as the brand grows more popular among consumers. And this momentum has only continued. I mean, you see shares up now 95% this year, up 117% from their 52-week low. They've also averaged a 270% earnings growth over the past 4 quarters and an average 66% leap in their sales. So now for the current quarter, Zacks is estimating bottom line at about.
You guys been seeing all these articles about pickleball replacing Bed Bath & Beyonds?
On revenue around $411 million, which would also
And
suggest
Old
a
Navy's.
surge of nearly 62% on a year-over-year basis. So the first quarter performance is expected to have really been benefited from sales around the world. This is a company that doesn't only benefit from North American sales, especially
High of the day, 412.98.
and they're also expecting to see really robust DTC and wholesale sales likely to drive their top line. This is a name that if you
Thanks,
think
Jay.
you aren't
Appreciate it,
familiar
man.
with the shoe, I'd say search it because it's
Or
definitely
413
grown in
on
popularity. I feel like you
Les
see them now
Buy.
everywhere, especially the last
Got
time we talked about it. I feel like it was like
413.50
in my
to
brain, Alex, and I see
get to that
everyone wearing
pre-market
them. So
high.
they've definitely blown up. This is one of these companies I feel like has advertised very well on social media, and I think for that reason, it's reflected really in the year-to-date, in the 12-month chart, even up 66% over the last year.
Certainly, again, one of these companies that has utilized modern kind of decentralization and access to marketplaces like social media for advertising, and really kind of went around the traditional path where you go to the big department stores and really rely on that. So impressive what they've been able to do, way off the all-time highs, though, made back in November of 2021. So possibly a positive for bulls in this name, but obviously a growth company. If you're expected to put up 80%
Good to
growth
see
as a
our
shoe company,
kind of VWAP
you've
price price is higher than last or Friday.
Hope, considering it seems like
That sell off on
everyone I
Friday
know
and then
is
it
wearing them.
bounced and we had a
I'm little
VWAP
bit
of like
myself, but I feel like
1623.
we've talked about them enough.
They were
Maybe I
getting
need
a
to
little
get a pair.
step
But now
higher.
our next name today and our last name is Home Depot. Home Depot
Oh,
also has
that's a
earnings
good
tomorrow
sign.
before the market opens. Home Depot is typically seen as somewhat of a barometer for the health of U.S. households, but they are expecting earnings of around $3.48 per share on revenue of $35 billion. Both figures are expected to decline on a year-over-year basis.
1308.
And I was reading this really interesting note out of KeyBank that highlighted that their second quarter
1309.
home improvement contractor survey, which they said indicates
Or
stable near-term trends for
1317.
home
It's by
improvement
squeezing here.
professionals, but a slower growth rate, at least for the midterm.
Kind of want to
This
just
survey,
anticipate
which
the
did
short up here,
across
but
20 different
I
industries,
feel like I'm being
showed
greedy.
that 59% of respondents do expect
But yeah, I think
higher
we'll probably
revenues
get
in the near
a topping
term,
around
62% in the
413.50.
next year. But they also said that professional contractors survey do still tend to favor Home Depot versus Lowe's. But with Home Depot's earnings in view, KeyBank did reduce its first quarter comp
This must
and
be the
EPS
banks and stuff.
estimates due to this unfavorable weather we saw back in March and
I haven't
weaker
really been
spending
watching,
trends
but
among consumers. So
some of those
Home
ones
Depot
that Michael
has
Berry
been
picked up
fairly
have been ripping.
uneventful this year from a stock performance basis. It's down about 9%. It's down about 17%.
I bet he got FRC before it
It
got
is performing slightly
delisted.
worse in terms of its stock
Because
performance
his filings, he's
specifically
got all
than
this time
Lowe's,
between the
but
filings.
Lowe's also reports then next week,
And when he actually picks it
being the
up,
first
so
of the two
and even on the
retail
tweet
names
itself, at
reporting
least
here.
on Unusual Whales, it says FRC. So in the filing, if you looked at it, it probably says FRC and not FRCB.
Post Home Depot earnings.
I bet he got wrecked on this one so far. I mean, maybe it'll come back, but I took an 87% haircut when he bought it.
Is that actually the case?
There you go, right at the
they
413.50. Basically, we got a huge wick.
That's really been the story in retail. How can you manage cost pressure? The fact that some of these cases you're selling home improvement stuff.
So it is one way people trade SPY, and SPY moves. It just basically retraces the move it made in pre-market. So not always, but on a day like today, where at this high pre-market, you know, almost 0.5%, and then we sell off into open, and then it sells off here. Kind of gravitates towards back where it was pre-market. Some people just trade that push. That's their only TA is. SPY's here, pre-market was there, I'm trading it that way. Would work today. No, I haven't seen it. Robin, share it on Discord, I want to see. Just got super illiquid here on barbecue. Ever since we gap filled and jumped back up. Now we're getting intraday 5-minute gaps. Yes. I bet some of this push is from Michael Burry, honestly. %4 on GME.
Trend line going across the lows, a more shallow trend line going across the highs. Typically regarded as a bearish pattern, but what we're looking at really for this type of thing is a breakout in either direction beyond one of those two white lines. That would be the significant thing that could develop from something like this. We can see also that the ceiling that we established recently is around 34.50, this red dashed line. That's our best close that we had. We did make some intraday highs above that point, but really, the close is probably the more important metric to be keeping an eye on.
This breakout would have been a nice trade. It's just
I thought this was a pretty
risky playing the breakouts.
Indicator here, the way it's shaping up right now, because
Maybe
we've got
not. I don't
almost
know.
a descending triangle
Stop losses
type pattern
help
here. We've
mitigate
got
that risk.
a series of lower highs in the RSI, but not really going too far below the 56 mark here. So that would be helpful, first of all, for confirming that we're seeing slowing momentum in this name, where our highs are getting smaller. We're kind of just barely squeaking out these new highs as we go on. So it's kind of painting this picture of slowing momentum. And also it would help us confirm if we get a breakout in either direction, we'd want to look for a corresponding breakout in the RSI. So it's giving us some valuable information here. In terms of
he's good. I like it.
As I said, looking for our pattern here, we've got some support with our trend line, and then we've got our yellow 21-day EMA just below that, near the $32 mark. If we do fall beyond that point as well, I put standard deviation channels on our chart here to help us establish some idea of support and resistance. The +1 channel comes in right around the 31 mark or so.
Let T8 stuff.
31 to 32 could be a good spot to look for some.
Yeah, I just have a hard time
Since the stock was making new highs,
seeing it when the stock is going to
channel
move on.
Useful for helping us extrapolate when we might
fundamental
find some
catalyst, I
resistance if we
think.
get good earnings and we just kind of make our way up through this.
If we don't have any kind
size
of
that we
news
had.
until June, then
The
yeah,
+2
maybe it'll
channel comes in
bounce something
around
like
the
that.
$36 mark. So 32 perhaps to the downside, around 36 to the upside would be some good places for many traders to start looking for potential resistance.
Yeah, and Rick, I think ahead of this earnings event, we know this name trades with volatility, but pretty big expectations here as they are expected to post really sizable growth on a year-over-year basis. But like Alex said, still well off of those 2021 all-time highs. So when trading this name now, Alex, I think considering the feeling, generally speaking, among the analyst community and at least those that have been following the stock this year, is definitely leaning towards the bullish side of things.
Yeah, I think so. I mean, especially when you given the fact that this company's still growing, there's still optimism. They seem to be more and more places. You were just talking about how they're becoming more and more popular, anecdotally, even with friends and stuff. So all of this leads to maybe
breaking out right now, some volume.
on this, train alongside as opposed
7%.
to bet against. And so say you're in that camp. You want to buy.
You made 10% if you've sold barbecues this morning and bought them Friday.
Friday's expiration and the June expiration.
No, just kidding. This looks good.
37.5 strike. Call.
It's getting up pull from AI and their earnings.
Total risk is $60. Pretty straightforward here, Jenny. Market maker move on this one targets to a price just under a $4 move. And we have a $33.50 stock. So $4, $33.50 gets you to $37.50.
Creeping back up.
They're not guidelines. They're not targets. They're not limits. They're not bounds. They're just simply real-time option prices spitting out a probabilistic range for one standard deviation. Pretty straightforward, though. What we want to happen here, move towards that strike. That's the
I don't feel like it's any different than
like
another stock.
Every time, a couple things. One, it can be customized. You got a different opinion, different outlook. Move those strikes, change the expirations.
It just gets a little delay from this buy.
But more importantly,
yeah, there you go, GME.
Is you can overshoot it.
High of the day, plus 4.4%.
Less so about directional. kind of assessment. Not just bullish, not just bearish, but rather bullish to a point.
Yeah, and I think also now to switch
This little
gears
bull
here,
flag on the hourly.
that is also in retail, but seeing completely
I shouldn't have patience on my plays. They would have been up pretty good today with this move.
Depot. So Home Depot down about 0.5% today, lower on the year here, Rick. But Home Depot definitely seen it as more of an established player in the retail space. Very difficult to compare these two, but also for that reason we've seen.
But that said, too, I didn't see a big move coming. And
there's a
still not seeing it, so
in this name, I guess you could argue that
if it doesn't
we've
come,
been
I
making
don't
higher
really care to
lows
play
ever since all the
4%
way
days on
back here,
GME.
this point back near the yearly lows from September. We've been trending up from that point, but much like our last
coming
chart,
down,
the last
literally right at that
earnings event
resistance.
we had
So
changed things a bit here. We've been trending.
we'll see. I might grab a short if it be kind of another
giving
little
us
rally
kind
up
of
there.
a triangular type
I'm gonna
shape
wait, but yeah, I think we'll be looking
to
for a
contend
short.
with here as we weigh what's going on with this stock. We can see more recently we've just been kind of gyrating around the
Probably
volume
consolidate
profile
up here
point of
some.
control here, right around the 290 level.
Maybe even break out.
So,
We'll see.
kind
The
of
upside.
reflected in our RSI here that we've been just kind of
That's what I
moving
show
around
now.
this central point here. We are a little bit tilted toward the bearish side of the camp here, so you know, things are looking a little bit more tilted toward that direction.
Even barbecue and OTC makes bigger moves than
Moving
GME
averages that we follow are yellow 21-day, orange 63-day,
without even
purple
moving.
252-day exponential moving
Barber
averages,
coding.
as well as that volume profile point of control. The moving averages themselves sloping downward, diverging farther apart from each other, so looking a little bit more tilted toward the bearish side of things as we head into earnings, like I said here. And we can see in terms of support and resistance, first we've got our lower trend line here. That comes in, you know, right around this level, right around maybe 285 or so. Below that, 280 would be a mark to watch based on our recent lows from over here. If we are able to make our way above
Slowest breakout in history.
Points of resistance here in our moving averages. The top of the pattern.
Why not get another
seems like
entry?
it would
Come
be,
on.
the reasonable place to start looking for some resistance
Get
as
some
well.
buyers here,
However,
probably
one other thing to
412.81.
consider, our expected move for this week's option
here.
series is about 15.
Get a bounce.
15 plus 15 would take
They
us.
consolidate
at the time I did
and
this, would have
break to the
taken us
upside, or
about to our 252-day
bounce,
EMA.
double top.
To the downside, it would have taken us about.
Might grab the short
to
on the
our,
double top regardless.
Volume node right around here
Happens.
near 275. So we've got some kind of natural potential stopping points.
It's waiting.
Here
Yeah, it's waiting.
Trade this name.
This is
Still
unusual.
things to be excited about, Rick, but overall
For us
sentiment
being in a
is
bear
even more
market
bearish
and
here, but also
yeah,
this name has obviously
lots of
that higher
catalysts that
price
just keep it
tag
in this
at around
range.
$289
It's pretty
a share
slow in
right
the summer
now.
though.
Looking at it
Usually
a little
lighter
bit differently,
volume.
I'm imagining when trading a higher price tag stock, relatively speaking,
Sometimes
of
sells
course,
off in
to
May a
on.
bit.
But we will leave it there. Appreciate all of the insight as always, Rick Ducat, our chart master.
But
So
yeah,
how's been trading this
it's all
day now,
data dependent
considering the
and
fact
has
that
been.
Home Depot,
You know, same deal,
less
same
exciting this
just like it's
year,
been for like
but
2
still,
years.
I'd say more stable than some of the other retailers, and it's going to be, I'd say, a very busy week for all these retail companies. So
code.
considering they're first off here, walk us through what you're thinking in terms of a more neutral to bearish strategy.
Yeah, I think that's just the product mix. They're selling home improvement stuff. We know that there was so much demand pull forward into the years during and immediately following the pandemic. And quite frankly, just some of those items just aren't replaced as frequently. And so they borrowed growth from the future, and now they're comparing against some of those really steep levels in the early parts of even last year. And so looking at something a little bit more neutral to bearish, expecting potentially some disappointment here. If you're following that logic, and maybe you looked at a trade that would benefit from a muted reaction to the upside, selling a call vertical was what we looked at here. So going to the May monthly expiration, that is this Friday's expiration, selling the 302.5, buying the 305.5 call to define the risk. $2.50 wide spread, 50-cent credit. Max profit is $50, max loss is $200. Break even is 303. You find that by taking that 50-cent credit, adding it to the 302.5 call strike that you're short. In this illustration, that's how you get the break even. Illustration here, though, in the risk profile does a better job than I can explaining how this one performs. Stay out of the money. These options expire worthless. Keep the credit. If it breaches that, you see that break even, and then it levels off, of course, at max loss above 305. Rick talked about the entire week's market maker move basically being around 15. That target's around that 303 level. But of course, just the market maker move around this event is about 12.5. That target's around 300. So if it is a positive reaction, it's somewhat near expectations, there's still a chance that even by the end of the week, this still could be out of the money.
Yeah, and I think that's really well said. And also, two different ways to play is earnings that have earnings reports obviously tomorrow morning before the market opens. But also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk like unanticipated exercise or assignment. Now, coming up next, it's time for FOMO. So we are looking at all things Microsoft and that deal with Activision Blizzard perhaps clearing another hurdle for regulatory approval. We'll discuss more coming up next.
Here's the bounce on SPY. Net support. See if we get a little double top here. What happens now? Gary Gensler isn't currently weighing a stock short selling ban. Oh, we've been duped. This little head and shoulder. Am I forcing it? Could have just did a limit fill for right here at that resistance. Oh well. Whoa, big flush there on SPY. Get our bounce, so it looks like we'll probably just be in a range. See if we get a bounce on 412. Move back up, 412.26, maybe back up to 28 or 81. I kind of wanted that short entry. Oh well. Good, fine. GME double topping here. Upstart kind of broke out there some more. Fubo 13%, AI still 20. Barbecue 2.5. E91. Fidelity's still not working. Good morning. So, whoa, 130 flush. Man, should have grabbed that short up there. Wow, would have been good for the options, but that kind of volatility, you'd had a big percent gainer on that move. Little green candle here on this level. Let's see, Barkin was at 1230, so it's not him. It's just that 130 margin calls back.
I'm sorry, RAND, GOLD on the left side, and shares of AU, Barrick, in a very similar situation. But look at new NEM. Again, company we're talking about here today, you can see a little bit of a different posture relative to their exposure to some of the other metals that we're talking about. Again, silver, copper, not necessarily faring as well as what we've seen in shares of GOLD, a better reflection of what we're seeing in terms of the futures contract, again, /GC, but at risk of getting too confusing here, Jenny, definitely I think it's just
damn, man, we don't get that bounce.
That
entry would have been perfect. I literally have a line at it.
The ego on some of these individual miners in this instance, or
thanks, Ace. Appreciate the membership, man. Look at that flush, more flush on SPY down to VWAP.
So it's important to
it's hard to see these trades and not take them. We saw this breakout, saw this short.
Some of these individual companies, again, GOLD. AU, Barrick.
I'm following my rules though.
Yeah, and Ben, I think it's been very difficult actually to pinpoint some of these proxies, at least in the last several months. I mean,
thanks, Ace. Appreciate the membership,
Bitcoin,
man.
Gold. It's been difficult to find
very
their
kind of you.
Equals, sort of.
Oh, lava! Congratulations.
Volatility and also unknown in the commodity space as a whole.
Member once again, I think.
Appreciate
once
all
more.
the insight today, Ben Lichtenstein, the host of Futures. Now I'd like to bring back in Alex, and it's time for FOMO. So we are talking one of the largest stories of the day, I would say, Alex, and that is Microsoft winning this European antitrust approval here for its bid for, of course, Activision Blizzard. And we knew it was back, I believe it was just less than a month ago, end of April, we were talking about some hurdles they'd been facing in the UK.
Lords, many would say
we knew this story was not over, though, because
this is
a
squeeze from $4
right now that have
to
to
$30.
So it seems as though things have been
especially with the macro environments going on at that
the
time.
hope was not all
There's
lost
nothing like
after the
GMEs.
UK did not clear that hurdle, because
GME also had
today, and we are seeing
tons of frothy money floating around.
At least initially,
a bunch of new people had no idea what to do in the market.
Yeah, I guess in my mind, and I guess I can't speak for everyone, I don't
So
know how
gave it extra
much
push.
there was really true uncertainty about whether or not in the end this deal would get done in some
That said, I don't
capacity.
think either are necessarily short
that the
squeezes.
UK,
I think more just
regulators block
momentum
it, but
rallies.
to me, this is more of a
Gamma squeezes at
delay in
best.
how long it's taking situation. With interest rates not at zero anymore, say you were an Activision shareholder, for example, and you're holding on to those shares, waiting for that buyout price down the line. Well, the longer you wait, the longer that money could have been doing
Real nice,
something else.
nice predictable trading today on SPY.
And of course, the longer it drags on, potentially the more the uncertainty starts to build, that maybe it will fall through, and then you start to see some of that deal break,
I like these days for trading.
build up as well. But
much easier than just the
I look at this,
chop.
if you're Microsoft, like, quite frankly, obviously,
Even a day like yesterday, like this Friday was good. I just fought it so much. Never had
building on these
real retracements. So
and these developments that
Activision
Blizzard is making, and
open a short and hold day.
Regulators are kind of blocking this or in the way from it happening. The further out in the future that integration is going to be, and the further out in the future Microsoft being involved in this process is likely going to be. And so it's one of those situations where, especially for Activision, employees.
But see, there you have it. I mean, SPY retraced back to its high from pre-market. It's not usually quite that textbook, but this does happen pretty often.
What in the end does this look like? But for Microsoft, I know it sounds crazy, but $70 billion just isn't that much. And so whether or not this goes through or not, it's Microsoft we're talking about. We're not talking about a small company.
I know, and it's interesting because Microsoft.
Let me get some more barbecue. I like that this VWAP level's holding higher. Wonder if you're getting kind of sell off into close, or maybe even a rip.
It's such a small
We're pretty close from MACD flipping bullish on the hourly. We've got our green candle over the 9. One little rip into close, and we've got a bullish MACD and probably a higher support for the rest of this week.
Definitely the
or at least
positive
tomorrow,
development you want if you're
next few
Microsoft
days.
shareholders. And fueling this optimism that this deal will finally go through. I think at this point, everyone just wants this to be over and done with. We've been discussing this, Alex, for what feels like the better part of the last year, but we did get some of these concessions from Microsoft that will ensure rival companies will continue to have access to games developed by Activision, including their hugely popular Call of Duty franchise. The approval is conditional on full compliance with the commitments offered by Microsoft, was what the European Commission stated.
Yeah, barbecue at 1701,
fully
3% up.
the competition concerns identified by the Commission and represent a significant improvement for cloud gaming as compared to the current situation. So under these proposed remedies, Microsoft will now be offering a 10-year free license to European Economic Area consumers, which then enables them to stream all current and future Activision PC and console games through their preferred cloud gaming services. The license extends to EEA-based cloud game streaming providers and allows them to offer their users the ability to stream these Activision Blizzard games. This does offer a glimmer of hope that I also think
BlockFi is
if
going
you're
to
an
Chapter
Activision
11.
Blizzard shareholder right now and you've held on through these headwinds and tailwinds of this deal, because we also are seeing undoubtedly a nice reaction in those shares today. But I think, again, everyone just wants this deal to be over and done with. And I'm not surprised that Microsoft is making a lot of these concessions to appease these regulators, but also keep in mind that they still have to face the task of now persuading other regulators from key competitors, including Sony, as well as now the US FTC, the UK CMA. And I think that those are the next hurdles, because the UK back April 26th was the one that blocked this deal, but there are others.
Well, it might not bounce here. Looks,
I would say milestones
looks like it wants to kind of keep
accomplish
flushing.
here for this deal to go through. So while I would like to see this move along,
it's coming
I don't think
down.
we're quite there yet at all.
GME double topping. VWAP did come up quite a bit with the SPY move though. VWAP's 411.78.
If this happens and breaks down and doesn't go through, it could have a large impact on Activision shares. Activision is higher than when this deal was announced and hasn't had to have tremendous volatility like the rest of the market that lost half its value in places throughout 2022. Bear in mind, this whole time Activision's been a takeover play, and the stock's gone sideways, gone up and down a little bit as the deal has been delayed or blocked or uncertain. But we're talking about a stock that is higher and basically been flat for a year. This is what a lot of these other game makers look like during this time. So if you're starting to look at some of its competitors and where this stock could ultimately be, potentially if this breaks down, I don't know how it's higher. In the case of Activision. Microsoft, the stock doesn't even move on this news. Like, I just to be honest, like Microsoft's just so big, this just quite literally almost does not matter to Microsoft other than being annoying and making headlines.
Yeah, I do think that
barbecue 4%, 17.15. That VWAP. Kind of want more, but
working through this deal and
want to see some
to please all these
bullish momentum indicators.
Still positive development, no doubt about it. And I would say that when you're looking at Microsoft and you're looking at trading this name, it's difficult to not then buy into some of the hype that is all things AI, because they are obviously seen as that leader right now in the space, given their very large investment into OpenAI's ChatGPT. So that to me is more of the Microsoft story, Alex. When I look at this name, I think the FOMO feeling is to the upside just based off of all things AI.
Oh, Ace Ventura. That was fast.
This is one of
I thought you just became fire marshal again.
Alphabet,
Barbecue above VWAP.
To some extent, Tesla and Meta, but not quite.
Still can't log into Fidelity.
Everything. Apple's gone about it from being, the key device.
Try to get some recovery out of Fidelity for this. This is ridiculous.
Particularly in the U.S. Microsoft's done it by basically being in every corporate office in some capacity, being a huge cloud player, owning things like LinkedIn to get into sort of the social media space. So all of these companies are trying to do everything. So by owning a company like Activision, by investing in things like AI, they're just taking that one step forward. They're making the games now, not just providing you the way to play them. And so you start looking at that and you say, okay, this is how Microsoft's going to grow. They have these dominant core businesses, and then they're just going to make new core businesses. They're just going to make new core businesses.
It's fine. Make its way back to VWAP.
They basically can do anything for a consumer. And I can see why investors would be excited about that. That being said, the stock's been on a huge tear, Jenny, so you got to be a little bit cautious given the fact that it's had a nice run and, of course, has been in the front and center of the AI hype. So I looked at selling a put vertical. It's still bullish, but it's a little neutral as well, allowing for some potential breathing room here in these stock shares that have basically been meteoric when you really think about how much value this really is on a stock that has 7.5 billion shares outstanding, rather, to basically go up almost $100. You can do the math. That's a lot of billions created year to date. So looking at selling the 300, 295 June put vertical for $1 credit. Break even would be 299. It's 4-to-1 risk reward, so there is $400 in risk. It can make $100. This is one that's really just saying hold on to the gains, stay above 300. If you go higher, great. Go a little bit lower, that's okay. Just don't go below 300.
And of course, just ride really the range that we've been in. I mean, Microsoft has been an outperformer on the year. They gave up some of those initial gains, or I mean, not, to give up some of those gains is all relatively speaking, because we did see shares falter on the back of their earnings report. But still, all things considered, this name has really held on fairly well. Still up about 30% now for the year. So a name that has been relatively strong. Compare that to Activision, which is pretty much, I mean, up 3%. Less exciting to look at Activision, except for maybe today when shares are higher on this news. But that'll do it for our FOMO segment. Now, coming up next, we're looking at strength seen in Western Digital and perhaps some merger talks. We've been avoiding all things M&A, but it looks like the street is excited about what could be some M&A activity for Western Digital. We'll discuss more with Renita.
That's Jenny's favorite song. Dreams about it. Batman, did you stop out of your puts on SPX, or are you still holding those? That gas moving back up here a little bit. Barbecue above VWAP. Up 5%. 1734. Oh, I guess we did get a MACD crossover in the last 5 minutes. Alright, I like it. I'm gonna get some more. Oh, it was bullish. You were playing the breakout. Oh, put credit spread. I thought it was a debit spread. You just said spread. Nice. Did you sell those at the peak? Wait, you're still holding? What the heck? Dude, we ran up and hit perfectly on the resistance. From, like, we've hit so many times and a pre-market high. Why don't you sell them up here? Ace. Oh, fleshy on buy below VWAP. Second longest I've averaged down on. Ace, it's showing your wash sales. Waiting for it to expire worthless. Ah, I see. As long as you're playing going in, and you can't lose. No matter what, you can win with that. Just stick to it, and I bet it'll work out. I bet you'll be successful. You just stick to your plan. I got more barbecues, alls. Same. Oh, you got more there? Nice. On a little gap fill. I thought about it, but I mean, you heard I was sitting here. It wasn't a big difference, I guess. Kind of whatever. Just going slow. Credit spread is, they're both puts. Well, it could be calls. If it's a put credit spread, it's buying and selling puts. But your strikes, what you're selling and buying, gives you a net credit instead of a debit. So it's bullish. Because the credit you receive for the put that you're selling is greater than the debit you're paying for the put that you're buying. Different strikes. You bought IDX? It was supposed to have earnings today and they haven't come out? Looks like it's about to pop up though. IDX looks nice. Your VWAP looks like it wants to go. You were trying to play it through earnings? Sketchy, my man. Sketchy. Barbecue, whoa. Up and down. I'm gonna pick up more on this candle if I can. See if it'll fill me. Not getting filled. I got filled. Nice. Oh, partial. Ah, I just got a partial fill. 11. I only got 11 shares in that fill. Ah, we suck again. Buy meltdown below VWAP. Barbecue popped up. It's 5% now. 1734. I've averaged up too much. Somehow break even. How did I do that? Bought it here. Weird. More confident with it because they won't just stop filling Solisk. It goes into expert if you stop getting fills. What do you mean a stronger OTC stock? No ding. These are on E-Trade. I've already got my other account pretty much maxed out. I picked him up on Friday on that one. On a TD. So I'm just getting some on E-Trade here. I want to pull up, put a little bit in each account so each account can get the same love. And Chili's still down. Oh, you mean fundamentally strong? Yeah, I don't know. I don't follow a whole lot of OTC stocks. Yeah, no, those are good points. They're still filing. I know that's true. OTC stocks, like, they don't necessarily have to keep filing, huh? Yeah. I mean, it might turn out that this whole move to OTC was kind of planned. You know, I know it's been speculated, but we really don't know. fact that they are being so legit while they're in OTC is kind of interesting. Scams, yeah. I just kicking it, VWAP. Missed a nice short entry there. Oh well. Just trading at my mind and being right is good enough for me. Helps build confidence. No, I know it's sketchy stocks. Sketchy. They don't have to file stuff. They, yeah. Barbecue is looking good. I think it might want to pump today. Might still get a rally on it. I don't know. Up VWAP, I mean, gap filled. We filled yesterday. Yesterday we filled the gap. Today we had a little gap we filled. We're over the 9 moving average. Like I said, one little move back up to like 1790 or back up in that range above there. That MACD's gonna flip bullish on a little longer time frames. This little inverted head and shoulders now on it. SPY bouncing here on VWAP. Could maybe play the long side here, but if I didn't take that short, I'm definitely not taking this long. Yeah, barbecue is very strong. I mean, again, I don't have much experience in the OTC world, but I would imagine it's probably one of the best OTC stocks as far as fundamentals, retail sentiment, even liquidity, and exposure to, well, yeah, exposure to retail and the outside world. Even funds and institutions that maybe don't usually hold or trade in OTC, or maybe, you know, they might still be holding in here. I don't know. Where they normally wouldn't. Yep, Sears, Toys R Us, Blockbuster. So it goes to expert once they stop submitting filings. I thought OTC was just called expert market. Happy Money Monday to you, Daniel. That's a cream shabugi drop? What the heck? Shaboom. Hello, amigo. Life could be a dream.
So that might be one of the other reasons why the stock is higher today. But I think this is a
Fly
challenge.
bouncing on the WAP there.
Every stock is a challenge, but I think it's a challenge for both bulls and bears. One, if you look at the profitability profile, considering the stock price, $23.50, they're expected to lose 46 cents for the next few quarters. So overall, the losses are there, but I've seen worse, and that's one of the things you got to keep in mind. The other thing is look at what's happening with enterprise-based AI. Now, we talk about ChatGPT so much, but that's more of an open-based artificial intelligence platform. I think industrial and enterprise-based businesses are going to look for closed-end options, and these are closed-end secured options that C3AI provides the marketplace. We talk about Palantir. It's another one of these AI-based companies, but that one is still challenged from a profitability standpoint. Plus, its market cap is extremely large compared to C3AI, and I think C3AI, and I think that's why it's underperformed this particular name. But again, if their customer count can grow and they can actually demonstrate that their operating expenses are falling relative to the switch of their business model to more of a use it and pay for what you use model, which is a consumption-based model, that might be accretive to their forward guidance going forward post earnings when they report, like I said, on the 2nd of June. So this will be interesting to see. I can see why there's a lot of short interest in the stock, but I could also see why there's a bullish case for investors as well. So I'm going to have a hands-off approach to what happens with this one. But at the end of the day, look, we know that artificial intelligence is here to stay. And you have to think about, closed and secure-based AI platforms. Those are going to be in high demand, especially when you think about the industrial and enterprise-based businesses which want a closed-loop system.
George, super quick here. I'm not seeing tremendous amount of growth being priced in for the revenue, and obviously this company trades like it's got this crazy growth multiple. Is this more of a feature or a function of the fact that it's operating in this AI space where one major breakthrough could be worth so much that it's asymmetric to the upside rather than what they're actually doing? Is this, I don't want to say it's hype, but it's just because the one company that figures this out and does it the best, they're going to make so much money that it's worth this giant multiple.
Well, that's the thing. Here's the thing. I don't necessarily think it's a winner-take-all market for AI. You can actually see there's going to be a lot of major players in artificial intelligence. There will eventually be a winner-take-all in this particular space, and See-Through AI may be one of these companies that provides the value-added artificial intelligence technologies.
I'm moving up a little bit.
Industrial companies like Baker Hughes and across the board, even healthcare companies really want. And I think this is an interesting, dynamic. Timing is also paramount to companies like this. But I will say, looking at the earnings profile, they're expected to lose in Q3 of 2024.
Yeah, it looked like it was about to break out when you pointed out earlier. Oh yeah, there you go. Did the breakout out of VWAP.
They're expected to be profitable.
I may be making a little inverse head and shoulders here now.
Moving in the right direction, the stock price might actually continue to move in the right direction. All else equal, we have to think about the market conditions as well.
Yeah, and George, just a really fascinating chart, but I agree with you.
It's a little weird if they're supposed to have earnings that haven't come out yet.
On the sidelines a little bit because I just
think with the stock that's run up, it's important if they're late.
Sort of reset the valuation or expectations here, even though AI is obviously a very important space. But we will leave it there. Appreciate all of the insight, George Tillis, senior markets correspondent for the network.
Might trade this
for
too.
Alex and myself for Next Gen Investing.
And
Coming up next, we have the watch list with Nicole Petalides.
Yeah, you put a stop loss now. You're in the money. Put a little break-even stop loss or something. Make it a riskless trade. Somewhat riskless, I guess. Barbecue 1734 up 5%. Fidelity's still not working. Bouncing off VWAP 0.17 on it. GME holding up at 4% level. SMX 15.5. Microvision making a move today. Got 10.25 on that. That ain't bad. Almost 2 o'clock. SMX 16%. It can pop like 40% so fast. SPY moving up more. I'd actually like barbecue. I'll take gapping and stuff probably. That bounce on SPY. Could have taken it. 17, 15, 17, 10. Yeah, just trading right around VWAP now. Future land before new expert rule hit OTC. 0.00011 to 0.00017. What percentage is that? Select my roll to win, for sure. Yeah, no, it's a good roll. It's my daily cap. But yeah. No, I don't usually like to have profit caps. I wouldn't, but I have it in here and I've never stuck to it, so I thought maybe today I'd stick to it. A lot of it was because of that natural gas trade I'd open up on Sunday. But even if I didn't, I think the way I was playing SPY today, I could have also done equally successful. And easy to read for me today, at least. You traded with 50-minute delay? Bless your soul. That's awesome.
just kind of wait and see, let the dust settle. And when you patient has chemotherapy, it takes a while for that chemotherapy to take effect, and the effects may not be known until the third
You're
or fourth
comparing the
quarter.
stock market to
So
chemotherapy?
chill out, just wait and see what happens.
Well, and
Wow.
there's been a lot of positive comments that, you know, maybe it won't get worse than where we are, especially if we sort of pause where we are. Things are going in the right direction, but you're still seeing inflation rearing its head, particularly in goods and things as they came down. They're starting to creep back higher. I mean, used cars, for example, right? That would be something.
Right.
But if the Fed can take a break and say, look, this is the end of our tightening cycle, the worries, and this is what every Fed speaker speaks of, is that inflation comes right back and becomes really embedded in our economy. You know, and that's the danger to their credibility, right?
It is, but the Fed presidents are people too. They don't know what's going to happen. I listened to Chair President Austin Goolsbee this morning. You know, they're yes and no. They're just watching the data like
You don't use
all the rest of us
stop
are
losses
watching
on
the data.
OTC stuff, do
And I
you?
think when you look forward, the best solution with
You,
so
you
many
probably could
balls
on
up in the
barbecue. It's
air
liquid
the
enough,
year
but
before a political election, I think they almost need to kind of just
you see when they
take a
stop
wait
loss
and
hunt
see
too. It's,
attitude and wait and let this thing cycle through the system before making any major jumps, you know, to raise the rate even further than this, because of the,
wow,
of
that is
the
a big
banking
range.
crisis, of the realization that companies, we've got about $2.5 trillion with a T dollars of loans that are going to be coming due, leases that are coming due this
Balance on
summer.
SPY.
Companies are going to have to refinance
I
all
wanted
that
this
debt
short
at a much,
more than this long,
much
so
higher interest rate.
I still might do a trade today,
That's going
but
to
I'm glad that
really
the
hurt
day is burning
corporate
by and I
earnings.
haven't
I
burned
think
away my
personally
profits.
that the American consumer,
During the day,
because
not
of
your
what
profits.
corporations are going to be forced
In
to
volume,
do with
and
their refinancing of
break
debt,
out
is going to naturally be a softener for inflation moving down the road.
6% on it.
Personally,
Nice.
I think the
Nice.
Feds should change their target from 2 to 3%.
It just kind of wakes up out of nowhere.
Maybe be happy with 4% inflation.
Is that a nice support
It'd be
there?
interesting if they actually do that. They certainly stuck by their guns at the 2%, but I mean, that is food for thought, no doubt. The sentiment number, Michigan sentiment, showed folks feeling not too great and actually seeing inflation going forward over the next 5 years. That was a little bit troublesome, but I see where you're coming from. And also Bostic came out, because we have, what, more than 12 Fed speakers this week, came out and said, look, we've made good I think we've made good progress on inflation. And if you have a credit crunch and high rates and a slowing economy, that in itself could really slow everything down. Tell me about some of the other wild cards that you're watching. You know, the regional banks, are we done with that? Is that a wild card?
I think it definitely is a wild card. You see, banks have to keep so much money in reserve for depositors leaving the banks. So, you know, the fact that they're keeping a lot more liquid cash there for exits, for depositors putting their money in treasuries or even short-term contracts, that in itself tightens banks. They can't loan out as much money, and they frankly aren't going to make that much money when they do loan it out. The tightening standards in itself are going to slow down the crunch of, you know, Fed's raising rates over the last several months. We've heard that. Now, a lot of people are saying, you know, well, the FDIC, where they're going to back up everybody's deposits. But, you know, moving forward, I'm just not sure that's going to happen. But in another way, I feel if the Feds understand that the economy and the markets go hand in hand, that they got to protect the economy on one hand from run on banks, from corporate earnings declining so high, so far down, that's going to really, really slow things down to a point where inflation will naturally come down because people aren't going to afford those little luxuries in life. As we saw second quarter now, consumer staples much more prevalent than consumer discretionary was in the first quarter.
Yeah. At this point now, I mean, you do have Kevin McCarthy out saying he doesn't really see any sort of idea where they actually meet and think that this goes well. He said at this point now the debt ceiling crisis is, going forward. I was just reading a point, but they're not near actually seeing eye to eye just yet. That was basically what that headline said. In the meantime, what are you thinking about the market and what's your advice to investors?
Well, I think that the debt ceiling crisis will obviously get resolved. As I said on another network, I believe this is a lot of circus politics going on, a lot of wrangling, but it's going to be just as painful for the Democrats as it is the Republicans if they can't come to some agreement. We're not going to default on our debt. Believe me, that's not going to happen. But, some of the plays that we look at are obviously always understanding the time horizon of our clients, understanding that it's intermediate bonds, maybe triple B, double B bonds. You can nibble around that area, find some good choices there. And as always, value stocks have always created that natural cushion during inflationary times, understanding that the dividends and interest that we can get from our investments will allow us to have that staying power through what we're going through now with just the uncertainty of what's going on out there.
David Wright, great to see you. Thank you so much. Wright
Good to see you.
Group. Thank you. All right, later this hour, TEMA races and releases its new slate of thematic ETFs last week. We'll find out more about the luxury brand that's one's focused on that. Markets have been on a roller coaster ride this year. Theme park stocks in particular could be winners. The CFRA team will tell us why. And our panel will take a close look at those regional banks. Today we're seeing some up arrows. David Dietz is standing by. That's up next with a few stocks to watch. Even one of the regional banks you may like. Stay with us.
Pull it through expert and it's not on the queue yet? What do you mean? U.S. State Department aware of American charge of espionage in China. Oh, that was the new rule? I didn't realize that. I remember when they changed that though, I was holding Sears at the time. I didn't know what was happening. Oh, I just got scared and sold it. Retail can only buy a pink status on OTC. Yeah, it's for our protection. They know what's best for us. Trust them. They can decide to move themselves to expert? I see. Gas back at the high of the day. Spy the red candle there. Pretty big. If it closes down here, it'll be engulfing. So the bounce play wouldn't have been as good. That's why I didn't want to play that. Winding down, tightening up its range. Files frequently. They do have a lot of filings. AI, 22%. New high of the day. Same with GDC. No, not same with GDC. Upstart, making its way back to VWAP.
to. Meanwhile, of course, you've got a great dividend. You're trading about 10 times earnings. And what if inflation does get out of hand? One of the
Is there need for a buyer that urgent?
oil and gas and commodities and so forth. If volatility
I
gets
guess back at the high of the day. Let's see if it rejects up here.
to hold up better. So it's a defensive name, but I think it also provide double-digit total returns
Post it
going
for me.
forward.
Yeah, and as you say, it's an anti-ESG. I mean, they are doing so incredibly well, and as you said, moving into other areas too. But it's my understanding they really have been positioned for moving over to, more, zero carbon emissions and things like that. A different time in the future, so that they have been investing in that, and that they are a leader. All right, so we're going to leave it there.
Expert. Got it.
Those are 3 great names. Thank you, David Dietz. Good to see you. PPAC Private Wealth Management. Thanks, David. All right, coming up.
Maybe you don't have money because you've been buying things like barbecue boards.
Focused one. You'll want to hear all about it next.
The second chance of a lifetime. It's a second chance of a lifetime. Don't you think you'd be able to scrounge up some money for it? Fidelity, still not working. When were the little guys ever not great? Look at this daily candle. Good idea, Dink.
And we believe this is a secular trend that is only just starting. And if you just look at the amount of corporate announcements relating to new launches or new builds, it's really stunning. So we're really at the start of we think a longer term trend, and we're the first American reshoring ETF listed in the US today.
Yeah, I mean, at this point now, what are your expectations for this ETF? What kind of names go into this RSHO, American Reshoring? What do you tell people? Because they may say, hey, I'm interested. What do you say to sell it? And I don't say sell it in a bad way. I mean, sell it in a way that you explain it to them and they say, hey, I want to be a part of that.
Yeah, so if you look at like one of the key themes that's happening today, it is the relocation of supply chains, and this is the only ETF that really allows you to offer exposure to that in a concentrated way.
What do you
the
mean?
different companies in
AS
that,
of
you
1
have
to 10
industrials
billion.
companies, automation
Barbecue with
companies,
117 million.
power companies, transportation
That mean?
companies, logistics companies, ultimately companies that are involved directly in the process of reshoring that is already ongoing. In frankly, is accelerating. We believe this is a trend that's going to play out over many years. I think we've come out of an era when there was a huge, unprecedented amount of globalization. I think increasingly we're seeing pockets of deglobalization, and deglobalization is a key driver of this overall trend. And reshoring, again, it's also in the US seeing an unprecedented amount of government support through bills, through expenditure, through tax credits. So ultimately, I think this is a trend that is experiencing bipartisan support and is also resulting from what we believe is heightened global tensions and will continue for a while. In some cases, it's nearshoring, but increasingly we're seeing proper reshoring. And ultimately, the biggest beneficiary of that is American manufacturing and American industrialization.
SMX 18%.
Let's
Been a slow mover today.
something totally different. That is luxury. You have
Been nice though.
ETF. I say Lux is LUX is the symbol.
I don't want to wait for a pullback on this thing now and take it. It does have multi-day rallies. I mean,
what's the goal here?
not just a 40% pump and dump
so
usually.
luxury is interesting. Luxury is one of the fastest growing sectors today. It's proved to be remarkably resilient, in many ways actually counter-cyclical. I think that's a function of the diversification the luxury is created across geographies and income classes. So as US luxury consumption,
We get a VWAP move towards the end of day.
You see Asian luxury consumption picking up very strongly, and you see that reflected in earnings, but also in share prices. But what's interesting is that if you look at the combination of the growth profile and the valuations, luxury companies are actually not that ridiculously valued on a 5 to 10 year horizon. And I think there's a number of companies we can talk about specifically. So what luxury ETF does is focus on the best-in-class luxury companies. Because again, another common assumption about luxury is that all luxury companies perform in line. The reality is there's a huge dispersion between the different luxury companies. And that's why identifying the winners is really important, and that requires some skill, and that ultimately requires an active process. So you look at these 5 holdings, these are companies that historically over long periods of time compounded capital, have storied brands that are
liquid that thing is.
Exclusive, that are growing, and ultimately are key and central mind to the luxury consumer. But this is the first luxury ETF in the US, which is also interesting given a lot of luxury companies are not listed in the US. They're listed in France or other parts of Europe, and therefore quite inaccessible to everyday investors in the US. So we think the luxury ETF, again, is the first of its kind. It's focused really on the winners in luxury. And if you were to buy an index in luxury, you'd buy all kinds of other exposure like Tesla, like Nike, like Apple, great companies, but not luxury companies. This is a real pure play focused luxury exposure. And we think it's probably one of the most defensive, resilient parts of the overall consumer space.
I see. So the resiliency is something that you like. I mean, overall, you talked about some of the fund flows before I get to your last one. Fund flows pertaining to ETFs, you're seeing money going into ETFs, right?
Correct. So I think you're starting to see obviously a growing adoption of ETFs, especially on the active side. In our views, that luxury is an example of an industry which people think you can capture through an index, but actually you can't. And the reason for that is because of the dispersion of returns between luxury companies. Where you have obviously winners, but you also have a material number of losers, which is not what you'd expect, but ultimately an index would capture both. So we think luxury is a multi-decade trend. We think that it's ultimately it's done very well, but it continues to do well. And I think the growth drivers are both price and volume, which is different from other consumer industries where there's only one of those two drivers. And I think ultimately we see a very long runway for these brands, for these companies across different geographies where they're looking to engage with consumers who share that desirability for exclusive, storied, crafted luxury goods.
Yeah. And then we always think about monopolies and oligopolies as obviously how they lead. Tell me a little bit about the ETF TOLL.
Yeah, so what the TOL ETF is about is basically buying best-in-class businesses that have a monopolistic or oligopolistic market position. And that can really extend often to industries such as in the financial services space, like in stock exchanges, rating agencies, but also in the infrastructure space, also in the cell phone tower space, but also in the medical equipment space,
and barbecue.
on the chip manufacturing space. And in many ways, we think of this as an extension of wide moat. And these, in many cases, are even wider
How long
than
that? There's certain deadlines. All sorts of deadlines.
So if you look at like railway lines
For different parts of Chapter 11.
Aerospace
There's a
infrastructure
nice,
suppliers, manufacturers are
nice write up on Discord under Happy DD. All the dates.
Entry are very high. There's an important regulatory
May 16th, May 22nd, May 28th, May 31st, June 2nd, June 5th, June 7th, June 9th, June 13th, June 18th,
to replicate. So when we think about
June
the defensibility
25th.
of the business combined with the quality of the business,
Is this the one that got pushed back to end of May?
we think these are really attractive, appealing businesses to get exposure to, and ultimately
You guys were talking
best,
about?
widest moat ETF that's out there today.
Yeah. You know, I was expecting to see maybe a few more tech names in the top holdings. I didn't necessarily see that. I saw Rails and a few of the other things, which makes sense. Is tech interesting to you?
Sure.
Tech is very interesting, but our view is that the
Jump under Discord, look at Happy DD.
businesses
Roll
are
up.
less storied and less
Dates.
tested than investors maybe thought 24, 36 months ago during the height of the tech boom. We think these are very quality businesses, but I think we've also seen a surprising amount of disruption.
So far, I haven't seen any evidence that
more mature
they've
tech
extended
businesses.
any timelines,
And that's why
like
we're
what we
quite
heard.
careful about thinking about technology from a
1725 barbecue, just above VWAP now.
There are a number of clear oligopolies and monopolies in the technology space, Alphabet being one. But I think there's also a number of questions in the way regulation potentially has affected those business models shorter term. And that's why we're more cautious about offering a lot of tech exposure through the total monopolies ETF. I think ultimately a lot of ETFs already offer a lot of tech exposure. So in the interest of offering something that is pure but also a bit more diversified, we think that this is a more differentiated offering. And frankly, this is focused on the kinds of monopolies that other products will not focus on. So we do not focus
Eye
on general
bouncing.
consumer businesses. For us,
It does look like it wants to do something.
Infrastructure and moat is a very important differentiator when we think about the monopolies
Bubble
ETF.
volume pump there.
Good to see you, Moritz Pot. Thank you so much of Tema ETF.
Yeah, I'd be down with a
Thanks for
bounce
having me.
back up
Good to see you tonight.
to this range up here where we were last week.
Still ahead in the second half of our show.
I get that before end of
This
day.
is cool. Roller coasters, theme parks. So this has been the roller coaster ride as we're watching some of the regional banks too. So we have our next guest who
And Dave
actually
Mai.
likes these names, has some buy ratings in some of these names. You'll want to hear more about it.
And my okay. AI 21%. Oh, my face looks like it wants to wake up. GME still flat after this rally. It's up 3.73%, 2146.
Even that has been a little bit volatile.
Yeah, I mean, I'd like to talk treasuries for sure. In terms of the indices, you just pointed to kind of the mixed bag, the wild card, I think you described it as. And it seems to me, Nicole, recently news headlines have provided more questions really than they've answered, and I think the market's kind of reflection of that. Even today, 3 of the 4 majors in positive territory. The real only one of the 4 that's seen any real conviction is the Russell today on the intraday basis, up over 1%. You mentioned the NASDAQ shining a bright star, I think it was you referred to it as, but not quite as bright as, again, small caps, which have been on the move higher today. Now, we did hear from a couple Fed officials. We heard from Raphael Bostic, Atlanta Fed president. He talked about how we may have to go up on rates, that there's been progress on inflation. He thinks the economy is going to work in our favor on inflation, but kind of talking a little bit out of both sides of his mouth in some ways, and again, not really providing a clear direction or conviction one way or the other. Similar situation in terms of the Fed Goolsbee talking about how for a rate hike was a close call in terms of the last meeting, and we also heard from Neil Kashkari, Minneapolis Fed president. He said that at the Federal Reserve, they feel like they probably have more work to do on their end to try and bring inflation down. Labor market's still hot, and they have not seen much softening in labor, so that tells them that they have a long way to go before getting inflation back down. So I'm looking at 3 of the 4 majors. The Russell's the only one of the 4 that was able to get out of the range from Friday, so still very much contained and kind of range bound on an intraday basis, and we've been talking for weeks now about how we're contained and range bound on that bigger picture, right? You've got the S&P's 4,300 down to 35, and although at 4150, we're kind of through the middle of that range, not really breaking out by any means one way or the other at this point, as a market here that's still kind of looking for more information.
Right, and that we shouldn't be fooled by a few good months of data, said Kashkari. Tell me about the rates and the environment, and what is it that triggers people one way or the other? What are you watching?
You know, also much like the indices, very much a contained environment, Nicole. You've got the 10-year, which is hanging out right around 3.5%. This has been a level where we found comfort in for the most part, well off those highs that we saw October. 10-year, the 30 around 3.8. And I'm noticing the 5-year just below 3.5%. Now, keeping an eye on the 2-year because it's starting to inch its way back up to that 4% level at 3.94. I noticed bonds today coming off. I think it was 6 of the last 8 have been to the downside. Ultimately, working their way towards this lower extreme range that we've been in since April in terms of the future. So keep an eye on yields this week. Inching their way back up, but again, relatively contained and not at concerning levels. I think that's been somewhat supportive of what we were just talking about in terms of the NASDAQ, for example, holding above the Feb highs, the real bright star in many ways in terms of the indices. But there's a lot going on here to keep an eye on in terms of the debt ceiling this week. We've got eco data with the focus, I think, mostly on the consumer, how they're faring in this higher rate environment, but obviously earnings as well. Just the start to kind of a slow week here again, Nicole, with multiple focal points, but not a lot of answers for investors and traders this Monday.
Right, understood. Thank you for that. Ben Lichtenstein, good to see you. Thank you. All right. All right, who likes a roller coaster ride? Well, maybe you like a trip to the theme park or not. Zach Waring is with us, equity analyst at CFRA. And it looks like you really like this group. You published a note recently. Tell us more about it.
Yeah, thanks for having me, Nicole. So we like the theme park group here. We think valuations are pretty fair, especially if we don't go into a deep recession. Theme park operators have seen, sky high revenues, record revenues and profits over the last year and a half. As consumers got back out and spent on, experiences and entertainment. And we think as long as, there's not a deep recession, that these are pretty fairly valued here.
Yeah, I know you have buy ratings on so many of these. I mean, and I'm not sure that everybody fully understands the you know, they say Disney, and do they understand that there's theme parks? When you say Six Flags, I mean, I think that's more obvious, but Comcast, I mean, not everybody understands the theme park side of things because not everybody's been to these. They don't even know they exist, maybe.
Yeah, so you've got, we cover 3 pure play theme parks. So you've got Six Flags, SeaWorld, and Cedar Fair. And then you've got some of the bigger conglomerates, like you said, Comcast owns NBC Universal and Disney. They have different businesses. But when it comes to theme parks, you know, the pure plays they're pretty inexpensive compared to 2019 levels. So, you know, a lot of these multiples have compressed as investors are bracing for a potential recession that, you know, we're just not sure that that's going to come. So, you know, even if there's a slight, you know, slowdown over the next year and a half, I mean, we think valuations are pretty cheap.
And people are willing to pay the costs. I mean, sometimes, for example, with the casinos, and I'm not saying they're the same, but I think it just shows spending habits. When people want to go, they're at the casinos, they're paying for the hotel, and they're paying more in the restaurants and the experiences and things like that. Are you seeing some of the same here? Even with the selective consumer, they're saying, hey, this is where I do want to spend my money.
Yeah, that's exactly right. So attendance is actually down compared to 2019 levels at these parks. But, you know, total revenue per capita is a measurement or metric that these companies use. And it's up 10 to 11% annually since 2018, with significant growth in 2021 and 2022, you know, as these consumers had significant savings and that demand, you know, popped back. So, you know, these metrics are at all-time highs for these companies. And even though attendance is still slightly below 2019 levels, you know, it's driving record revenues and profits for most of these companies.
Yeah. I mean, there's everything that comes into play. You know, supply chain got better, the labor picture got better. You know, there's some things that have certainly improved, even using AI.
Spy moving up more here.
Businesses, you know, cost cutting and things like that. Among these names,
Back to that resistance from earlier.
in some cases, they're passing costs along to the consumer, and we've seen that with different companies. Of these names that you do like and you're positive on, is one more of a standout to you than the others?
Yeah, so we really like 2 names. We like, you know, SeaWorld and Six Flags. So SeaWorld since 2018 has seen operating margins expand from, you know, 13 to 14%, all the way up to 30% in 2022. And they've done that through becoming a more premium park experience. So they're not discounting as much, and they've seen obviously those operating metrics like total revenue per capita go up. And it's across the board. It's admissions, tickets are costing more, and in-park spending is also up. And then Six Flags is more of a future turnaround story. So, you know, last year they pivoted away from discounting tickets, and they wanted to become a more premium park experience as well. And you're starting to see the early effects of that in their Q1 and Q4 earnings reports. And so we really like both of those names. We think Six Flags is kind of a future turnaround story,
And rejected that. Literally right at that line.
Has done a lot of the heavy work, and they've got operating margins where they want them.
Yeah, barbecue is a little green candle there. 1721, 0.37%.
The group bookings are on the rise, so that they're running well ahead of 2022 according to the company. So that was some good news. And I even saw different things like interactive experiences, and those, I mean, you could charge almost anything you want. Get a kiss by a sea lion. I mean, people, that's priceless. Zach Waring, any final thoughts?
No, we just like the theme parks as a whole. You know, Disney and Comcast, obviously they're a conglomerate, so there's other things that you have to take into account. But
LMFA probably going to move the view up here.
Thrive, especially for this summer. There's no real slowdown that we've seen in Q1 or in early, Q2.
Might make a little day trade on it.
We think the summer will be strong, and we like the names here.
All right, Zach Waring, great to
That's
see
10%.
you of CFRA. Thank you so much.
Yeah.
Thanks, that was great. Still ahead, we'll bring in our panel to talk about a different sector, and this one is experiencing turbulence, volatility. Looking good today, though, because you see up arrows, right? Look at Western Alliance up 14%, PacWest up almost 10%. The regional banks next.
do it. I'm in.
Many traders may be willing to
Bought on
take
the pop.
additional risk in pursuit of aggressive growth.
I'll sell it VWAP.
More power to them. But if you
I was trying to get an order on a low, but it didn't pop, so I had to put in a higher order. Yeah, once I saw 10% there, I'm like, sure. I wasn't able to get the 10% fill though. I might like be like 9%. This actually might be a nice hold. This was from earnings too, I forgot. Let's see. Maybe take my cost out of it at VWAP. I kind of double topping here with the resistance rejection. The tight spread, I could have just market ordered. I was trying to limit and get it at the bid. Oh, I missed the meaning of that pop. Yeah, it's fine. Coming down now.
Right now, we have David Chiavarini, Managing Director, Equity Research at Wedbush, and Octavio Morenzi, CEO of Optimus, here with me on set at the New York Stock Exchange. Thank you both for being here. Octavio, I'll start with you. You know, they say, is another shoe going to drop? Or if you ask Elon Musk, another anvil to drop? Or is it sort of contained at this point?
I don't think fundamentally anything has really changed. So we saw a lot of these banks come under really tremendous pressure. We saw this big increase in interest rates has basically, I wouldn't say destroyed their balance sheet, but put a lot of pressure on the balance sheet. There's still got lots of deposits which are a huge liability for them, which have not reduced in value. At the same time, their assets, investments in securities, and their loan portfolio as well have actually declined quite considerably in terms of their value. And that's a problem. And that has not gone away. And so the only way to undo that would be for the Fed now to massively lower interest rates. And I don't think they're about to do that.
Right. I mean, basically, they got all these deposits, and then they were using them. And as rates started to go higher here, David, they were pulling money out. People started pulling money out, and we saw that even last week, right? Of late, we're starting to still see nobody's putting money in. They're still pulling it out. David?
Yeah, it's an unfortunate backdrop for the banks because
like
of, as you know,
rejection on
higher
the
rates.
dollar.
We're competing, and the banks are competing not only with each other but with
That's
money
$1
market
too.
funds. So, as we saw with PacWest,
It'll make
they
it.
said how their deposit level, declined 10% that week that First Republic was sold to JP Morgan. So deposits are, the foundation that banks are built on. And if you don't have that foundation, their business models, come under stress. And I'm not expecting that to really change in the near term. In fact, I'm expecting the deposit competition to continue to intensify in coming quarters.
And that's the whole thing, too. As you talk to, there is no alternative, and people would go to stocks. Now people had money thinking they were safe in these deposits. And the truth of the matter is, when they started to see money market funds moving up 4 or 5%, they said, hey, I'm going to do that. Octavio, at this point now, are some better positioned than others? I mean, we saw the disappearance of several banks. SVB, actually, the head of SVB is going to come out with some sort of mea culpa, I believe. But, we've had to have takeovers, and we've already seen a couple of the biggest bank failures now.
Absolutely. I don't think that's about to change. I think we're going to see the same pressures and it's going to continue for some time to come. What makes for a lot of uncertainty is that these banks' financial statements are really inscrutable and very difficult to read. So the fact, for example, we can see deposits coming in and out. That's quite clear.
Right.
But we can't really see unrealized losses on their securities and unrealized losses, more importantly, I think, on their loan portfolios, because that seems to be something that people forget frequently as well. As interest rates go up, the value of their loan portfolios goes down as well. So if they were forced to sell off their loans to someone else, they'd get much less money for that. It's really hard to read.
Went up on Power Hour today, flew by.
I mean, we can't just have big money center banks, right? Can we?
I think the US could survive fine with 4 or 5 big banks. I don't see a particular problem. I mean, there's thousands of little banks. You have to ask yourself, why do we need all those little banks all over the place?
And so that's the whole idea, too, that we may see more mergers and acquisitions. David, what are your thoughts there? We have regional banks. We even have community banks.
Yeah, I would agree that do we need 4,000 of them? Probably not. I mean, we've been on a downtrend for the past 4 decades, going from 14,000 down to 4 now. And I expect that trend to continue and perhaps even accelerate in the aftermath of this crisis. Now, I'm not expecting that consolidation in the very near term, but I think over 12, 18, 24 months, we may see it. But in the very near term, the crisis needs to kind of play itself out, and any potential acquirers are going to wait for a better deal for any banks that do find themselves in hot water and end up closing. They'll get a better deal through an FDIC-assisted deal, but I am expecting consolidation to pick up.
Tell me about some of the calls that you have here. I see a lot of neutrals,
LXEH.
underperform for SoFi. Tell me
Chinese.
why neutrals, why underperform, why not something else?
Chinese holding company.
Yes,
education.
the main thing that we've been looking at, especially in this type of
education pumping.
is related to
Where are
insured
you,
deposit
SF
level
Florida?
versus uninsured deposit level. The fair value marks, both on the loans and securities, we want to make sure that there is
Florida.
decent tangible book value in place. If in a very remote chance that we do see bank runs, we want to make sure that there's value there. And then just stability overall with their credit quality. And so far, fortunately, credit quality has been very strong for the banking group. But looking out 12 to 18 months, we are expecting credit quality to deteriorate, particularly in commercial real estate. So some of the names that we like, New York Community Bank, they were a beneficiary of a recent FDIC-assisted deal in acquiring certain assets and the deposits from Signature Bank. That's supposed to be 20% accretive to EPS, 20% accretive to tangible book value, and we think that there's opportunity for them to improve on those numbers through lower expenses than what they've projected. Western Alliance is one that we also like. On the long side, it's gotten beaten up, but they've kind of turned the tide with their deposit outflows, where they've seen a couple billion of inflows since quarter end.
Yeah. David Chiavarini, thank you so much of Wedbush. Thanks for being with us. Octavio Morenzi, always great to have you on. I mean, when I said, is this crisis over? You say, not by a long shot. Thank you for being here. It's great to see both of Optimums. All right, that's going to do it for us here on the watch list. Thanks for being with me. I'm Nicole Pedalides. Appreciate that you're here. See you tomorrow. Market on Close is next.
Barbecue. Moving up a little bit. Of BWAP 1760. There it goes. Little bit up. 6.7%. Content with my overnight hold. At about 60,000. $17.69, 7.25. What happens at $17.90 on barbecue? Blow back through there and find a support. A nice stepping stone for tomorrow. LMFA wants it. I think we'll. Hope it gets VWAP. Don't you die on me. Don't you go dying on me. Barbecue, 7.25. Get that MACD bullish on the hourly. Got 1 hour to go. LFA coming back down to the breakout resistance right here, or rather this resistance for support, hopefully. And next move up, $1.09. Barbecue 17.90. Kind of a rough area for resistance on it. Not too well defined. So very well could be higher, like 18.11. That low. That is the high from right there.
Comes to the Russell, it's essentially a regional bank story for the most part, where volatility in that sector determines the relative strength of the Russell on a day-to-day basis. Regional banks are up 3% right now, and that helps the Russell out, with small caps bouncing at 1%. Still not much impressive happening on the regional bank chart, but of course, any progress is welcome with the group higher here. We've got the dollar down, as gold's flat, crude's stuck at 70 bucks, and the VIX remains below 18, while Bitcoin holds the 27.5 level that I've been watching in the very short term. So there really is just a pretty calm market. There's that 27.5 for Bitcoin that it slipped through on Friday. We see the opposite of that now on the flip side, still hovering and holding on to this, I think, key level. Somewhere between 27 and 29-ish or so is where Bitcoin has found a floor. Maybe a little closer. Maybe I should push up my line a little bit, make it about 27.5 probably. Because to the upside, there is the formidable 30,000, in which Bitcoin's been rejected multiple instances now. And since the push higher that we see right in the middle of the chart there in March, we've now essentially kind of carved out
Barbecue.
Pretty much where we're at right now.
17.32, 5%. Yeah, we had a little push there.
When we are
I was gonna keep going.
Risk regimes, so watch it very carefully. It is at the top of my list for that reason.
Hour now.
Let's check out a few other things that are moving, and that do generally fit along. Today is, for the most part, a pretty direct story. Just have a little bit of risk on in some of the higher beta categories. Quite literally, the
Fidelity has been down all day.
Best factor performing.
Definitely some recourse for this.
By a fair amount today, 1.5%, while a lot of other stuff in this market is flat or little changed. The high beta trade is working well. That makes sense when the dollar's down. So that relationship generally hold. We've talked a lot about the dollar here over the past couple weeks. The fact that it has been able to hold its year lows despite the Fed supposedly going to cut later this year. The narrative that a lot of investors have been talking about with the Fed might be breaking down a bit if that dollar continues to rise. But today is not the day, so just more things to keep on your radar. I would also argue gold should probably be at the top of the list too. Any macro chart, gold, bonds, dollar, Bitcoin, stock indexes, right now that are actually trending in a very clear direction like gold is deserve our attention. There's a lot of sideways stuff. The S&P is sideways. The VIX even is kind of sideways now. You've got the NASDAQ pushing higher, but our priority being the S&P 500's broader gauge. And then Bitcoin going sideways. But gold, arguably still trending higher because we just recently put in a new high for gold just about a week ago. That was when we came into this month. So gold's still arguably trending higher, and it has been a pretty good catch-all trade. Preserved your capital last year when inflation eroded pretty much everything else and crashed the stock market. And then this year, as stocks have come back and we've had this resurgence of growth tech alongside a disinflationary narrative, gold has worked as well. Really, the scenario in which gold's upside likely stops is if the market starts repricing for Fed hikes. Many people see that as a low probability event right now. That's probably why gold is still so solid. But just like the dollar, watch on the margin, alongside Bitcoin too, for any changes in gold. So just monitoring a few things here that don't have any conclusion just yet, but are getting kind of interesting. We do have a lot of Fed speak this week, so potentially any disruptive language from the central bank that pushes back on cuts later this year, that could be the type of thing that pushes the dollar higher, lets gold come in a little bit. So we'll be keeping track of that very closely. Also just want to point out, on these high beta days where Bitcoin's up, the high beta fund is up, and the dollar's down, your strength in some of the quality companies is actually a little bit slower. QUAL, that quality ETF, has been one of the best performing ETFs on the year, thanks to companies like Apple. I just want to point out that also now kind of stalling after its big earnings rip, Apple too, having trouble getting through 175. A lot of stalemate in this market right now. We'll keep tabs on it very closely, of course. Let's talk some stock stories and what's on the calendar here over the next couple days as well. Kevin Hanks and Renita Young joining me here this afternoon.
Fed speech.
Things off. Kev, there is so much stalemate in this market. We talk a little bit about some of the macro themes.
We've got different Fed speakers.
Fed speakers this
we had
week
Kashkari today,
so far, not causing any
Bostic, I think.
disruption.
Tomorrow we have
we're kind of just getting warmed
Barr
up on that front.
testifying.
Yeah, exactly. There's so many,
And
including
then
the
Barkin
highlight,
and
which
Williams
will be Jerome Powell and
also.
Ben Bernanke on Friday.
Yeah, that's cool.
Oliver, you got to think some are going to take a different tack than others.
Yeah, and then Powell we have on Friday.
When I read the list, they all don't want to come out and say the exact same thing. Austin Goolsbee, a little more dovish. Raphael Bostic was out this morning. He was a little more firm and hawkish. I think as long as they stay within a range.
We're going to jump into some SPY loans for that last
outlandish
5 to 30 minute pump.
Breaking new ground. I think, like you and I talked about this morning, the Russell is quiet and higher
futures.
and strong.
Yes,
and
futures.
I think that's giving the rest of the market a little bit of confidence here. Not a ton, right? I mean, the
just sitting on my LMFA for now.
Up 2/10 is not
I think
a
it'll make it be
screaming
well.
market, but it's certainly not anything causing any
And
problems.
Fidelity is
So
still down.
I think, like I said, that quiet Russell having a nice day here is giving a little bit of comfort to the rest of the market. Subject to change without notice, Oliver. I just don't know if the Fed speakers, and like I said, we're going to get a lot of them. They're in Amelia Island right now. They'll be in Washington later
Upstart
in the week.
22%.
Let's see if they say anything new that causes. I think the meeting with the debt ceiling, that is also showing some good progress, not scaring anybody, really, as it shouldn't. But
Barbecue,
with
1755, 6.4%.
There's your bogey
It was a
today.
10,000
There's
share
your
order
variable,
that just bumped it up there.
this week, I think. So we sit, we watch, we monitor, and we wait for
That's
something
been a
to
market
happen.
order.
Retail sales tomorrow is supposed to be stronger than a month ago. Besides that, Oliver, we're getting into some slow sluggishness here. Home Depot tomorrow will be a fun one. And retail, Oliver. Retail is detail, as you know.
Yeah, a good call this morning, by the way, as you noticed the Russell seemed to be reflecting some regional bank strength. We're going to be talking with a small bank CEO, People's Bank. joining us here in the B block. All right, Renita, let's talk some stock news. One of the big stories today is Microsoft Activision, but that's not moving the needle so much. I think maybe what's more interesting actually is Western Digital and the renewed talks with Kyosho. Let's go there because we were kind of wondering where the story was going, and it's back.
It's back finally, right? I remember reporting on this, maybe it was the end of last year or early this year, but this story is back. Kyosho Holdings over in Japan talks about this merger with Western Digital. Western Digital shares were rising earlier today on this news, or they were, yes. And it was coming really as just this plunging market demand happens for AI or for, pardon me, chips. And for companies that produce some of them, it matters what type of chips you produce.
More shares at $17.49.
Maybe they have something to do with AI. Maybe they don't. Maybe someone can do that. However, Reuters is reporting that Kyosho would have a 43%
Intraday
stake.
still pretty nice moves here.
37% ownership in this, and together
Yeah,
they become more
8%
competitive
from the low to the high so far.
Competitors like
Kind of from the
Samsung.
high open is 15%.
And so the planned merger, however, would likely draw antitrust scrutiny just as other big mergers have been lately, and it could draw it in multiple countries, including the United States and China. And also worth noting that activist investor Elliott Management, who does own convertible preferred shares in Western Digital, ever since it purchased those shares, ever since it invested in this company, it's been trying to get the company to split its memory business with its hard drive business. So it's just an interesting part of the story as well. And it does by way of ownership, and Toshiba own part of the other company as well.
You know, the big rally here,
Barbecue, 1775.
The chips have seen a lot of separation.
Up 7.6%.
AI connected, or at least can pitch yourself as AI connected. The stocks have done very well in that category.
Well, my face still hasn't quite woken up yet, but it's on the bull flag.
Well, it's kind of the more traditional, cyclical,
Level moving averages, got a bullish MACD.
George Tillis calls them commoditized memory makers in the case of Western Digital. George, or rather Kevin, what do you think here? I mean, when you see this type of rally in stocks like this, is this just purely the market saying that you kind of have to grow by acquisition at this point, play a volume game, or can we read through this and maybe see something economically positive, or do you have to take those two things separate?
Well, I think, you know, companies trying to seeking out value, seeking out synergies that'll help their companies in a sector of the U.S. economy, Oliver, that it's been starved for good news other than NVIDIA and hope for the future in NVIDIA. I think this is just a sector that is really applauding good news. And Western Digital, not a very expensive stock, Oliver, right? A $3.70 move is 11%. That would be less than 1% in some of these other companies. So that's a really, you know, reasonably priced stock with a merger. It just looks like something that, you know, if you look at a chart of Western Digital, it's been higher than this lately. It's been in the 40s.
Sure.
So, you know, that's a pretty sharp recovery, maybe to just some increased level of value for this company. So, yeah, nice recovery, great day. You know, it's not even getting back to where it was in January and February of this year. So, yeah, it's great news if it makes these companies better. But I hate the fact that you're making money back. You're not making money.
You know, the thing is, any other day when you see Western Digital rallying 11%, it might be a very good reflection.
I'm rejecting this 412.81 again.
Economic understanding.
Zero MACD flipping bullish now in 5 minutes.
It seems like it's pretty deal specific. Right. Real fast though, because we are seeing a tech day winning again. Renita, wouldn't be without a big AI winner. So let's talk about it real quick, because we gotta, you know, ride the wave. What are we gonna do? Ignore the, you know, the hyperbole or the craziness, whatever it may be. We're gonna find out. AI, literally the ticker AI, C3 AI, has been one of the main recipients of this theme. and they gave us some numbers today.
And they've been working on AI for over a decade.
My fate is not
You
wake
know,
up.
they noted that earlier this year when that stock skyrocketed.
Barbecue,
similar
couple
to how it
transactions
did
lower.
today. But this company
172.
gave fourth quarter preliminary results that were better than expected and gave an outlook that exceeded analysts' expectations. That outlook actually exceeded its own expectations, and so that's why the company raised it. But the company is seeing just a huge amount of success. The consensus for full year 2023 revenue was at around 265.44 million, but C3AI raised its for fiscal year 23 revenue view to between 266.5 million and 266.8 million. They revised that upwards. Now, the company said
I
it
didn't even
closed
realize. I thought that was today.
major deals, 43 deals during the quarter, and it sees its new consumption-based pricing model as a success. And there were a lot of
Yeah,
people
why
who
is Webull
criticized
showing
the
two
company
different-
from switching over from a
weird.
subscription-based model, but you can see that it's actually worked out for it, so don't knock it until you try it, I guess.
Okay. Hey, living up to, I guess, some of the expectations and maybe even exceeding them. Catch is because of the massive amount of hype around this subject matter of AI, even after reporting numbers.
Mr. Deutschmark.
Expected,
I'm
shares at
still following it.
$24, they were at 35, and they're still
I
operating
don't
at a deep
hold anything
loss
right now on
for
it.
the year. So
Don't know.
we'll see when this story pays
Not because I
out.
think it fundamentally changed, though.
At the bottom line,
Fundamentals haven't changed at all.
time to wait. Thanks,
They've
man.
gotten better.
Thanks,
Cash
Ken.
flow
Appreciate
positive.
the thoughts, guys. All right, we got some interesting stories here this afternoon. Let's
Profitable
continue the
last quarter.
conversation about the big picture, though, as well, keeping the Fed in the back of our mind, and maybe even the debt ceiling, too.
Oh,
James
yeah,
St.
looks good.
Domingue joins us.
Charts look
I know
nice.
it's Sierra Mutual Funds.
Not sure if we're going
James,
to
what's
see a big
top
fall
of
to
your
move on,
list
though,
right
anymore like we
now
used
to
to.
watch in a market that has been pretty much pinned now sideways, with the exception of a couple tech giants?
Good afternoon, Oliver. Thanks for having me back on the program. So I guess you got to start with the debt ceiling, right?
I mean, I'd been scaling out and trading it.
Going to remain an overhang on financial
I was always trading the
markets,
options on it.
throughout most of the summer.
And with my shares, I was doing covered calls, some.
Deadline
And
was
then
something
I
that,
kind of started swing
was
trading the
very
shares.
conservative and sort of, the secondary
And then I got out.
elements to incentivize
Once the options got so
negotiations.
cheap,
The
I got out
reality
and
is
started
that we will get
trading
some
options
tax
on it
receipts
instead.
in the second week of
Because
June
the IV
from
came down so
quarterly
much on the
payments
options
that
that
could extend that
it didn't really make
out
sense to sell
into
cover calls on it
early,
anymore. And
late
I'd rather have
July
the
or even
leverage with
early
options
August.
since they were cheap. So I
We
started
also
doing
have a
that.
short-term increase that could happen to sort of give more time for negotiations. But these sort of kick the can solutions aren't necessarily the best outcome, right? They will be sort of this lingering concern that the market has that I think will limit the upside of the equity market until that gets resolved. I think, of course, the best result would be a grand bargain this week or something in the very near future, but that seems very, very unlikely, if not impossible right now. So, obviously the full-on stalemate leading to a default, whether that's in early June or maybe later in the summer, is going to have the most devastating consequence with unknown proportions. And so we hope for the compromise, but the clear issue right now is the political polarization in Washington, and this fragmented majority in the House is going to really hold things up and increase the concern as we get closer to that X date. So, anything short of a sort of a timely grand bargain is kind of is really, in our view, a self-inflicted pain on the economy and the fragile state of markets.
If we do push this thing,
Not sure. It's maybe a question for Google QZ.
Here, as we did in 2011, kind of the most extreme example that I went back just to double check.
It's probably
and
similar.
Indeed, treasuries were the play.
If that's what it is
and
on
so what a
Thinkorswim.
stroke of irony, I suppose. People piled into bonds as we ran up against the debt ceiling.
Or you could
Has anything
always just
changed
chat
since
with
then,
JC
or
Trade.
Will
Ask
that
them.
be a play again if this does drag on?
Well, we don't have a lot of examples to go on other than 2011 in
Yeah.
terms of getting that close to the deadline. But it does feel like the natural move is, and we're seeing this longer-term treasuries, the dollar being still the safe haven, even though, like you said, ironically, that's where the default is coming into play. So you wouldn't necessarily intuitively think that would be the safe haven, but it is. And the reason that happens is because they would assume that any default would be relatively short-term in nature and not affect the longer-term end of the curve as much, maybe a delayed coupon payment. But what it would also ultimately do is create some really catastrophic or significant recessionary pressure. And so that safe haven would still be a safe haven with lacking any really reasonable alternative.
The dollar right now is kind of firming up, also seems to be a little bit counterintuitive based on the debt ceiling issue being one of the things we're dealing with. Does that suggest the market doesn't think that this is going to become a problem? We've got volatility pretty low. We've got the 10-year yield basically in the same place it's been for weeks. Is that the market telling us that we're going to breeze through this thing again?
I wouldn't say we're going to breeze through it. I think it's saying that we want to hedge ourselves, and the way we're going to hedge ourselves right now is by finding safe haven in longer-term treasuries in the dollar, because if we do have a technical default, that has knock-on consequences for the economy and the global economy. And we haven't really tested it to go beyond the X date. You mentioned 2011. We were within 72 hours of reaching the X date before a bargain was reached between Republicans and Democrats to lift the ceiling.
There you go.
So
there you go, LMFA. That's it.
Line, I would
Wake
say
up.
I expect more
Wake up.
money to
Wake
flow
up.
into
Wake up.
U.S. dollar assets, again, counterintuitively, in terms of longer-term treasuries and the U.S. dollar. Now, what we are seeing,
this
of course,
lovely
is
power hour.
you are seeing some interesting behavior, not unusual behavior, but interesting behavior in terms of the T-bill market, where T-bills around the expected
almighty
exit date, which again is being thrown out as June
Ripper
1st
drop.
right now, are offering the highest yields, assuming that everybody
Maybe
would
rip.
want to avoid those maturities that will likely be delayed if we do reach that X date. And remember, T-bills don't pay interest; they really mature at par, and they're trading at a discount. So I think that would be one of the factors that we're seeing some disruption, some sort of more intuitive behavior in the Treasury market right now.
Okay. Well said. James, more broadly speaking, looking past hopefully this debacle we avoid, what then will be the determining factor for if the stock market can get back to COVID highs?
Well, I think we've got a recessionary, regardless of the whole debt ceiling debacle.
Oh, it's up 12%. This thing just started rallying.
Questions on the horizon. And I call it the trifecta of recessionary forces that are upon us
Maybe
today.
some insiders buying or something.
Borrowing cost, tighter lending standards, as well as what I would call a deterioration of consumer balance sheets. Now, we had a lot of pent-up savings from stimulus. Those are starting to be spent down. They're still pretty decently high, so I think that explains why
might see a little pump
we
at
haven't
close.
seen more recessionary signals yet. But
You
we
like
do
them
have
T-bills?
also student loan forbearance coming into
Very
an
good.
end in September.
Good
That
safe
will
spot.
put a drag on the
Parks for a
consumer.
while.
So if you think about those forces together, now we know Fed funds is up from 0 to over 5% in just over a year here. But also, if
What's the
you
return
consider
you're getting on
the
yours,
balance
Dink?
sheet, now the balance sheet runoff is probably adding another 1% to that Fed funds rate. So we're probably looking. The Fed does this work themselves. It's on the San Francisco Fed's website, and you can see that that's a level that we haven't seen since early 2000s. And so I think in order to get the markets going again, to break through that prior high that we had in August, we're going to need to see some clarity in terms of how the economy is unfolding, how the economy is weathering these conditions. And I think obviously we've got a very difficult,
potentially very undervalued.
number from the New York Fed's
Very undervalued if you get a buyer
this morning.
for
It
it.
feels like we're in the middle of a manufacturing recession right now, and the question I
4.8.
think on the rest of the market's mind is, will this spill over into services, which is a big portion of course, the economy. And as you were talking with your guests earlier,
You get like 5.5
retail
just
sales
in
are certainly going to be a big number tomorrow to watch. I
money
think
market
it'll be,
funds.
Another data point to
Like
get
over
an idea of
5?
which way we're headed right now.
Great stuff.
Fidelity
Appreciate
and-
the thoughts, James. Very coherent and good framework for us to work off that could last a good bit here once we get through the debt ceiling. Then thinking about that transition of
Maybe not money market
recessionary
funds. Yeah, I think that's what it is.
CIO, Sierra Mutual Funds. Nice start to our macro conversation for the afternoon. Let's talk some banks when we come back. We've got the CEO joining us from People's Bank at the NASDAQ, where they're ringing the closing bell right after going through a deal. Some on-the-ground reporting here coming up next from
$1?
the regional banks in America.
Yeah, $1 will probably be a resistance for sure. Yeah, that'll be a pretty strong resistance. I would assume so. Barbecue waking up. LMFA too at the exact same time. Oh, LMFA. Yeah, that's a good point. It's looking like it, but I'm thinking it wants to make a move back to VWAP. Because I'm stubborn and I've seen charts like this and they almost always move back to VWAP, especially given a little end of day rally. But yes, the dollar has been proving as a natural resistance. Don't trust him. Alright, fair enough. There's 1019, there we go. I love this stock. I like it on OTC. This has been my favorite. Come on. Don't do it. There you go. VWAP's moving down with this volume coming in. Dang. Little double top, definitely to break that. Maybe it'll blow past VWAP. I don't know, this might have a continuation. I mean, today was the earnings. It's basically sold off from the gap up, but fell to a higher level than the gap fill. It's kind of held this resistance back here. Not to say I'm going to hold it overnight, but there it is. $1.03. Barbecue, a couple transactions lower, 172. $1.02. Sure, I mean, yeah, I guess if you're putting in more than $250,000, I'd be pretty comfortable with FDIC limits. Oh, if we default, that's a good point. That's definitely... if we default, will your T-bills even pay out? You'd be safe with those? Well, I don't think it's impossible.
That banks have been whirling about investors. We're trying to figure out what's going on. It seems like for the most part, the banks that have been at risk have high levels of uninsured deposits or a very high level of hold-to-maturity securities relative to their capital. So can you tell us about those two parts of your business?
There you go, LMFA.
Uninsured deposits and your hold-to-maturity securities?
Well, we only have 31%, 32% of our deposits are above the FDIC maturity
worth it.
Insurance
nice insurance.
level. Okay. And we pledge assets against those, and if you take that into account, we're down to
Just keep raising it until they don't.
What I will say about the capital in the held to maturity, if you hit us for held for sale and held for maturity both, we are still above well capitalized. So we're strong. And, you know, this is a little bit of a storm, but our customers have stayed steady. Our deposit costs, you know, we started the year 48% of our deposits are in DDA. So we have a good, strong, stable customer base. Our average account size is small. And our margin is 453. Our margin went up in the first quarter. That's one of the best margins in the country.
24 on AI. I think it just kept going.
Are you seeing any shift over in your deposit base to money market funds, to higher yielding assets? How do you prevent that, or do you want to?
Well, no, we want to help the customer wherever they want to go. And we do see customers putting money into high-rate CDs, which makes a lot of sense for many of our customers. You know, so that's fine.
Chuck, the one thing that really stood out to me is the fact that you did a deal in the midst of this just earlier this month, announcing the integration of Limestone. That's the Kentucky business. I also saw that in your earnings at the end of last month, you declared the dividend. So it seems like you're going a ways here to demonstrate the stability of the business. What does the M&A do for your business?
Well, I will say the board and management has a lot of confidence in what it is that we're doing. We're very optimistic about our ability to grow our earnings, and we've consistently beat street estimates for many quarters now. Limestone will help us greatly in Louisville and Lexington, which are growth markets. And I heard your previous speaker talking about manufacturer recession. I would just say that in Ohio, West Virginia, Kentucky, they've won so many billion-dollar investments, whether it's
Exchange is getting better for you, huh?
whether it's Intel.
In Mexico?
We see a lot of capital, and yes, the higher interest rates are going to cause a slowdown in the economy, but right now things are looking good.
What are the main priorities after the Limestone deal, and walk us through kind of the logic for that, if you don't mind?
The logic for the Limestone deal?
Yes, sir.
We saw Kentucky as a great market.
Charles market
We've been
closed?
talking
What do you
publicly
mean?
about wanting to get into Louisville and Lexington and related markets
Right.
for several years. We bought
Upstart
a bank that is
24.
focused on CRE with great credit
Look at it
discipline,
go.
and we've been able to buy these types of banks and add a C&I focus.
Hmm.
We are balanced between
1770,
C&I
some
and CRE,
transactions
and
up
we're
there
gonna
on
be able to
barbecue.
introduce insurance and investments to
LMFA.
their customers. And we
Dollar
know
three.
just from the history, we've done 10 deals in the last 10 years. We know from history that we'll have good cross-sell relatively quickly.
To that point, just real fast on the commercial real estate side, a lot of folks are worried that this is going to be the next shoe to drop in the economy. Do you see that risk, or is that going to be limited to certain specific areas?
I think it's really more, I think the risk is mainly in office space, and I think it's really in office space, in the coast, for instance, office vacancies nationally are 20%. In the Midwest, where we're focused on office, it's only 10%. And office is only 1.9% of our portfolio, so it's a really small piece of what it is that we do.
FFIE up
And if you look at our
11%.
top 10 biggest exposures to office, they have a huge amount of liquidity, so we're very comfortable and confident that we will
SMX
weather
made a
any
wick down to
storm in
VWAP.
office.
Okay, Chuck, thanks a lot for the discussion, and hopefully you'll keep in touch
GME
with
up
us.
3.7 still.
Thank you for the opportunity.
Absolutely. Sure thing. Chuck Sulerzyski joining us from People's Bank President and CEO, set to ring the bell at the NASDAQ in 30 minutes. Right now, we got some options to trade, though. Tom's coming back to us to look at Upstart. Speaking of the lending business and a one-time bank disruptor, been a pretty rough chart, but we are getting.
When the heck is Fidelity coming back? Preferably before market close. Yeah, it's down. Fidelity's down in different areas. Website, login, all sorts of stuff. Yeah, Fidelity. I've not had issues like this before with them. This is the longest I've ever had a brokerage that's actually been down. And I've used basically all of them, including Robinhood, Webull. I mean, it's down bad. It's a 403 error on their website. It's pretty bad. Yeah, barbecue's nice. Nice step up from yesterday's VWAP level, really. Like Friday here and now we're here. Nice little stepping stone. Tomorrow at open, the first hour, we might get a bullish MACD crossover. Little cup maybe forming here. Look at all the bullish stuff. Inverted head and shoulders. Robin is great. You pay quite a bit for the payment for order flow and the slippage. But if you're doing large transactions, larger account, doesn't really matter. If you're skimming for pennies, it'll catch up to you. It's maybe good for a long-term hold. Nice, pretty UI. Now we're getting RSI divergence on LMFA. Put a stop loss on it, or stop profit, whatever. Probably get filled if we get a move down, but stop limit on quote. I don't like the RSI divergence. Price action still looks bullish on it, but yeah, broke the $1. Oh, show. I'm trying to find its support. About to get stopped out. It's probably gonna just wick down there, stop me out. I was a little quicker on my entry, would have at least been a better trade. It does make the view up, which, yeah, I was kind of expecting to do it quicker than this. Oh, it didn't trigger, just gapped. That is the risk with the stop limits. Here's missing a 0. Yeah, something less liquid like this makes sense or gap. Unless I didn't set it up right. Actually not done it on the stock, just on futures. I think it's a stop limit on quote is what I'm looking for. And we're back up. Oh.
which I think is generally, been the case for Disney. Frankly, it kind of does this. It moves down, it consolidates, and it moves down lower.
Yeah.
And $84 being the low from last year, late last year. Pretty much giving it all back.
Market order.
How about your last trade here? You got a trade.
There it is. There's the RSI divergence.
Some positioning ahead of those Home Depot earnings that we have.
What would that be? Stop limit on quote?
Lowe's doesn't
stop
report
on
until
quote.
next
Tuesday.
Stop
market order.
And we saw some short-term put action in here also ahead of the Home Depot.
Oh yeah,
earnings.
that's a stop.
Evercore ISI came out with a note last week, initiated negative tactical trading call on Lowe's. We had like Folio kind of go over Home Depot today, and they're saying deterioration across multi-segments of their business. The only thing that's doing relatively well is some of their pro business. Now, Lowe's only gets about 20-25% of their business from their pro contractor services. Home Depot is the behemoth in that segment, but there's higher margins in that segment also. So I think somebody was positioning for maybe a worse than expected report out of Lowe's. Now, so far this year, Lowe's has outperformed. It's up about, what, 1% on the year.
I don't know.
Home Depot is down about 8%.
I don't know why they would do that.
On the year, and they've got earnings, but this is a prior or
you have to ask them on
earnings type of play that this trader was putting on. The May 200
why you do that to
puts
me?
that expire this Friday. They bought over 3,000 of those. Debit of 316, so that break even just under $197. That's about 2% below the current share price in there. And Home Depot,
my hand. I'm in it now.
They've had their guidance and EPS estimates and revenue
back up. Let's go.
Get cut by about 20 to 25%
more of the RSI divergence.
the last 6 weeks as they've seen a deterioration in the business. I think one of the key things is going to be because of the bad weather that we had in the spring planting season. It's typically a pretty robust cycle or seasonality for Home Depot and Lowe's in the spring. But now no houses are selling either, Oliver, because nobody wants to move at this point. So it's going to be interesting to see what Home Depot says, but this trader is taking the
I don't know how liquid the stock is, because you don't always want to be doing market orders.
If Home Depot gets hit after earnings, Lowe's is definitely going to follow it. They've got that duopoly in the home improvement retailer business.
Okay. All right. Fading it, ahead of Home Depot. There was a time
Spreads
there
on here
where
are pretty tight,
Lowe's
though.
had the market share story. They're going to take market share. And I think to some degree that, did pan out. They kind of put a little bit of, put into the stock to some degree. But
24% on AI.
Kind of been drifting higher. Lowe's arguably a little better technically, though. So,
yeah, it has
interesting
been.
to see the fade ahead of the report. All right, thanks, Tom, for the trades. Okay, bullish on Upstart and cautious elsewhere. When we come back, let's get an update on Shake Shack and the activist investor. Daniel will take us through it. Then we'll trade some commodities, maybe some of the agricultural stuff that goes in to making you your Shack burger.
Just buy up to the last 15 minutes. Dump into close. Wolfing candle at a resistance. Let's see. I just bought AI. This thing just continued to grind up all day. GME.
After activist investor Engage Capital announced planning a proxy fight for 3 of Shake Shack's board seats. Now, Engage Capital did buy about a 6.6% stake in Shake Shack, which includes its swaps. And they've been in talks with Shake Shack's management for over 6 months, but have failed really to come to an agreement per reports we've gotten from Wall Street Journal. So they did say that they sent a letter to the company's board detailing their proposal for new directors and other changes to help boost the restaurant chain's lagging stock price. But interesting enough, on a year-to-date basis, I know that it's all relative, but shares of Shake Shack are up over 70% since the start of 2023. So
man, second day in a row where the gap fill was the best buy of the day on barbecue.
From our yearly
That's kind of crazy.
So all in all, this isn't a name that's necessarily suffering.
It's a fancy Shake Shack. Look at that thing.
But a spokesperson for Shake Shack did say they are executing their strategic plan and making substantial operational and financial progress, and they are well positioned to continue enhancing their value to shareholders. But Engage founder and CEO said that so far they've really seen a lot of reluctancy from Shake Shack to make any sort of commitment to a time frame for regaining some of their lost profitability. They said that in order for the company to reach its full growth potential and profitability scale across its brands in the U.S., they do believe that significant adjustments are necessary for the company's real estate strategy, store design, labor planning, and supply chain framework. So they do still see some holes in the company, but like I said, this name has really been on a tear and has seen such continued strength after its first quarter report. I mean, it's up 29% for the month so far. Wow. So interesting timing of this to just say this is a company that they see so many holes in, just given the fact that in the restaurant space, it's a significant outperformer.
Yeah, I didn't realize how far it had come off those lows from last summer. Though I will say I've been kind of surprised that in the conversation about fast casual threading this kind of inflationary price needle, that Shake Shack didn't get, I don't think, enough mention, next to the likes of Chipotle and some of the outright fast food chains, because it seems like it's Chipotle with burgers. The model is,
I feel like scale though, like Shake Shack to me is just a much smaller company than Chipotle.
Sure.
So I feel like that is also to be considered. Although Chipotle is expensive. I went for the first time in months the other day, and I was surprised at how much more costly it has gotten.
Yeah, indeed. Okay, that's the inflation, and you might be getting too much guac. So
no way, no guac. I don't pay extra for guac. I don't believe in that.
All right, thanks, Jenny. Okay. All right, when we come back, actually, let's talk some commodities right now. Chris Robinson's with us. Chris, what's your order at Shake Shack?
New high there, LMFA, 104.
In the last year, so I was just looking at, for giggles, I just looked at milk.
Oh.
Milk in 2020, and
Are you gonna stop?
We were at 15-year lows.
Are you gonna go?
We're dumping milk down.
Where are you gonna go?
Right?
Cotton Eye Joe.
You can't dump crude oil down the drain, right? So that's why crude went negative. But a year ago this summer, we were at all-time highs. Milk had doubled in price. Now here we are right now. We've given back a huge chunk of that. So a big reset. Same thing in all the grains. Corn in the last year is down over $1. Soybeans down over $2 in the last year. Wheat down $4. So we had that tremendous blow up with the kind of the reset after and during
ABC
COVID,
bought more?
People couldn't get enough commodities.
Good for him, man.
And now they're heading.
He's either gonna.
So now we're getting back to creating supply and demand. So I think this is a pretty good leading indicator. And a lot of
hopefully he remembers how much emotional pain this caused if it does work out for him.
French fries.
Or he doesn't go for this stuff again.
I haven't gone to McDonald's in a long time.
So you're not a Shake Shack guy.
This will be the exception if it works.
You're a Mickey D's guy. You're old school.
That's right, old school.
Hey, when we look at the fact that, broadly speaking, most of this asset class is under pressure, I mean, does that inform the recession?
All right, 10 minutes. Let's see what happens
to a
here.
degree that people don't appreciate?
LMFA really just fighting for that VWAP. Not getting it there easy. Just
where it is,
struggle.
That may be, this first recession we've had where we don't have horrendous unemployment, right? We keep waiting for that shoe to drop, but it hasn't happened. So, could the Fed skate away and get a pullback in inflation? It's starting to look that way. Again, these are indicators that usually take a while to go through. Look at lumber. I mean, I was buying some fence during the pandemic, that has collapsed as well. Everything's come back. Natural gas. So all these commodities, if they are indicators, leading indicators, they're coming back. And honestly, I don't think it has anything to do with what anybody has done in Washington, D.C. I think it's more supply and demand. And our old friend Adam Smith, the invisible hand. It's very painful when things get out of whack, but they can correct quickly as well. And you're starting to see that. Again, we just had a big WASD, right? We've got a
what'd you make of that?
We've got increase in supplies of corn and beans worldwide, a little bit of a decrease in wheat. So you're seeing that as an opportunity. And so prices will reset. Farmers were given a gift. They had, record highs a couple years ago. We had corn at $8. Corn's, been at $8 for about 30 minutes its entire life, and we were back there again. And as is typical, a lot of farmers didn't hedge it, and now we're sitting, dancing in $5.
Getting another RSI divergence. I don't know if I want to try and hold for a third one.
Good news is,
yeah, we need this 5-minute candle to move up.
bad news is if people
Rid of that divergence.
Didn't hedge, they left some revenue on the table. The only commodities that have really been on a continued tear are cattle. Cattle is, again, why? Because the supply is tight. And, cattle, live cattle are at all-time highs or right around all-time highs. So that may be something that would slow down Shake Shack because the price of beef is still high.
I can hold this into the extended hours, but I don't think I want to hold it overnight.
Attention to what's going in the ground here in the
I mean, I got a
Midwest.
big
Give us
position
quick
on
thought, about 30
LMFA,
seconds
just
here,
planning on
Chris,
day
on
trading
how
it,
these
so
prices might affect what's planted.
we'll scalp 10%.
The planning decisions are done. I think most people look at soybeans, even today we're at lower levels, we're at $12.50. $12.50 is still very expensive beans, so they plant a lot of beans. Down south, where they may have a chance to make it, they'll plant a little bit later. They may plant some more beans, and they may plant less cotton. That's always a decision that
7.5%.
That part of the world, cotton versus soybeans.
Yeah, we had a couple transactions for 1774,
and what you have to worry about, and where you
1777.
flush is anybody
Yeah, I'm
that
seeing
locked
a
in
10
their
sales.
inputs a year ago because they were scared.
I had the candles 1774, but
and all that stuff was through the roof.
see 177. Oh, I guess it's not showing the fourth.
Prices by selling the grain when it was high, their balance sheet may be out of whack. So 6 months from now,
SPY doing the 10 minutes of Fugazi.
Unfortunately, got caught
Very
the
mellow.
wrong way. Hopefully that does not happen. But at the end of the day, supply and demand always wins. It doesn't matter who the politician is, if he's a communist.
It's
or a
probably going to come
capitalist,
down. Yeah, I'm going to take some shorts on the SPY. Got an engulfing candle there in the 5-minute.
All right, thanks for thoughts, Chris. I appreciate it. Always like
Might make a
little
move back to
chat here
VWAP.
about what's growing in the Midwest and this fade that has been pretty consistent across commodity prices. All right, let's get our Schwab team in and take us to the bell when we come back. Stick around here. Equities bid into the close.
No, I'm not going to do that. You almost had me, SPY. You almost had me trading you again. You almost got me. Come on, LMFA. It's like you're supposed to go to VWAP before the bell. Yeah, I told him. I I was trying to short it. Yeah, when we were up here, I was trying to short it. It would have been a perfect short. We're up here, rejected there, and built that head and shoulders and that bear flag. Then that gap fill down here. It wouldn't let me short. I don't think retail can really short OTC stocks. Yeah, he told everyone in chat to call me a shill or something. I don't even know what happened. I couldn't even hear what was going on, but everyone just started booing or something. Apparently, even you guys were in the chat typing out shill and shill. I was like, what? I didn't know what was going on. I was like, great. Shills make money, I guess. filthy money making shill. That's what I'm here for, man. Imagine the hate. Which is just so retarded. Like, just the idea that would draw any hate. This new age of retail, making it a team sport, is so ill-gotten. There you go, LMFA, coming up to VWAP. My allegiance is to profits. I pledge allegiance to my profits and to no other retail investor. I've been on with BP a few times. All right, coming into 5 minutes. What do you got, LMFA? Barbecue didn't really make a little pop. I mean, looks good though. Above VWAP, I like it for tomorrow. I think we'll probably see something similar tomorrow. Hopefully with the higher VWAP level. Above maybe that 1790 would be nice. There you go. There you go, LMFA. Just patience is a virtue. Good thing I suck at stop losses, because I probably would have been stopped out. Did a stop on market. It's like a price action, I want to believe it, but I also have indicators for a reason, and price action should be king though. Really need it. I need to weight heavier at times. Can go either way though. Sometimes you see those RSI divergences, price action solid, and that divergence is what wins and it dumps. Noise. I picked up 4,500 shares of that one. Again, I was just planning on day trading it. We'll see what happens tomorrow with it. I mean, anything could happen. I'll probably be bummed tomorrow when it gaps up 100%, but well. $1.70. Might even rally this into extended hours. I mean, probably get a little sell-off into extended hours initially, but then you might get a continuation. I'll put my order to get out of this thing. I'm just being greedy on it. Two minutes. Barbecue. Kind of near the high. I mean, not like where we opened, but looking good. No, BBBY is doing good stuff. This is good for barbecue. After 20% sell off on Friday, fill a gap and then bounce, and then for Monday already to be green, 4%, confirming that was just a gap fill. It's already reversing the trend that was set on Friday. It already started reversing it on Friday, and now it's just continuing on Monday. So momentum is up. I like it.
The ego on you.
The ego on you. Thanks, Ace Ventura. Appreciate the membership. You're welcome, Granite. You'd be thankful to Papa Ace. Explain to them that you like money. That might be hard to explain to them. I'm riding to extended hours. Here we go.
The ego on you.
Wait, can I not do extended hours? What's going on here? On the court. What? Do I not have the option to extended hours until extended hours actually opens? Oh, look at that candle down. Holy crap. profit taking, but the people front ran that VWAP sell. I think I have to wait till extended hours to change it to extended hours. Here's your bell. Yeah, there's extended hours. See if we get a pump up there. Sorry for the bell, guys. Alright, I jumped out of it. I don't think we're gonna get it. I don't want to watch it. Took my profits. It was small. Would have been better up here. Well. Unbridled optimism. Yeah, totally. That's funny. That's a great way to say it.
There's at least 10 officials on the docket to speak this week.
Or equals legal, no
Powell
business negative
speaking on
shorting
Friday.
that.
Today we got a little
Right.
something for everyone. We got sort of a dovish comment, and we got two that leaned a bit hawkish, but one was kind of in the middle. What we're looking for are comments from officials, and specifically Powell, about what to expect next, because at the last meeting there
Versus
was
that balance.
a hike and an indication of pause. The door for another hike is still open, so we're going to see how open that door is.
All right, well said.
Yeah,
Thanks, gentlemen.
yeah, tasty.
Good stuff. Appreciate it very much.
You do you, man.
Colin
Ace, Ace on DRS. It can be done. It can break ties.
Today here, Nasdaq up about 0.5%. Russell with a good day. Regional banks to thank there. And the S&P coming along for the ride.
Should have front ran the VWAP like all these other traders. Well, this thing might do well tomorrow. We'll see. Nice little cup there. GME closed. Dude, look at that bull flag on GME. Glorious.
A little preview into some
hourly bull flag with a breakout. I want to believe GME is about to have a big day. It might actually. Us getting a rally into OPEX though, is that like... When's the last time that's happened? I should have got some calls before close. That candle's so bullish. Engulfing and just perfect bull flag. It's not like it's gonna have a gap up. I can get them in the morning. There's news, I suppose. Spy, look how flat that is into close. Little pump of volume. I don't know if it. This is a really nice setup for more of a rally on GME though. So we're coming into SLD though. I think we'll sell off Wednesday, Thursday, Friday like normal. Probably. But sometimes GME has rallied into OPEX. I don't know. Back here when it flipped the reverse, I've been calling a rally for this month. It's happening, but it's not like it's not what I was hoping for so far. It's weird how just a 4.5% candle looks so large when it's full, and all your other candles have been so small lately. Barbecue 4%. That's like one tick. Okay, well, yeah, I'm probably not gonna do a recap video today. Ace Prez. Thanks, Tasty. Thanks, Granite. Thanks, Christopher. Let's squeeze in the coming month. I haven't seen any squeeze behavior in AMC for GME rather for a while. Or AMC. GME is going up, and you're retarded both. You too, trader. Thanks, Trays. Thanks, Christopher. Thanks, TJ. Thanks for your gifted memberships today, Ace. Appreciate the generosity, man, the support. And thank you guys for your likes. 51 likes, you did it. Thanks, Just Jay from the Bay, pushing those likes, doing it. Push them, pump them. Our Discord is pinned in chat. If you guys want to jump on there, it's free to join. Also, we have a Discord or Twitter at HappyMoneyYT, where I try and do Twitter Spaces and usually just fail. No, it works sometimes, but follow us on there. Sub up, like up, comment down. Happy Money sticks around. Oh, is PV show tonight? Maybe. I mean, he's usually pretty late. I don't. Yeah, we'll see. I'm usually busy. Sometimes I can listen, but yeah. Team Osmus, thanks, man. Granite does exist. They do exist. Thanks, Crumpkin. Yeah, GME looks bullish, guys. Like, I don't know what to say. It's for shares. It's a nice grind up. Like this, a pretty nice percentage move. 20%. Taking time, but it looks like it could keep going. $24 maybe. Might be the top. If it's not like a squeeze, like a cycle pinch type thing. It's this slow momentum that we kind of had. But I don't know. Let's see, volume today. Volume's a little better, I think. Yeah, increased volume today. Barbecue looking good. I'm liking it. Scary sometimes, but I'm getting more comfortable with it, how it trades on here, and yeah, it's oddly natural how it trades, and that is very refreshing. We have a little resistance up here, but I feel like it might gap above it tomorrow. Resistance, I would say, is kind of in this range, 1790 to like 18, up in this area. From there and back here in this area. So I feel like we might get a gap up there tomorrow. Might get a gap fill, or probably retrace to the support. This gap is fake. This was intraday. Yeah, it's looking bullish. I should probably sell tomorrow and keep kind of trading it. Today, selling the morning. Of course, it's hindsight, but selling in the morning would have been great. And buying on the gap fill, literally like this gap fill on Friday that we were seeing, great pickup. Literally the low of the day, and then this gap fill today was great pickup. Yeah, I'm trying to suck the life out of this thing on the way up, in case someday it just stops, it goes down, and then I'm actually out the mount. I'm out on it. I haven't made anything back. Did go on the futures today. Feels good. Helps having that gas, having something else to trade on there. I think we're up like $1,000 on those contracts. Gave a little bit back, and then I was at stop. Fidelity's still down, so that's cool. And yeah, so here's this account that has 40K shares. Those are the ones I picked up on Friday, and then on this one, 20,000. Then I tried to pick up another 10,000, and it only filled me for 11. Not as good of a price. Gotta just start going for those gap fills. Usually that's not like quite how I'm trying to trade, but it's seemingly good. Adios, Christine. Thanks for the support. Tupperware, I mean, fundamentally it seems really sketchy, but I don't know enough about it. So, barbecue is extremely sketchy too, but I know enough about it to be more comfortable in it. This one I don't know enough about to be comfortable in it. I know they're talking about delisting and bankruptcy, so the chart does not look bullish. Yeah, it's sketchy. Yeah, I'm not messing with it. I don't know if they've had any updated news. No. Okay, thanks guys. Thanks so much for your support. Appreciate it. We'll see you on Discord. See you on Twitter. See you at the barbecue.